All right, good morning, everybody. Welcome to another morning of BluSky TV. My name is Justin. I am here with Coach Becky.
Morning. What's up, guys?
Becky, how you doing today?
Good. Yeah, I'm trying to still wake up a little bit, but I'm very curious to see what's going to happen today. Dang, what a setup! Like with that massive engulfing liquidation on Friday, and now overnight we've just been kind of reclaiming it, slow and steady climbing up. So it's going to be an interesting day for sure.
Yeah, yeah. Once I logged on the chart this morning, I was like, wow, we're looking really pumpy. And then you know what? We pumped for the last couple hours. So I'm very curious if we're going to continue this move and just like literally erase the whole sell-off from Friday.
Wow.
It would be pretty crazy, but I've seen crazier things in the market. So
Mhm.
I'm
Yeah.
very curious. So I'll go over my NQ levels. Becky can go over ES levels after that. So for me, I personally, I'm very bullish right now because this price action is incredibly bullish. I'd love to see a pullback to the 250 area, but that is about 300 points away from where we're at. So I don't really see that happening. I'm very curious if we can hold this level that was the continued sell from Friday, which would be around 475. So I'm personally looking for a 475 retest to go long, and then I'd be looking for a run up all the way to about 800, which sounds crazy, but we sold off, what was it, 1,600 points on Friday. So I'm not putting anything against the market right now.
Mhm.
So that's what I'm looking at for the NQ. Before the market opens in a couple of minutes, do you want to go over your ES levels?
Yeah, definitely. I also am looking for similar. So we've been reclaiming on ES as well. Pretty similar pattern there too. And so we are inside, squarely inside of Friday's value area. And so we're in kind of a resistance area for ES, a little bit weaker inside of that drop, and then it settled for a minute and then it dropped farther. So that is a key area that I want to see if the bears can defend there and push it back down again for the retest. And if we do that, then I want to see a retest down to 74.31 is a key area. Anywhere from 74.31 to 74.19. That whole area I think could hold up as support. But I do think that we could see a little bit of some bearish action at open to take back some of this climb overnight. And then I want to see where it holds at for potential long opportunity in the support areas. But again, two of these ranges are huge, like outsized from what we're normally talking about, especially at open. And so it's going to be, a little bit of movement here, I think.
Yeah, especially being a Monday after that ridiculous move. I'm expecting some fugazi this morning. That's all. That's what I'll kind of say. Like I'm expecting
Mhm.
some back and forth action, things like that. I was actually looking at the Globex Open last night, and
Mhm.
I was with a friend, and we were both just like, "Should we just go long?" But we were out and about, and we were doing things, so we didn't. But it
Oh,
was so clean the little run up last night.
yeah.
Did you look at the charts at all last night?
Oh, of course. Yeah, it was very interesting. I was as well. Like I bet it's going to push up overnight. We see that so often when we see a big flush on Friday. A lot of times the move is counter on Sunday and into Monday as well. So
Yep, yep, absolutely. And it looks like, I mean,
open.
about what 8 p.m. Eastern, just a 9 6 400 point melt up to the upside. Okay,
Yeah,
so if you traded the Asia session last night, you should not be on charts today. I'll tell you that right now.
yeah, I
All
have
right, the
no.
market did just open. We had a pullback into this kind of demand zone, which we expected. Now I'm curious if we can break this pre-market high. If we break this, there's no reason we're not just going to continue running up.
Yeah.
No reason why we should in my mind. I would have loved to seen a pullback to the 475 area. That would have been a much cleaner retest to me, but this is textbook what it should be doing. So hopefully we get some clean price action today, guys. We'll see.
Yeah, I agree. I hesitant to go to join the bulls right away first thing this morning because just it ran up overnight, but Friday was so strong for the Bears. So I would love a pullback here too. And NQ gave a little bit, yes, it's just pushing. So then we had to give her a few minutes to see if these bulls can maintain, and that would give us a structure. But I'm still looking for a pullback here. We'll see.
Yeah, and just looking at the structure from Friday at around, let's call it 1:30, 2 o'clock Eastern, this is the area it should pull back into, the 475 to 450 area on the Q.
Hmm.
I'm assuming ES has a similar structure.
Yes.
Actually, a little bit weaker, it looks like on ES. Would it be about right here, actually? Like right where it's
Yeah,
at.
we're in it. We're in the area right now.
5 level, maybe? Something
Yeah.
like that. 55 to 60 level on ES would make sense.
Yeah.
Yeah, this is a textbook like recovery pattern too. So I would not be surprised if we ran on ES all the way up to this 514-ish level.
Yeah, 514 is my target as well to the upside here. I think that there could be resistance at 507, but 507 to 514 is definitely a high target today for ES.
Okay, so I think we're on the same page. I'm kind of looking for a deeper pullback to go long, and if we do break that area, then it's just full bear menu today, I would think. But I would be very surprised today if the Bears just sent it again. I don't know. What do you think? I know you're a perma bear, so
I am, and I love catching those. But I also would be surprised. I feel like after we have these massive days that are a huge range, the market needs a minute of rest and digestion and a little bit of counterplay to see if what the other team has. And so another liquidation day would be surprising for me as well. I'm thinking like it's a bull climb, or we get a little bit of rotation and we ping off of the supports and resistances that were created.
It was funny. I streamed Friday morning, and what was the long or the short I took? There's a 675 short, and as soon as I got off at 11:30 Eastern, I got stopped out by 1 point, and then it continued to dump another 450, 500 points. I caught a little short afterwards, and I was like, you know what? I'm going to lock myself out. It's Friday. It's lunchtime. I am done. The market's done. We're not going to get any more moves. And then what do you know? We dumped another 450 points afterwards. But like you always say, if you're done, you're done. Don't worry about it. The market's not going anywhere. But man, that FOMO was real.
Yeah.
I locked all my accounts out and I was done. And I was like, oh man, this looks so clean again. And I couldn't trade. So, but it is what it is.
I think I'm gonna get some of this short. Not gonna lie.
Yeah, this is we just broke structure to the downside.
Yeah, I'm getting in here a little bit.
I was doing some journaling though last week, and I realized that every trade I took in the first 10 minutes of market open was a loser. So I'm gonna wait for the first 10 minutes to do its thing.
Yeah.
Just because I think I lost 5 out of 5 trades in the first 10 minutes last week.
That journaling is still powerful, man.
Yeah, so I'm gonna let it relax. I'm going to assume the Bears are going to defend this 450 area on NQ, and we're going to jump down to about 375. So if you are short, 375 would be your target. But I'm just not going to touch this just based on my win rate for last week. I don't want to hop into my first trade of the week and just be a loser for no reason. So
yeah, so smart.
There's the 450 retest, by the way. And wow, there's 50 points immediately.
A minute.
And good morning, everybody out there in YouTube. How is everybody doing today?
Yes, good morning, everyone. Happy Monday.
Mm-hmm. Oh, she is moving this morning, though.
I know, she's thinking.
I do like the 450 kind of hold and retest. But that was one of those plays where if you did not sell in about 7 seconds, you're red.
Yeah, it took me fast. I didn't scale it out here. I scaled out some.
It did run right to a kind of low-level support around 400, so that kind of makes sense. Just looking at NQ from Friday's price action, this whole area from about probably 480 to 400 is just going to be an area to kind of watch and where price might mess around, bounce off, things like that. So just keep that in mind. If you want to mark on your chart about 400 to, let's just call it 500, 400 to 500.
Yeah.
That is an area where you need to be careful.
Yeah, and on NQ, I would really love it if they got back to like 29,300 even, like just above that overnight consolidation area as well, like 294, 300.
I mean, in a perfect world, we're going to come back to like the 250, 300 area. I totally agree with that. That would make total sense. Right now, we're stuck in the consolidation area from Friday afternoon. This was the area where bulls kind of were like, all right, is this the bottom? And then at the end of the day, they said, no, it's not.
Yeah. Now we ain't done.
Yep. I lost 4% on a funded account Friday trying to buy the. You know what's funny is I made a Instagram video or TikTok video. I think Saturday morning, and I was just like, how many of you tried to catch the bottom on Friday? And how many of you tried the second time? And how many of you tried the third time? Because I know everybody was trying to catch the bottom.
Yeah. I mean, that was the situation that on those days we've been so bullish. It's like that. We've had really good plays of like fall down and then a buy at support, and then it had just pumped. So it's been the play. That's what can really get so many people in trouble, which is very, very common, I think, experience on Friday is that a lot of people were taken out in that fall.
And don't get me wrong, like the bounces were 50, 100 points, but just to drop another 300. So like I always say, like a lot of the other coaches try to say, trying to catch the top of the bottom isn't the best way to trade. Wait for some confirmation. It might just be a little pullback for the move that's continuing to happen. All things like that. I drew a level last night at 413 and took a long at that level, was in drawdown, but just closed for profit. There you go. Nice. Looks like some solid gains.
Yeah.
Florida. Let's go. Another Florida guy. Okay.
Florida.
Lost 3 in a row trying to catch the bottom Friday. I guarantee you're not alone.
No, I think that's a very common experience.
If you got wrecked on Friday thinking it can't go any lower, like you're not alone. I use something called the average daily range. And it's just the daily range of NQ on like the 20-day average, the 10-day average, so on and so forth. And everything was pointing right around 450 points, which you usually get some kind of reaction around 450 points. And we dropped 1,593 from the Globex Open. So don't feel bad if you thought it was the bottom a bunch of times. That's what I'm trying to say.
Right. Yeah. It was
right now we're about 10 minutes in the market, and we're kind of chopping in this pocket. 475 is looking like resistance right now. If we do lose about 450, with some confirmation, we should get probably about 100-point rundown. Let's see if we can get in and play real quick.
Yeah, I think we've got a little more downside here. I don't think we're done falling. I think there's some momentum that is taking back some of this range here. And
are you in anything right now?
Yeah, I'm short ES.
Classic.
Yeah, I like it. I want to get down to 32.5. I think is where I'm gonna be out.
I'm kind of eyeing a 450 short, guys, but I at this point I kind of want the 15-minute candle to print before I hop in. But it looks valid.
Yeah, I think the momentum is still there for the downside.
There's actually a pretty clean retest right there. But I think right now, just watching the price action, guys, I hate saying it, but like see green, take green until we kind of establish a direction. We are looking to the downside, but if you're looking at even the 1-minute candles, they're like 60 points each on NQ in opposite directions on every candle. So be careful, as always. Especially Monday, coming into a Monday and open.
I know. I feel like honestly, if you get the early move, do not overstay your welcome, because Mondays often will get super choppy and take back the whole first move in a bouncing action that we'll see. So that's why I scaled a lot of my short AF already. I'm kind of hoping it will do this last push down to that support, but.
Breezy, I lost 6K cash, and that same play would be up 35K today. Yeah, exactly. Welcome to the market.
Yeah.
But this is incredibly choppy right now. I mean, if you took like an opening bell play and you call the short, good job. You really want to see the knife fall.
Yeah, it could hold anywhere in here, or it could go down to those lower levels we talked about.
But it's hard to argue about the bullish kind of price action right now.
Overnight was so strong.
Yeah, this whole I'm just looking at the 4-hour chart, and this is just one of my favorite bullish setups. Push out, consolidate, push out. Probably a little bit of consolidation, and I would expect one more push out, which would bring us up to that 900 level, which is maybe 750 to 900. If we're looking for bullish action, I know it's a wide range, but we dropped 1,500 points on Friday, so ranges are going to be wide today.
Yeah, we're seeing wide ranges. That's the situation. Yeah.
And that's always my issue when it's a day after a day like Friday. Like once a move happens, it's gonna go, but catching the entry is incredibly tough
Hmm.
because there's so many spaces where we could bounce or drop, and it's just when you go through like look at the 4 hour candles from Friday, Becky. This is just
Yeah.
insane.
It's insane. Yeah.
Like so, the Bulls have potential to reclaim all the way up to where we dropped,
Yeah.
which would make sense.
Yeah.
But we also have a ton of areas where we can just die on the way up. So
Right.
I
I
think,
mean, that's the thing is that it was obviously a break of structure engulfing on the daily on the large time frames on Friday, but then you have to see follow through on that. That could absolutely be just a flush out, and then it held at an area that was the support for the last month. And so that could be the whole. Let's see.
mhm.
I'm definitely out of my shorts. I just had my stop snugged up, so
Okay, good,
now we'll
good.
see.
Like I was saying, this thing is moving, guys.
Yeah, on the
Expect,
5 minute.
expect
Mm-hmm.
like expect very quick moves today. My whole thing is when we have a move like this the day before, I have what I call volume pockets, where like nothing happens and then something happens very quickly, and there's kind of
Mm-hmm.
no in between.
Yeah.
But let's do it, guys. We'll see what we can get.
Yeah, let's see what we get here. This 15 minute is going to close here in 2 minutes, and we'll see. It's looking kind of doji-ish, honestly. So
Yeah, it's
indecision.
looking very indecision, but a huge buying wick.
Mm-hmm.
For me, guys, if I want some confirmation, if this 15-minute candle closes above 575, I'm going to send some longs. But until then, it's going to be a little tricky.
Yeah.
And as you can see, we just dropped like what 60 points in the last 5 seconds.
Yeah.
So like, if you are in a trade, just like be careful right now.
Yeah. ES is a little bit more on the bearish side, so it's giving me kind of like, are we going to go to that target vibes? But a little bit stronger.
This whole range of about what is this 450 to 445 kind of key area for me. But this also it looks like a little rounded bottom right here.
Yeah.
And I don't think there's any significant news coming out this morning, so
Mm-mm.
I'm fully expecting some just back and forth price action this morning.
Yeah.
I'm kind of eyeing this 475 long right now, to be honest with you.
Nice.
But I'm hesitant to go full size.
Yeah,
just on how fast this is moving.
I agree, especially with the tendency of Mondays to whip around both sides.
Yeah. So if you are looking for a play, I think the key areas are 450 and 475 right now.
They both closed with the big buying wick. Bodies are slightly bearish.
Mm-hmm. Yeah, the body is below the previous one, so keep that in mind. But we bought up from 395 to the body's at like we'll call it 520. So it's a pretty big range, and the wick is from 395 to 590 basically. So we're talking about a 200 point opening range candle, which is always fun on a Monday.
Yeah. Bulls are here. They're trying to defend this.
Yeah, I'm thinking we push out.
Yeah.
Confirmation would be a candle close above 575, guys. So if you want a value low area, like you can put an order at 450, and that would be like your I want to go long area. But if you want confirmation, 575 break and retest is kind of the move right now.
Mm-hmm.
Anybody already catch some plays this morning? How we all doing? We all sleeping still?
I feel sleepy.
Mondays, man.
Yep. It's real. We got to kind of wake up, see what's offering. Like, don't go too excited. Like, just let it give us some data.
Well, I know for me, I mean, I mentioned that the first 10 minutes of the market last week were terrible for me. I think I lost almost every play I took. But as well, Monday mornings are by far my worst trading days. I've journaled for the past 3 years. I think my win rate on a Monday morning has always been the lowest out of any day or time frame that I've done. So that's why I'm also not trying to just hop into a play, especially with the way Friday was.
Yeah. So smart. I love that you are using your personal data like that.
You guys, you have to, guys. I mean, doesn't matter how long you've been trading. Like people that run hedge funds, people that do all this, they're looking at their days and they know their good days, their bad days, all that kind of stuff.
That's what I'm saying.
But this is looking like a pretty good setup. I'm gonna go ahead and put a 475 entry in, and I want to see if I can get wicked in.
I'm gonna hold here and see.
I'm going to get tapped in. I have a very strong opinion on that.
Yeah, I'll grab you.
It's just a matter if it's going to knife through it or not.
Right.
And if you are listening, under 450, I will be cutting.
Right. Okay. Perfect.
And on the ES, value area for me, I don't know about you, Becky, would be about the 446 level, 445.
Yeah. Yeah, I still want to see if it wants to get down to 33.
Yeah. That's what I'm saying. Like if it breaks out, it's going to run back to it.
Yeah.
And there's the 450 level.
Yeah.
Let's see. If we don't bounce here, I am out.
Yeah, I think I'm very curious.
All right, there's the 450 bounce. Let's see if we continue to the upside.
If we can take out the low of this morning, then it's the lower targets we talked about. So
big time.
Yeah, on NQ, if we take out the 97, then I think we could go down to close to.
I can't believe how fast this thing is moving right now.
Yeah, I think she wants to push to these lower support areas.
Yeah, I'm kind of thinking that now as well.
Yeah. That was a try on the bearish retracement, but it.
Yeah, right?
Yeah.
So if you're in with me, buckle up, guys, because she is moving.
She's moving. She got some things to say this morning.
Yeah, no kidding. This is kind of wild, actually.
Yeah.
If you are in with the longs with me, like we really need to push over 500 to make this happen.
Yeah, this is definitely, like we talked about before, this was a key area from Friday where there's some indecision and before it did the secondary fall. And so that's why it's kind of chopping around here, is because both teams are seeing if they can have some dominance.
Exactly. We're kind of expecting this choppy action in this range. I think when I said 400 or 500, it's going to be an interesting pocket. So we're sitting right in the middle of it.
Yep.
We've been green and red 3-4 times already. So as always, guys, when price is moving like this and you see green or you want to take green, like do your thing.
Yeah, lock it in. Yeah, and thank you guys for everyone who's here with us this morning. Please do like and share with another trader if they're trading alone or don't love their community. Come hang out with us. We always talk real time about what we're seeing on the charts, what opportunities we like, and open for questions always. So like and share. It helps us grow the community here even more strong.
All right, we are out of that trade. We got stopped out, and I'm kind of at this point looking for downside, but this area, as we can see, it's moving 50 points back and forth.
Yeah.
And if this decides to rip right now, I'm going to be upset, but it happens.
Yeah. We'll see. We'll see what she does here. Bears are trying for one more leg, I think, but
I think so as well.
There is that buying wick on the first 15, so it definitely doesn't have to go that way either.
And
here.
There's 500. This is so annoying.
I'm sorry. Give it a minute.
I cannot believe how fast this is moving right now.
Yeah. It's
like we just saw, it was a 60-point pop into a 40-point sell-off, all within the same 30-second candle, basically. I need one of those hotkey buttons, like the little buy, sell, buy, sell, buy, sell.
Woo! Ooh, that can get expensive.
Yeah, right. I think this morning is the size down morning. I don't know how you feel about that though.
Yeah. I think she's showing some big candles, some higher ranges, and so that is going to be, points are going to get taken there.
We're talking 60. What was that last 1 minute candle? 80 points on the last 1 minute candle. So, take that as you see it.
Yeah, 50-point ATR, average true range.
Yeah. Oh, and look, this is going to do exactly what I wanted it to do.
No, it looks like the bulls might hold here.
Well, and look at that. Look at that. There's the 500 break. Oh man, that's a bummer. I think at this point I'm gonna wait for some confirmation on either side because this is just whipsawing like crazy right now. But I think the bullish read was correct. It's just this is a tough one.
Yeah, it is. It's pushed on both sides, which is often what can happen on Mondays, which is why I think a lot of people's metrics on Mondays are rough because it can do this, like whipping around, hurting things.
Well, everybody's thinking the same thing we are. It's Monday morning. What side are we going? Volume's probably a little bit lower. A lot of algos, things like that. So, man. All right. I was right, but I was wrong, guys.
That happens, man.
Yep.
Yeah.
If you had the fortitude to hold that, you were up 50 points.
Yeah.
Oh man, that is a bummer. I'm not gonna lie.
Yeah, dude, it's
If you are long, you really want to see like a 3 to 5 minute candle close above this 550 area, and then it's just off to the races to about 575, and then over 575, game over. Bulls take control, and you're gonna get probably another 75-point pop pretty quickly. Oh, I hate these plays just sailing off into the sunset without me. It's one of my worst feelings. Man.
No, it's like, come on.
It's like stopped out and target hit.
Yeah. Hit. That's really hard to watch like that. Like, come on.
Who's crying with me? Let me know, guys. But even so, like we just hit 550, and I looked at the chat, and then I looked back, and we're at under 500.
Yeah.
So this is some tough holds if you're trying to trade this right now.
It's arguing a lot.
High and buy consistency met again. Jeez. This guy has hit his consistency target 3 days in a row.
Killing it.
Love it. Awesome. Love to see it.
Yeah, dude.
That's what trading is about, guys. Get in, get out.
Yeah.
Go do something else.
Lock it in.
All right, so we are consolidating. It's like incredibly choppy, but to me, it is bullish consolidation.
Yeah. I agree with that. It's like we tried to break the lows here, and it really didn't happen.
But it's messy.
Yeah, it's still messy. Now I'm curious if we can break the highs of overnight too, because that would be a very strong move in order to push for those higher numbers that we talked about earlier.
Yeah, if we can break past basically like where we opened, it's game over. This is what I'm saying, guys. Remember, I just said all bull targets hit. Now we're like below where my entry was earlier. That's 100 points in 2 minutes.
Yeah, it's flying.
And Michael said I bailed, should have held. Do you still think that after seeing that candle? This is it's always fun. So if you want to take a stab at a long, here's your chance. Here's your like re-entry. I gotta see something play out.
Yeah, I'm not convinced on the longs yet here. There's too much.
Yeah, I'm not convinced either side.
Yeah.
We have this kind of like 100-point range from the ORB, and we're still sitting smack dab in the middle of it.
Mm-hmm.
I did well overnight, then Rec 2 funded in 5 minutes. Drawdown on 2 evals, past 2 evals, all in under 10 minutes. Jeez.
Volatility.
All right, that's a whirlwind of a Sunday evening.
Right. Flu.
I personally don't trade Sundays because like the last thing I want to do is start my week just on a bad note. On the flip side, you can start on a good note, but I just have no interest in trading Sunday nights because I don't want to wake up Monday morning already pissed off.
Yeah, I feel like the weekends go too fast at this point. Like I need to have that space to just like.
Oh, I blinked and I blinked on Friday and it was Sunday night.
Dude, that's what I'm saying. Like I can't. I mean, I gotta leave it now for Mondays.
Yep.
Here we
All
go.
right, well, there's 400. This is a pretty bearish action.
Yeah, I got back in on the short here a little bit.
I have a feeling we're gonna hit that like low target we talked about earlier.
Yeah, I think she's pushing to it.
Yeah. I'm eyeing a 450 short, but this thing is moving so quick. I don't know if I'll get an entry.
Uh-huh.
I'm gonna go ahead and put an entry there just to see if I get it. Oh, well, there's my TP1 for the bear side.
Yeah, she's dropping here. She's dropping nicely.
I always love when I'm like, all right, I'm gonna put a short order and oh, there's TP.
Yeah. When it's thinking, man, these elevator rides are legit. I think she's going for 300 on NQ.
Uh-huh.
About to my ES target on my shorts.
Yeah, 300 makes a lot of sense. And then after 300, 250, guys, if you are short.
Uh-huh. There's my ES target here for my first one. If we keep breaking down, though, I'm curious if we go to 19.
Yep, yeah, nailed it.
Uh-huh.
Yeah, perfect.
Keep going.
This volatility is no joke this morning, guys.
Uh-huh.
Oh, sorry, guys. I think my chart just cut off. Give me 1 second.
All right, now I'm curious. That went down and tagged the top of some support on ES. NQ is heading down there as well. They're both heading for VWAP. ES kind of tagged it. NQ is a little bit above it, but VWAP could be a soft support as well, which is in confluence with that just above 300, 294 area on NQ.
Yep, seeing the same thing. I'm curious. I mean, at this point, it'd be crazy not to think we're gonna drop more.
Yeah.
If you want to get like a risky fill for shorts, we're looking at like a 370 short. I have mine at 450 just as a I hope I get filled, but we've been moving like crazy, so it wouldn't surprise me.
Yeah. Yeah, she's dropping.
Mm-hmm.
That was a strong engulfing on the 5.
Oh yeah, literally took out the last 20 minutes.
Yeah,
and broke level from pre-market too as well.
Yeah,
which makes sense because if you trade fair value ups, we have a fair value up down to about 250.
Mm-hmm. I think the 300-ish range on NQ could be a really strong bounce spot if we can get there.
This, especially on NQ, I haven't looked at too much at ES, but this is one of those days where you can be right and wrong on the same candle.
Yeah.
So just keep that in mind, guys.
Yeah,
I don't know if you guys were trading with me on Friday, but like I had the direction right, but I kept getting stopped out because the candles were 40, 50 points.
Yeah. It's so easy to do on these. If you're trying to have risk management that is within your parameters, like these will just take it.
Yeah, it's incredibly hard to, okay, like I want to be a risk manager. I don't want to lose, $800 on 5 micros, but it's kind of the size you need or the point value you need to do it.
Yeah, agreed.
I can't imagine how many millionaires are made on Friday and how many people blew their accounts on Friday.
Yeah, I mean, if you were in the right side and you held, that would have been sick.
Yeah, even one mini would be like 25, 30 grand.
Yeah.
All right, so we're Probably gonna get tapped in at 450 here.
Yeah.
We were just at 325 as we were talking.
Yeah, she's moving.
Yeah, be size appropriately for your accounts. That's what I'll say today.
Yeah.
Like if you're on a 50K account, Godspeed if you're trading 5 to 10 micros.
Yeah. There you go. Breezy talking too, sizing down. It's good to be protective. We get in these big ranges and some arguments on both sides. So
yeah,
really
2
careful.
MNQ exactly. Done for the day. MNQ funded accounts 150 each. Oh, let's go. Good job.
Yeah.
Ooh, we did not get tapped in there, unfortunately.
She's coming down here. Let's give it.
That might have been the retest.
I think there's a retest from those lower targets here. When micro pays the bill, that's right, Nacho.
Oh, that ES retest was clean.
Yeah. That's what the bulls have been doing, retesting here, but then the bears have been making the bigger candles. The bigger directional candles are bearish, but the bulls have been retracing.
Yeah. I mean, this is tough price action to like hold, even a short to hold.
Yeah.
On NQ, like where you're gonna hold from 333 to 440 in profit. That's tough. Right. You're long to 450. Okay, well that's where I want to go short. So maybe we can both. And again, 475 is where I'll kind of cut if I do get tapped in.
Yeah. Love that.
Well, it's Monday morning is not disappointing. I'll say that.
No, we're getting some volatility here. Like, welcome.
Clear big structure to the downside, though.
Welcome in.
This is a bearish consolidation pattern as well.
Yeah. That's what I'm seeing.
I just hope I get whipped in. We'll see. I can't get in the middle of this stuff.
Yeah.
Yeah, Maki, you said you were long to 450 and we got to 430 and then just dumped 60 points.
I know. It'll be a nice bite of that because she's making some moves.
Yeah, no kidding.
I think we're too close to these key areas now with the bearish aggression to not really tag them.
Oh, we have to at this point. There's
like I think ES is going for maybe 23.5 here. Anywhere between 18 to 24 could be a good hold for ES.
I could see that. This price action. I kind of want to just like hop in like 1 or 2 MNQs and just see what happens because
all right.
I mean 5 is half size and I don't even want to get in 5 with this movement.
Yeah.
Yeah. We have a 5-minute candle close below this 360-ish area. This is going to continue.
I think so.
Yeah. I still am going to keep my order at 450, guys, because I have a feeling we're just going to get some stupid wick up there. So I'm just going to sit patient. I already took 1 L this morning. I don't want to just hop in again.
Yeah. Give us some time. Good morning, Hoster.
If you do want to take like an early entry, for me, I'd say like 420 maybe. What's up, Hoster? How you doing, man? Yeah, she's. Oh man,
dude. What you got? What are you doing? She's like getting close to the areas and then whipping back and forth.
Becky, this is that price action where like a year ago I would have like rolled over, looked at my phone, and been like, "Screw this."
Yeah, no, this is ugly. Which is often the case on Mondays. Like high volatility taking a lot of people, but not really having a beautiful directional move.
And we just missed our fill by 4 points, guys. It's always fun.
Mm-hmm. It is retesting that 5-minute opening range. Right now.
Yeah.
Mm-hmm.
Oh, that's a bummer, guys. That would have made my morning right there.
Yeah, she's making some moves here.
So like I said, I'm just keeping the order here to see what happens. I'm going to put a stop at like 500 just to be safe in case it just rips through it.
Mm-hmm.
But I like this 450 area if it's going to work.
Yeah. Yeah, she's there. She's thinking about it.
If you are trading right now, let me know your average hold time because I bet you it's under 30 seconds.
Yeah, I mean, it's either working or it's not working pretty fast because it's moving so much. When it's moving fast like that, it's tricky in that way.
The 1 minute warriors are loving this right now.
Quick bites.
Right? I'm in, I'm out.
Yeah. Boom, boom. Interestingly, on the 5-minute on NQ, it did just poke above that last 5-minute candle. So, I mean, did that take out stops or is it going to push now because that's a break up?
Exactly, right? Okay. Let's find out.
Well, let's see. She's going to tell us here in a few.
Yeah. Less than 10 seconds, 29 seconds. Yeah, under 15 seconds. See, exactly, guys. Like, if you're trading this, you are not holding. We are in. And this is a crazy bullish candle.
Yeah. Now, let's see what she's going to do now.
Yeah, your cat's like, oh, he's in. Let's go.
Oh, God. Talking about it. Sorry about my noisy cat.
No, it's all good. Come on. I don't know if you guys can tell, but I hate trading candles like this where we're moving 100 points on a 5-minute candle. It's so tough. And we just had a bullish close over my entry on the 5-minute. This is an unforgiving morning on NQ. We got to get under 450, guys. We got to get under 450.
This is an important area right now to see if the bears will hold or not.
Mm-hmm.
If this pushes higher, then I think we may have found support.
There's the 450 retest. Like, let's see if it's actually going to hold or not.
Yep. Now we got to see.
All right, there's 200 bucks, guys.
Oh.
Take it or leave it. Like we talked about, 20-second hold time, right?
Yeah. Real talk.
I want to see a push under 420 for this to really start cooking.
Yeah, that would be good. That would be a good breakdown.
Well, like I said, guys, this is moving too fast to me even tell you what to do. So
yeah,
do whatever you want.
I know. That's the thing too. It's like
literally, you're not gonna be able to follow me right now.
Yeah, it's hard. I do like how we tested the 5-minute range and it's still kind of not.
As you said that, I don't like it anymore.
Yeah. No, I don't like either way, really. It's like
I don't like either side, honestly.
It's giving like counter directional moves all over the place.
Non-stop.
Because then it's long.
That is such a bullish hold. This is I don't know. Probably toast right now.
No, I'm so curious what's going to do right now. I could see either direction, so that's why I'm like,
right.
Yeah. I'm short
Take
too.
take your money and run, guys, is what we're saying. Yeah.
Lock it in.
Mm-hmm. Since I've been in this play in the last 1 minute, it's gone. This candle's been like 50 points.
Yeah, it's pretty wild.
I honestly, when it goes green, I might just take it.
Yeah.
Oh, damn. Okay.
Drink it. Cheers to whoever's long too.
It's one of those things where I can't even click the button fast enough to get out of the play.
Yeah. Yeah, she's got some energy here.
Right?
And so, yeah, these bullish counter trends are playing with everyone this morning.
Mm-hmm.
I would love if we could get to those lower targets. They're just sitting close. It's bothering me that we didn't tag them.
That's what I'm saying. Like, we didn't get it yet.
Yeah. They're just so logical, and the energy was pushing that direction. So
there's the 420, guys.
Yeah.
There's the TP1. That's probably where I should have exited, honestly. Yep, and it's gone.
Yeah, let's see. If it does get down there, if it does, and then gives a bullish pattern, that's going to be really good too, especially seeing the bullish counterplay here. But it could not.
This is just really tough to trade at the moment, guys.
Mm-hmm.
Like we're saying, like TP1 hit out, get out now.
Yeah. T green, take green is the play today.
Like I think I just saw 30 points green, and then now I'm 10 points red, 15 points red, 20 points red.
Okay. Why is she whipping like that? Come on,
crazy.
Mm-hmm.
Again, this 475 level is like very crucial for the Bulls.
Yeah. ES is similar at 74.48. I would say it's pretty important resistance here.
Exactly.
Yeah. 48 to 50 is the resistance on ES, and it is holding as resistance right now.
You could have taken $200 like 17 times since I've been in this trade. Good morning, Mary.
Good, Mama.
Ooh. 15-minute close right at the key level. Come on, give me the move, guys. Give me the move.
Come on.
For this play to really cook, guys, we need to get like 50 points down.
Uh-huh.
Come on, reward me.
I know. We're showing up. We're watching you. Let's see.
And guys, just because I'm not exiting, like, doesn't mean you don't have to hold.
Right. Do what it feels right for your account size.
There we go. That's what I'm talking about.
Mm-hmm. Good morning, Mary.
Let's go. Boom. Boom, guys.
Drop it.
Let's take some partials here.
I like this short.
There's 50 points for our first trim. Let's cook this under 375 now.
Yeah.
That was not a fun hold, Becky. I will say that.
You did good.
Oh, man. Might not seem like it. You guys know ducks, how they're calm on the surface, but their feet are just going underwater. That's how I felt right there.
Well, feet on the flame.
Mm.
Your entry is beautiful.
I mean, all you can do is take good entries and see what happens.
Yep. Play the way she's bouncing.
This needs to die right now. Literally needs to freaking go.
I think she's trying right now.
There we go.
Come
on.
Sink it.
Get me under 375 and I'll be a happy man. There we go. 375.
Here she goes.
Let's go.
Yeah, I think this could be the leg here that we need to get to where we're going.
I'm hoping so.
Mm-hmm.
All right, there's 375. TB2 hit, guys. Just dump this then. Let's go.
Okay. Yeah. Let's see if we're going now to 347. Next low target.
Yeah, I would love that. Give me 300, honestly.
Yeah. Yeah. Yep. 323.
Give my man his 100 points. That's what I'm saying. Give me 100 points, Breezy. Let's go.
Push it. Come on now. Come on now. You can do it. Just think it.
A smart man would put his stop loss in profit, but I'm not him.
Give a little room. The stop outs are painful.
This thing needs room to breathe, guys. Like this stuff is moving way too fast to do that.
Yeah. Yeah, I think give it a minute. Sometimes it's hard, but you don't want to give it too much wiggle room. Obviously, it has to be within your parameters for sure.
I mean, it's never fun watching your play go 30 points to negative 25 points. It's not. But you got to do what you got to do with the NQ.
Yeah. Sometimes patience is the name of the game.
Are you short? Are you short with me?
Yeah, I'm short.
Okay.
Yeah, I want to see if we get. I'm going to scale out if we break this low of the day at 33. And then have a runner to see if we can get lower. She's bouncing.
Mm-hmm. Playing games with everybody right now.
Mm-hmm.
And the video is frozen. Gotta love that.
No. It's like,
oh no, come on. Where's the price at?
Don't freeze, that's the worst. Oh.
Uh-oh. Refresh.
Come on, wake up.
There we go. Okay. All right, we're good. We're in profit still. That's good.
Yeah. It's the Bears are holding, but they aren't pushing down. So if they can't
They're
break,
not giving up. Yeah.
10 minutes, I don't.
It's a little concerning.
Break it down.
It's a good setup. I'm just concerned about the bounces.
Me too. They're like strong.
Yeah, they're not fun to deal with right now.
No.
And I know there's people that have taken this short like 12 times since I've been in the play.
Yeah. Well, that's the thing is if you're like you can grab bites and then.
This is gonna stop me out. Wow.
Oh, good.
That's crazy. Don't do it. Come on.
Don't do it. Finish it. You know you want to.
I think I gotta just take this.
Yeah.
Maybe
I don't even know what to say.
I'm like about to click the button. I'm like, never mind.
What are you gonna do? I just think it hasn't finished it. Like I just feel it hasn't finished content.
It's not done yet, but it's not.
But these whips are painful.
Yeah, no kidding.
Yeah. This is like the sweaty palm situation.
Yeah, right?
Come on, baby.
And now I love it again.
Yeah, I know, right? Now she's pushing again. I say we hold. I say we hold.
Oh, it's so funny.
I know. Oy, oy, oy.
I remember about 3 years ago, I would have blown about 4 accounts by now.
Yeah. This price action is taking accounts.
Yeah. Like what is this? No, literally.
Yeah. You go on a little exercise, you get taken out by holding a stop within normal range, but it can take them out. Yeah.
This is what I call like one micro price action.
Yeah, for account longevity.
Yeah, no kidding. Just dump this, Becky. Let's go. Come on.
I know, right?
Look how even the 1 minute chart is just completely flat, like body wise.
Yeah, because it's like really arguing right here and dinking around.
Well, what the hell do you want to do, market? Come on.
Right? Do it.
Is Breezy in the short? I don't know. I don't know, Breezy. Are you in the short? Breezy's probably playing like AMD right now or something. What are chips doing actually?
Yes.
Nvidia's green. What's MU doing? Choppy.
Oh, Breezy already posted his chart.
AMD is falling. That's actually good. Check P&L. Oh God, what is this man doing right now?
I know, right? He's like, I'm so green, I can't even be in a trade anymore. Woo!
Oh, he's up $3,000 this morning. Okay.
No, okay. Happy Monday.
This is. I'm just looking at the 1 minute chart, guys. This is like the worst hold ever.
Yeah, it's really unpleasant.
And it's holding this kind of base and kind of getting buying wicks. I had a million opportunities to take profits, so I hope somebody made some money on this play.
The way that it's not sinking is not my favorite. Like I really like the bears to like handle it. I don't mind like even a 15-minute retracement, but then if there's no follow through, it's concerning.
Yep.
We saw a 15-minute closed bullish.
I'm gonna get stopped out on this one, guys. By the way.
Yeah, me too.
Wild. Oh, I didn't adjust my sizing on the stop loss. All right, I'm long now, guys.
All right.
All right, let's get over 475.
Pump it.
Yeah. This is your reminder to always adjust your stop loss, by the way. Or don't and get lucky like I just did.
Right. Or just have it be slightly stop / reverse.
Yeah.
Just stick out the pivot.
This is one of those mornings where like you can get stopped out on both sides.
Yeah.
All right, we couldn't break above that 475. I'm curious. The Bulls want to see 450 hold, and they want to pass 475. Bears obviously want to get under 450.
Mm-hmm.
If this can break 500, I'm going to add to this position.
Yeah.
I'm not convinced on either side at the moment. We've seen no follow through on either
We're
side.
still just inside. We're just inside this early, like dinking around.
We're inside the 5-minute candle, you know?
Yeah.
From the open.
Yeah. This initial balance is like just kind of bracketing on itself, and there's plays in both directions, which is choppy, which is dangerous.
Honestly, though, the 1 hour is kind of painting the picture for the bull side.
Yeah.
But I still think we need that retracement all the way down to like London highs.
I know, it's bothering me. That's why I'm like hesitant on the longs, because I'm like,
I'm surprised the shorts didn't go there. Honestly, that's crazy.
I am too. Like that's why I like it less now. These shorts.
Yeah.
Yeah.
Well, these longs are cooking, so that's good.
Yeah. Nice.
Up 30 points on this happy mistake.
Get it.
So we want to break over 500 now for longs to really go.
Yeah, that would be a good plan.
ES, you want to break over 50 and 55.
Yeah, she's pushing.
Wow. Okay. There we go.
Yeah, push it.
All right. I might have to add into this, baby.
Yeah, this looks good for the Bulls. Honestly, the Bears could not get it done, and that hesitation was not a good look.
Mm-hmm.
Well, if we could hold here, this would be the pullback in the turn at open, and so then we have those upper targets.
Yeah, and if this goes back to entry, like I'm just gonna throw my monitor against the wall and go back to sleep.
Try again on Tuesday.
Yeah, right. Exactly. Monday's done. We'll come back tomorrow.
Yeah. I would love it if these bulls could hold and break the structure up to get up to that like 29,790 on NQ.
Oh yeah, I would love a deep retracement into Friday's price action. That would be great.
Yeah.
All right. Here's major target for the upside. If we can break here, we're going to see 575, and then just we'll see what happens after that. But there's about 75 points if you made the mistake with me.
I mean, let's call it what was meant to be.
Yeah, I did it on purpose, right?
Yeah, 100%.
How's everybody out in the chat doing? Is everybody surviving this like whipsaw action?
Right.
It's definitely been a morning where that first 45 minutes almost was pretty intense.
Yeah, it was definitely some energy there.
I'm just curious if this was the morning retest, because it's kind of the top of the body of the 5-minute candle from open.
Yeah, ES got down to VWAP. NQ didn't quite, but a little stronger, honestly. NQ is stronger, which is a good sign for the bulls.
Yeah, yeah, much stronger.
Let's send it. Vodka still has some longs. ES, if we can get above 460, that would be a really good show of strength for the bulls.
Oh yeah, absolutely.
Break it.
Yeah, this looks good. 250 bucks on 2 micros is no joke.
Yeah, beautiful. Take us higher.
Just come on.
Yeah.
Give me a direction. That's all. That's all I want. It's just like
right. Show us the way to go.
Yeah, I don't want this BS of just like, where are we going?
I think that we got a good sign that the bears tried and they could not have the follow through here.
Agreed. This is just where I'm at the point where, like, was that just the one bear day just to ever have everybody load up, or are we gonna keep going down? You know? Is that daily candle?
Yeah, holy moly!
No joke. Like,
oh my gosh, that was a beast.
50% of that would be kind of about where we're at.
It's kind of wild that the whole first hour was not very far outside of the first 15-minute range. Broke a little lower, but
all right, we're pushing, guys.
Top tick to open. Yeah. Let's go. Push it higher.
Yeah. 600, we top tick to open. Okay. Oh yeah, we did. No kidding. Look where that candle stopped. Structure retest. Yeah, I'm curious if this is actually gonna do it.
Yeah, it looks good here. The longs look like they're the force.
We at this point we got to touch 575. There's no way we don't.
Yeah, it's definitely pushing that direction. If we could break it, that'd be beautiful.
Yeah.
On ES, if we could break above 476, even would be nice. If we could break the high today, we're going for 476.
And then ES kind of stalling as well.
Mm-hmm. Yeah, they really are. Yes, remains weaker here, but it's trying to hold up.
Yeah, some juice on either side, guys. Like,
Right. Here we
I'm
go.
saying this like I'm not up 80 points, but
Yeah.
I'm like, give me a real move as I'm up almost 100 points.
Come on. How much you need?
Yeah, I'm just a greedy man.
I mean, we're here to make money.
Mm.
That's what we got up for.
Get me over this 550, 570. Once we clear 575, it's game over.
Yeah. Yeah, I would love that.
And we're still within the 15-minute candle, by the way, guys. Like,
all right.
We're not outside of it yet, so we're not in smooth sailing at all.
No, we're not. We definitely could be in where the bears could be a problem.
Mm-hmm.
But they're not holding dominance today.
Mm-hmm. And I'm only in 2 contracts, so like I'm not going to trim, guys. This is a home run or nothing for me.
Yeah.
And don't get me wrong, like 80 points is a home run.
Yeah.
So home run has been a hit.
Yeah, that's good. That's a good push. Yeah, if we could break above here, that would be amazing.
Mm-hmm. Agreed.
Is anyone in this long? Still pushing with us. I like the move on both. I like that we fell down and then the bears could not get follow through. So that's why I like the bulls now here. They had their chance. Close.
Yeah, the short was good earlier. I mean, we had to try it, and it worked. And then they said, "Hold my beer, let's go long."
Mm-hmm.
So we had to switch. All right, give me 100 points. Come on.
Yeah, I see that too. That rounding bottom.
Yep.
If that's what you mean, anyway.
Oh yeah, that was a really nice close.
Mm-hmm. It was a good push.
Now I want to see bulls hold about the 520 area, and then we should get another push out. Potential to come all the way back to 475 though from the breakout area. So risk management, do whatever you guys need to do based on your account size.
Agreed.
There you go. There's 100 points, guys. Let's go.
Yeah, push it.
Get me that 575 clean break, and like I might make $1,000 on 2 micros.
It'd be beautiful.
Right?
Mm-hmm.
Right, Breezy? I'm 100. Let's go. All right, there's 575, guys. Let's go.
Give it up. Give it up. Yeah, I like this a lot. Let's take out that high. Take it out. Yeah, I must march my stop up as well.
All right. If we can get this 575 break and hold over, this is gonna be a great hold.
Yeah, there's gonna be some good liquidity to take out the overnight high of 606. Definitely potential if you do have a multi-leg position, you could trim there and we take out that high.
Beautiful. All right, here we go. Moment of truth, guys.
Hit it, push it. Definitely for expansion on the New York session is not expanded yet. So okay, we just kissed it here, and now we see.
Yeah, we gotta break this right now.
She's trying. She's pushing heavy.
Yeah. It looks really good. So
yeah,
but this could be the top for the New York session. Just heads up, guys.
Yeah.
If you want to be a top tick hero, here you go.
I think we're seeing the momentum is holding to the upside here. So I would love it if we could just march up here to these upper targets. That would be amazing.
Oh yeah, yeah. I wanna see like this 850 level get tapped today. That would be huge.
Shoot, I'd be happy with anywhere around 800 for 790, 800.
Yeah.
Good.
Just over where we're at right now. I'll be really happy.
There it is, up 700. Nice work, public.
Times 5. Okay.
I love that.
All right, the 600 is giving us a problem, guys. Giving us some trouble.
That was a good trim at the high there. If anyone got a little off.
Absolutely.
Oftentimes when we take out those liquidity locations at previous pivot points, there's going to be a little bit of a reaction there. So mind yourself there if how you want to hold through that or scale a little. Yeah, copy trading. I mean, it accumulates some profits that way.
Nice. 792, 50% of the drop. Okay, that makes sense.
Come on, let's do it.
Yeah, I mean, not much to update, guys. We just have to break over this.
Yeah, we need to see what happens here. I mean, could fade back in for a minute, but if it could break above and close above, that's a very strong directional intention. Definitely like picked it.
If you're looking for like an entry and you're not in, I'd probably be looking at about the 500 area.
Yeah, I like that.
I hope it doesn't come back there for my sake, but
there's a lot of
yeah, that's the value there.
Yeah, that looks like good. And I don't want to go back either.
Yeah, right.
Just keep pumping. Well, what really would look good to hold this long is the closure outside of this range, and then I would feel more comfortable holding through a retracement as well.
Exactly. Yeah. All right, there we go. This is looking good.
Go.
5-minute candle is about to close. If we get this close over 575, I'm feeling great. As I say that, it runs back to it.
Come on, push it.
All right, it looks good.
Yeah,
I think we're good.
Yeah, I like this.
Yeah.
The bulls keep one time framing up here on the 5 and the 15.
Yeah.
That's what it looks like when she's climbing.
Yep. The only thing is, I know these bears can come in and just throw a 100-point candle at me. So.
Yeah, I mean, they threw down on Friday, so you got to be on your guard of what they can do. So just make sure you're kind of watching your risk and you're comfortable with it.
I remember I was talking to a buddy and I looked at the charts at like close and I was like, we're at like 850, 28-point K. Like, that makes no sense. I was like, we're 1,000 points higher the last time I looked at this.
Right.
$600, guys. Let's see if we can just push past.
That's a hit and tag, yeah.
671 is end of day view up price. Loves it. Yeah, okay. I would love to see 671 right now.
Yeah. Let's take it. We're on Team Bull right now. Team Bear could not get it done, which is important information to know.
But I mean, we got to keep in mind, guys. Like, we're not out of the water yet. We're still in the bearish pocket.
The thing is, though, too, is that's why I always trim when we break out these pivots if I have a position I can trim, because that the people who were in that pivot and created that pivot could hold. They could defend, and it could be just a retest and take out a bunch of stops, and then it could move. So
exactly. I would love to just hold this all day. That would be great.
I know, that'd be sick.
I don't think that's gonna happen though.
I'm worried right here what we're gonna do.
Same.
ES is retracing as well when it got close. ES didn't even get as strong as even touching their morning high before it encountered some bears here.
Very different stories between these two.
Yeah. ES has been weaker all day.
If we break like 525, I might just have to lock this in.
Yeah, I think I'm gonna move my stop up to profit.
SpaceX Friday IPO, yeah, people are very excited about that.
Yeah, that's a big thing.
I think that thing's gonna like as soon as it opens, it's gonna blow through the moon, and then we'll see what happens.
Yeah, then there's gonna be some profit taking. I would be careful.
It's gonna be all over social media too. Like, oh, I got filled on my SpaceX play.
Mm-hmm. Gonna create millionaires.
Yeah, and it's also gonna make people go broke when they chase it.
Yeah, it's gonna be real dangerous to chase the high on that because there's been a lot of front running on that one.
There's gonna be more orders and shares available, so it's probably just gonna squeeze pretty hard as soon as it opens.
Yeah.
I can tell you, Elon Musk is probably gonna become a trillionaire.
Yeah, dude.
Oh yeah, if you work for SpaceX, you're very happy.
Yeah.
Imagine having some options. Oh my god.
Would have been sick. All right, the bears are trying to make their play here. They ticked out on NQ and then ES they didn't get as high. They're seeing if they want to hold this pivot here.
Nice little hold there. I'm not convinced though. I don't like the selling pressure, especially on NQ from pre-market highs.
Yeah.
ES looks way worse. We couldn't even break pre-market resistance.
Agreed.
What's gold doing?
This is an important area here.
Gold's looking kind of gross.
Mm-hmm.
How's everybody out there doing? Chat is pretty damn quiet this morning. Everybody's too locked in.
I know, right? Seems they can handle these whipsaws. What up, Jaja?
I can't type. These are 50.1 minute candles.
Yeah. Whoosh. Yeah, Nas is printing. All right, that was a little retracement on the 5, and it's trying to hold here again. So let's see what the bulls can do.
And remember, guys, we have the podcast today at 1 p.m. Eastern.
Mm-hmm.
We'll be talking. It'll probably be good amount of conversation about the drop on Friday. Honestly, I think we're done talking about the Middle East until something happens.
Yeah.
And other than that, we'll just be talking trading questions, stuff like that. If you have a topic you'd like us to discuss, let me know. I love a nice debate or a nice conversation just about some random trading topics.
No, me too.
Locked in, markets are too fast. Yeah, right. Exactly. All right, there we go. Come on, 600. Nice hold. Let's push this past.
Yeah, let's go. Come on.
What are you doing over there?
Right? Get some alert hit. Oh.
There we go. All right, nice push.
Mm-hmm.
Beautiful. We're up over 150 points right now, guys.
Yeah, this is great.
I'm looking for this 650 area, guys. Let's get it. And if ES breaks the highs, this is going to break once.
I know. If they could just pump, it would be beautiful. This is a real nice push here.
Yeah, this is great.
Mm-hmm.
And if anybody ever tells you guys micros are lame, look at my P&L right now.
Yep. Don't even judge.
Up $700 on 2 micros.
Beautiful.
Give my man his 200 points. Thank you, Breezy.
Let's take it.
Give me my 200 points.
Shoot, I want us to go up to 761, 760.
Give me 500 points. What are we?
Give it.
All right, here's a massive area, guys.
Yeah.
You know what's good when I have to zoom out to see my P&L because it's so far down.
Right. I'm gonna step out for just 1 second. I'll be right back.
Yeah, no worries. All right, my stop loss is now 100 points in profit. There we go. TP hit again. Oh, didn't get the 200 points though. We got 195 points. Almost there. Expect a retrace. Oh, as I said it, there's the retracement. I want to see bulls hold the 600 area to get the next leg up. But this was on the hourly. This was such a good, nice breakout. Let me know if you're banking with me. Or if you're in a play, let me know what you're doing, what you're thinking. Please make sure to hit that like button, subscribe to the channel. Just a reminder, the more people we get in here, the better sales we can get, the more giveaways and stuff like that we can do. I'm half tempted to just take my profit and just have a great morning. What are your guys' upside targets? Let me know. This is just, let's see what we can do now. Grab the bag? I could. You know what? Let's take one off. How about that? We'll sit down to one. Let's lock half that stuff in. Good point, public. Good point. So let's see if the 600 area, 600-ish, 575 area holds. Would have been nice to hit that 200 though. Yeah, so that's a good point. Let's see where we're at on that.
That was a nice closure above on the 5.
We hit 50% retracement on the daily candle, so that might be target complete. We'll see. I took one off, Becky. So
nice. Okay. Yeah, it was a good.
See if we ride off into the sunset now.
See if I can hold one. I got a couple of MNQs as well. I'm gonna see if I can hold one up to 761. I think it's gonna be my farther target for the morning.
That'd be great. I got 700 marked pretty hard. I think we're like you said, we're sitting kind of near the 0.5 of the daily from Friday.
Yeah.
So if we can push, like, we should get a nice run. It's just gonna be kind of a key area at this moment.
Right. It looks like it wants to. I mean, the bulls are really holding. They tried a little retracement there at the high, and it didn't get that far.
Yeah.
Volume was low on the retracement too. If you look at the volume on the 5-minute candles, that bearish one had smaller volume than the bulls surrounding it. So
good. Talk bullish to me, Becky.
Hey, bullish to me. Yes, sir.
I just want my 200 points. Give me 200. Come on.
Yeah, love that. Happy Monday.
Right?
Take it.
Oh, we got it. 200 points. Let's freaking go. Let's freaking go.
Played. Yes. Beautiful.
400 bucks on one M&Q. Absolutely nuts.
I love that. And ES is getting dangerously close to breaking their high here too.
Ooh.
That's going to help us so much. We break 69.
Oh, yeah.
Go. All right, she gave some options today. She has some opportunities in this market here.
This was basically every day but Friday drop into the pop, you know?
Yeah. Which, that's the play we've been happening. Like Friday did not work. And so Godspeed to all the accounts. But it held today. Which was supported by the overnight bullish activity, right? That it fit in line with what we have seen since Sunday open.
Exactly.
Important factor.
I'm gonna go ahead and take this, guys. 200 points. Like, I don't know what else I want from this.
Yeah, this is a beautiful
run. Let's lock that in.
Yes.
If you are holding, like, obviously that 600 hold is nice. 575 breakout, beautiful. I have 200 points. Let's go.
Yeah, love that. Ooh, Drew has a good tip here. Last 4 weeks, wait until 10:21 for a trade. So about 50 minutes into market open.
And yeah, look at that, actually.
After the drop, and then she pops. I love statistics, man. You can start to see trends and watch times and see a lot of confluences sometimes.
I'm going to grab another cup of coffee. I'll be back in like 1 minute.
Okay, cool. Oh, we really love this ES just popped too. Check out that high. I think it's going to help them both climb together. Could be good luck. Gold, what's gold doing? Gold is kind of sideways. Had a little push up overnight, slid down, open, trying to hold as well. But not as strong as ES and NQ. Yes, right back into that resistance area of Friday. That's going to be a little bit of an issue. NQ is above theirs and it's pushing to the next one above, which is a good sign for the bulls on NQ. So really, like, there's a kind of some free air here up to 61 on NQ. Not a lot of consolidation in this area from Friday. So that means it could kind of fill out here and kind of dance around here as it climbs, but it looks like she's climbing.
This is going to be a tough area to crack. It looks like it wants to, but
I agree.
A lot of things off the daily, larger time frame saying like this could just be the retracement into the next leg down. So that's I mean, I was up 200 points, so I was totally fine with it. And if I had more sizing, I probably would have held 1 or 2.
Yeah.
But I mean, what was that? $750 on 2 micros. It's crazy.
Yeah. Yeah, I like this.
It's not really showing signs of slowing down though.
It's not. It's still marching.
Yeah.
We say that, and she puts a little red on the chart.
Definitely one of those days where like you can't be looking at your P&L while you're holding the trade.
Yeah, because these candles are big, and so your P&L is going to be a real thing.
Yeah. I mean, like you guys saw that short earlier. I was up, what, 5 micros, $350 to 0 in a minute.
Mary, I am long. Justin was long, and he locked in his green. I'm going to see if I can hold here.
I hope a lot of people took some longs with us. We had a good amount of time to get in with us.
Yeah.
ATR on the minute is 30. Is it really?
Ooh.
That's pretty wild, actually.
Yeah, it broke out, Mary. Like this is the breakout play of the opening range here, and so we could have some movement.
Mhm.
I don't want to. Yeah, I don't want to just hold this.
Yeah, looks good. Looks really good.
New hourly wick. Yeah, good point. 3 minutes to the hourly closes at 11 Eastern. Okay. ES is pushing harder too. Let's go.
I feel like it's been a full day already. We're only an hour and a half into
I know, right? Some price action, man.
Oh yeah, ES is about to start the real story today.
Yeah, push it. She's catching up.
Yeah, if ES can get a close over like this 467 area, it's
Yeah.
gonna go.
Yeah, I'm waiting to see if we can get above 71.5 as a high this morning.
Yeah, new hourly wick, Jada, exactly. And I don't think you can argue that this hourly is bullish.
Yeah, the bulls are holding the morning. We've got targets above, so. There it is. I'm New York anyway.
All right, ES is all right.
Yeah.
It's about to break out.
I'm in. Go, mama. Next resistance on ES 77.
Yep, this looks like a clean breakout. And if you are in the queues, we want to see a push past this like 675 level. Let us know if you're making some money, guys.
Yeah, good.
You're long on silver. Oof. Okay, what's silver doing?
Come up with I think I said an ES level of 77. So that was on Friday. I drew the consolidation area on Friday's price action, and the high of that consolidation box is 77.5. And so that there's going to be some liquidity there because it consolidated for a while, and so any stops that were sitting above that, it likes to pop the stops. And so if you're trying to hold in that resistance and we're pushing into it with some bullish strength, then I really like trimming and watching where it pops the high of it, because it can kind of dink around and hurt people. Take your stops. And so that often is a period of liquidity. That's how I got 77 on ES.
Oh, that was such a bullish close on the hourly on ES.
Yeah, they're strong.
Incredibly bullish.
Mm-hmm. Yeah,
All
the
15 don't want to give any gains back like I did Friday. Smart.
Yeah, beautiful. Locking in profits is boss, especially when you're growing your accounts. If you're ever trade copying, like you want to make sure that you're, being very intentional with controlling your risk and locking in some gains when you see them. And then, like we have talked about too, is getting in with, a couple legs of maybe trading micros with a little group of them. That way you can scale and watch your risk and push it a little bit.
Especially on a Monday. I mean.
Yeah, I do. Definitely. Yeah, love it if we kept going to that resistance area. I would love if ES broke out above, though. I think ES will look good to go up to 706 if we can break the 77. Push it. Beautiful. Yeah, they're all still pumping. See how it looks to keep climbing. London session is done now or in 30 minutes? 30 minutes, right? No. What time does London session end? Somebody help me out. Is it 11 Eastern or 11:30 Eastern? 11:30, yeah. Thanks, Nick. So 28 more minutes of London. So this is their power hour. So we can get a little bit of volatility here to push it through. We definitely have seen news on Mondays, 100%. Mondays are kind of newsy, honestly. I feel like it's not. I feel like I've seen I've noticed a bit of White House-ish news on Mondays. Fallout from the weekend and. All right, keep pushing, keep climbing. So for the NQ, if we keep breaking highs here, I think 736 might react here a little bit, 735, and then 761 is my higher targets on NQ. And like I said, on ES, 77 is the next resistance, which it got, gosh, what? Half point under it, 76.25. So we'll see if we can take it out. Doesn't have to. It never has to, right? So what's a good closure above them on the 5-minute and the 15? But we might see retracement here now. Especially Judge pointed out the hourly candles. So, I mean, right now it could get a little bit of a retracement to put a wick on an hourly candle as well. If it continued to march up, I mean, it could push down a little bit first. Especially after taking out the highs. Like ES just took out their highs and Q took it out a while ago.
Let's push this. Let's go.
Yep, keep going. Looks good.
It would be a shame if somebody drops the news here. Yeah, right.
I know. Yeah, it could happen. It's definitely been known to happen.
I honestly haven't even checked the news this morning. Is there anything going on?
I haven't noticed any alerts to be worried about, but I haven't dug into it either.
Let's see.
Here we go. Keep pushing,
really.
keep pushing. There we go. I like it. That was a nice little 5-minute pullback here.
Listen to this. Secretary of Iran's Supreme National Security Council. If the Zionist American Alliance makes another misstep, the region will turn into hell for it.
Oh,
that's a statement.
That's a statement. Yeah. Yeah. That's not the most diplomatic thing I've ever heard, but
right.
Here we are. Yeah, I'm still in too, Mary. Previous 15-minute high. So more of the same, Nick.
Yeah. I mean, how many times is Trump going to say do this or what?
Right.
I gotta love Trump's not a tweet, what the Truth Social thing on Friday. He goes, job market's great, stocks will go higher, and then the market dropped 5%.
The market said, you
yeah,
said, is that what you want?
Mm-hmm. Man, this thing is going.
Send it.
That pre-market high break on NQ was just game over, and then when ES followed suit.
Yeah. Okay, yeah, added the momentum.
Yeah.
Nice tomorrow. Love that. Getting some silver.
I will never touch silver. You're braver than I am.
She can move.
Yeah.
Yes, it's pushing at that level here. That's the thing, is when we're having these push-ups, like we're encountering the resistance of Friday, where I mean, on those days when you have those big liquidations, there's going to be little periods of pause, and that will cause resistance in the chart. And so you just have to watch at those levels, each individual level, as we get to it. Is this going to hold or is it going to fold? And so then you can choose to scale or just be careful and manage your stop as we approach those levels. Wait a minute.
If you are long though, you should be deep in profit. I don't think I'd be getting in up here at all, but like you're managing risk at this point, and you're chilling.
Yeah. Great. Letting her climb.
If we break on the Q, it's about 7:30. I don't see it stopping.
Yeah, I think we're still pushing. So I've got heading to 61 here and then 94 above that. Hesitating quite a bit here at this resistance area.
That goes.
Yeah, I like basically wicked off it twice now. That could be a little bit of a problem here.
Hell of a morning though, guys.
Right? That's great. Yeah, we've seen some, there was a good bear play at open, and then it failed to get to the lower supports. It held up a little bit higher with some strength and then started breaking structure to the upside on the smaller time frames. And then the 15-minute got in alignment, which was what we saw overnight, was that pushed up, be able to pull back, pushed up. It was waving up in a bullish trend pre-market. And so that's what continued to open. But there was some aggression to the downside and chopping around before it really settled in here. I like it. She's going. Confident close on ES resistance would be good for ES to take it up to 6 and then 14. If we can get this confident close above 77 area, what I would look for to hold. Yeah, and NQ is kind of pulling ES along.
Looks like tech is just ripping.
Good for us.
1.75. 2.5% on Apple. Tesla over 3%. Microsoft red though. This is interesting.
Microsoft has had some periods of struggle.
Microsoft looks bearish as heck, honestly.
Yeah.
It was sitting right at support, 410, 411. Curious to see what happens with that.
A good area. All right, let's keep marching. Let's keep marching, little miss.
Said buy the dip, right? Exactly.
Right? That's been the play, man. This is the spring of buy the dip. I wonder how many people got wrecked today chasing the shorts after Friday's drop.
Yeah, it's just gonna keep going, right?
That's such a hard position to be in, because you see a day like that where there's incredible momentum to one side and taking out so many daily levels. Then you think that it's just going to fall to the bottom, but you gotta watch those lows, man. So the moving averages are like a straight trend line right now on the 5. Beautiful.
There hasn't been a pullback in a minute.
That's what a trend looks like.
Yeah.
There hasn't.
Oh, he actually said that over the weekend. Interesting.
Well, there you go.
Of course, he's saying buy the dip because he wants to make his money in his stocks, his options.
Take it long. Take it long.
Oh, here we go. Here's the 7:30 breakout, guys.
Yeah.
Can't you do it?
He's doing it. It's happening. Go, go, go. Yes, it's just sluggish. Yes, might see some resistance at 86. We break 77.
At this point, like, I really hope you're just managing buyers if you are in.
Yeah, agreed. Cheers to that. Good position to be in.
775 is a 50 fib, may have resistance.
Yeah, well, plus that's in like a key resistance area as well, just looking left from Friday. Right in there. So that's a confluence as well. We might encounter some issues there. We have CPI this week, right?
I am not actually sure. I haven't even looked at the economic calendar for the week yet.
We'll run it all down in the podcast today too.
Yeah, exactly.
Wednesday.
I'll let you and Matt tell me.
Yeah, we'll tell you. We'll hook it all up. Talk about the week ahead. Yeah, there's a little bit of economic data coming in. So none today or tomorrow though.
It is this week.
Yeah, Wednesday. What up, Gabber? Yes, is not able to break the 77 as of yet. Definitely a level that is arguing over, which makes sense because that was the key resistance, a notable resistance on Friday, where the bulls tried to hold for over an hour. The bulls maintained this area right between like 70 and 77, but then the bears ended up taking it. So this is an obvious level that could see that response on ES. But if it's following in Q, it's going to break it here and then it'll push to that higher level, which is then 86 and then 506. I don't see any break of the bulls yet on either instrument. Guys, that tea time sale is still going on. You can see the code there in the chat if anyone needs an account today. Hopefully y'all are just printing on the accounts you have, but if you need a new one, there is that code is still active today, so check it out.
Yep.
Now, those Propel accounts are a great deal right now. All right, bulls, let's get it done. Get it done. It'd be great if we could hit that target before we hop off here in 15 minutes.
Oh, look at that. Time has flown by now.
All right. Creeping along. Like it. I like this move.
I'm just sitting on the sidelines at this point, guys. I'm pretty much done for the day.
Yeah, you handled it.
You hit 200 points. I mean, what else are you gonna do, right?
Right. It's beautiful. The win.
Is it gonna go though? I'm really curious. It's stalling pretty heavily right here.
It's so extended, so it's tricky. Mhm.
I'm sure RSI was like through the roof on that run up.
Yeah, yeah. At the highs for sure. I think it's tricky because ES is really hesitating, so that could be slowing the momentum down for NQ.
If you want to be the guy to top tick the market, this is your area. If we break below 700, I could see a run down to about 650. If you are looking to go long, 650-ish is a good area to go long. Otherwise, I'd love to see a run back to 600 if you're not in right now.
Mm-hmm. Speaking of, resistance is trying to make a little move here. Come on, let's keep going. Keep going. Guys had a little bit of something to say there.
Mm-hmm. Not enough though. Not convinced. Not
No,
convinced at
we
all.
have to get it.
Not convinced.
No, not break structure yet. Go back to bed.
Is there a scenario where you would place longs above the high and wait for it to move past the resistance level? Would you put some buys at 745, 750? It would be tough for me to make buys up here, honestly. If we can close above this previous resistance 730, like I could see it working out, but the only issue for me, and maybe Becky can chime in as well, is we're due for a pullback.
Mm-hmm.
So I'd be hesitant after pumping 300, 400 points to get in. But I mean, you saw on Friday, it can't go any lower, and then it dropped another 600 points.
Mm-hmm.
So it's just for me. We're getting into the lunch hour. I'd probably not be looking to make a big move right now.
Yeah, I am the same. We're right underneath targets for a lot of people who've been holding this long for a long time. And so for me, this is a place to either just lock in your gains if you're long, or to wait and see what's going to happen when these targets are popped here in the next 30 points. So for me, it's too far extended. We're way beyond, like, managing stop would be tricky. You'd have to kind of snug it, and it'd be a momentum play because we are definitely bullish. So you just have to make sure you're careful because it could retrace at any moment here. For me, I like to think about what would happen for the people who caught the early entry. What would they be thinking? And there's a lot of places to take targets, to take profits here. And so I don't want to be the one left holding the bag at the top.
100%.
Yeah, I've done it, and I've regretted it. So
oh yeah,
learn from experience on that one.
Why do I keep buying the top?
It was going. I thought it would still go. It's, right now the bulls are in command, so I wouldn't be ready for a short either. But approaching these resistances, we see. ES is just really encountering a weakness here.
I do think if this is a hero short, this is the area. But it's hard to sell this.
Yeah, I mean, we're right underneath a lot of interesting area on NQ, so it's definitely the sales could come in ahead of time, too. Like, I thought we could push lower on ES on both of them this morning, and we didn't quite get there. So having a reaction but before the levels are officially tagged is something that absolutely the market does, which could be the situation right now with the shorts. Again, ES remains weaker.
Mm-hmm.
We'll see.
ES key level might be breaking down.
Yeah, it might. Mm-hmm. It couldn't take it out. That's what we see on the charts.
There's that 700 break, guys. Curious if it's going to hold or not.
Mm-hmm. Yeah, market man, it's so easy. Like I had a stop out mix in there too. Like it's like this market. I really thought she was going to go lower. I tried to get the lows and I lost my second short, and I did make it back on this long, but this was a tricky price action, especially in the beginning. And then when it starts running, it's also challenging here. So another day, man. We're just friends, market man and I. But I do love that name. Who knows, right? Never know. All right, here we go. That was a little pullback. Let's see if we can finish this with the targets up here. A little more.
Silver tricked me. My PT hit, but I'm not in it. Welcome to the market. Yep, welcome to the market.
Ooh, especially Monday market. Man. We'll see what today gives us, and then we can see what kind of pattern we get on this daily chart, because like a massive bear candle. Well, now what's it going to look like today? Is it going to be a massive bull candle, or is it we're going to encounter resistance here and it'll sell off for a little bit? We can get more of a smaller body candle. I think that could be highly likely for today's outcome. So another reason why I would be hesitant to hold the longs here, because I think we could definitely do some retracement given the bearish energy from Friday.
Yeah, totally agree. Got out right at the top. I'm going to buy a lottery ticket. Let's go.
Love that. Strong exit, man.
If you held all the way to 730, guys, like, congratulations. That was a great hold.
Yeah. I got one MNQ left. I'm holding for 761. So
let's go.
We'll see.
Got about 5 minutes left in the London session. We'll see if we got a nice little push going into the London close, going into the lunch hour.
Mm-hmm. We'll see here. I'm not going to let it come back on me much if it doesn't push it here.
I think if you get like a candle close below 700 on the Qs, just cut it.
Yeah. Yeah, I think I'm going to do this wick on the 5 that I just printed.
Mm-hmm.
This is coming for it.
Yeah, that makes sense.
Stop gain.
Stop gain, exactly.
Mary's trying to catch a top. I see you. There's some bears here.
Becky, you have a little bit of a schedule change this week, right? You want to let them know?
I did. Yeah. My psychology lab is always on Tuesdays at 2 p.m. right before power hour. But this week is going to be on Wednesday. Thank you for the reminder, Justin. We had an event in my kid's school all day tomorrow. So psychology lab is Wednesday this week. And then the technical lab remains the same as Thursday, as far as I know. So tomorrow, I think we'll probably just play an old one. If anyone wants to hang out and get a little psychology refresher in their minds at that time, please do. I think we have a little pile of them now that we can replay. But I will be live for that again with a fresh one this Wednesday, talking about exactly what we're in now, holding runners and
nice.
Yeah, seeing how we can kind of push ourselves and our leverage and momentum. And same time, 2 p.m. Eastern, the hour before power hour will be Wednesday.
I'm assuming you're out of those longs now?
I'm out. I just got taken out.
Okay.
Yep.
Your kids, is school not out for you guys yet?
Thursday's the last day.
Oh, okay. They've been out for a couple of weeks here.
Oh, well, that's nice. I mean, I have mixed feelings. Summer's gonna be interesting. We'll see how the kids do with me. Summer. Easy. But honestly, I'm preschool, elementary, and middle school, so our schedules have been all over the place anyway. So it's just gonna be I'll be home.
If you are in longs managing a runner, keep a big eye on this. It's like 650 area. If we lose that, it's going to run to 600 pretty quickly.
Uh-huh.
I'm not going to short this because we only have a couple minutes left, but shorts look pretty good right now.
Yeah, it's breaking down, I think. ES could not break that resistance, and NQ got very, very close to that. And so that could be the level that they just were interested in.
If you're looking at my chart, NQ tried so many times.
Yeah. We go, even if we break 600, 583 is real close there.
And guys, the podcast will be at 1:30 today, not 1 o'clock. We're gonna move it to 1:30. Just give ourselves a little bit of time to prepare and everything like that.
Mm-hmm. Yeah, but check it out. We're going to talk about the week and what we expect and what we're seeing, what we're looking at, what we're interested in. So hop back in for that.
We can talk about how Becky didn't hit the whole bear move, even though that's her jam.
I know. Oh, the pain. That definitely happened. Mm. That was a good push up, man. Out of
that was fun. I mean, that was a great morning overall.
It's good. I liked it.
Just like the last week or two, that the first 45 minutes was what is going on, and then we got the move.
Uh-huh. Good play.
I'm a firm believer of this 4-hour candle print tells us everything we need to know in the morning.
Yeah, it's very valuable information.
Bullish close, a lot of BS in the candle, but when it closed, game over.
Yeah. I like it. ES is sinking hard too. If that one keeps falling, like the first target here on the low side is 49,749.
Yep. Right back to where we broke out of. Makes total sense.
So weird.
And there goes 650 on the Qs. We're going to run to 600. So if you are short, just look for that 600 area.
Yeah.
And that's going to be it for us for the opening bell session. One loss, 2 huge wins afterwards. Hopefully you learned something. If you don't know why we took certain trades or why we held or why we cut, please let us know. We are literally here to help you. That is our job. Any final thoughts before we get out of here for about an hour and a half or so before we come back for the podcast?
No, just a great session. I think it was a really good lesson on being flexible and patient, and then just kind of staying fluid with the data as it's printing. So it was a good exercise and being real with price action. So a fun morning. I hope everyone locked in a little green or a lesson and is going to have a little break. If you can, take a break with us and move your body and maybe get a deep breath of fresh air. Good reset. And then podcast.
There's that run right to 600, guys. So as soon as we broke 650. So if you are short, lock those gains in. And we'll be back in about an hour and a half, something like that. See you guys later.
Take care, guys. Yep.
Blue Sky Technical Lab. This is Coach Matt, ladies and gentlemen, and I got a pretty interesting topic here today to discuss in the Technical Lab. Something near and dear to my heart, something I love talking about, love trading, love breaking down, love doing, and that is a good old-fashioned reversal in the market. And reversals can take a lot of different shapes and sizes. We're going to talk about the different ones. We're going to talk about the types of things we want to see as we go through a reversal analysis. But if there's one thing that I believe that most traders love doing, it's catching a reversal. The earlier you're in the reversal, the better opportunity, the better the reward to risk ratio, the better the probability. And so understanding reversal analysis is as much art as it is science. When you're talking about a confirmation of a trade, for example, it's all math. 2 plus 2. Does the candle get above the high? Percentage of the ATR above that level? Let's get E up and let's go. There's a simple process, mathematical equation when it comes to the execution of your trading systems. You have levels, breakouts, retracements, all these different patterns. But in general, I think one of my favorite patterns in the market, because not only is there a good reward to risk ratio perspective, but how I feel about it is really, really simple, guys. As a trader, I'm not just looking to catch a trade. Oftentimes, I'm looking to start with that in mind. Hey, let's just catch a trade. Let's go level to level. Let's do the same things everybody else is doing. But I love catching trends. And the very beginning of a trend is the exact point of the ending of the previous trend, and that is a reversal. Now, reversal patterns and continuation patterns are extremely similar to one another, and that's where the art really comes into equation. That's where the breaking down of the step-by-step process as you understand a reversal formation can be really, really, really powerful, because oftentimes in the early beginnings of a reversal are the exact same things as what is called a continuation pattern. And so you have reversal formations that reverse the previous trend, and you have continuation patterns that continue the previous trend. And so what I want to talk about today is specifically those patterns that form up the reversal situations. And so technical reversals are simply a pattern that changes that ends the previous trend and is the beginning point of a new trend. Whether you're talking about bullish reversals or bearish reversals, it's not like you got to learn completely different patterns for the bull reversal as you do for the bear. For every bullish pattern out there, you flip that chart upside down and there is an equal and opposite bearish pattern. So for every M formation, you have a W formation. For every head and shoulders, you have an inverted head and shoulders. For every V-shaped recovery, you have an inverted V-shaped recovery. Now, those are the core three. There are three core reversal formations that we track. You talk about V-shapes, W formations, and head and shoulders. You talk about head and shoulders, M formation, and V shapes. They're three core, three for the bull, three for the bear. There are fractal patterns within reversals, but we're going to talk about the core patterns. We're going to talk about where to take action in those core patterns. And I also think there's been some pretty decent case studies this week, including one yesterday, one on Tuesday, and one on this morning, quite frankly, that we can break down. And I felt like the reversal topic today was a very, very, very important topic to understand, because when we look at the overall market right now, a lot of this is about kind of your personal expectation. But when you come out and you look at the overall market from a little bit of a bigger picture perspective, you can kind of see how the market has been trending very, very, very well for a very long time. But what that's also done is gotten to the point where we're seeing general overextension set forth in the market itself. And when we're going through a little bit of general overextension, a lot of times in the backdrop of that general overextension, you see daily patterns form up that are more consolidation based. And I talked about this earlier in the week in the power hour, but as of right now, I got the NASDAQ and the ES as a daily consolidation pattern. And as you're going through a daily consolidation pattern, what you see oftentimes on the intraday is neutral ranges. You see these neutral ranges set forth where the market's going to go up to resistance, back down to support, up to resistance, back down to support. And as the intraday plays out that way, goes down to support, up to resistance, down to support, up to resistance, what that creates is the backdrop of neutrality on the actual longer term side of the equation. And so when you're looking at neutrality in the ES, and I'm talking neutrality on the intraday side of the equation, the daily chart is still in a bullish uptrend on both the ES and the NQ, but we're starting to see overextension on the daily chart. We're starting to see hesitation on the daily chart. We're starting to see a little bit of consolidation on the daily chart. We're starting to, I mean, my goodness, today we got Broadcom. First AI name in weeks with a negative impact on earnings. First time. And in that first time, we saw rotation go from NASDAQ to the Dow Jones. We saw rotation go from technology to finance, from technology to industrial, from technology to, there was another healthy sector we were seeing rotation, finance, industrial, and healthcare were the three. So we saw rotation a little bit from the very top of the market to a little bit of the bottom areas of the market to shore up that. By the way, that's a pretty standard bullish like condition where top areas of the market see rotation, profit taking, and they flow into bottom areas of the market that have not seen a lot of pump in the last little bit. So we're seeing a little bit of those early sector rotation models play out right now. And as such, again, what we've seen kind of impact on the top end of the charts, and I'll just kind of show it to you here and toss very quickly. But when you look at the top end, well, what are we starting to see here? We're starting to see a little bit of slowing momentum at the top. We're seeing a little bit of consolidation here. We're seeing battles here that we did not see in the early innings of this wave. We saw battles here that we did not see in the early innings of the wave. And so you're starting to see the top end get dialed in on the overall S&P 500. You can say that same thing on the NASDAQ. And what that's done is create a neutral condition in the backdrop of the intraday charts that we love to trade and love to stare at. And so I just felt like today talking about reversals, because as a swing trader, reversals are a little bit rare. As an investor, reversals are rare. They take a lot of time to really dial in. When you're talking about reversals on an intraday side of the equation, when the daily chart is going through consolidation, we could get these things multiple times every day, quite frankly. And so that's kind of what we've seen play out. I felt there was a pretty good topic to discuss here today. I also want to talk a little bit about RSI and MACD and talk about it through the lens of divergence, because in a couple power hours earlier this week, we had a conversation on divergence, and divergence can be a very powerful 1-2 punch. When you're looking at the reversal play out and you're trying to determine, is this a bullish reversal? Is this a bearish reversal? Or is it a continuation pattern? And we're having those technical debates in our head. I'm pretty sure all of us do. Every one of us, if you have technical debates in your head, let me know in chat, because I certainly do every single day. Is that a reversal? Is that the clean level? Is that this? Is that that? Let's go through the process. Well, one of the things that can help me understand the quality of a reversal versus continuation is MACD converging or is it diverging? Is RSI converging or is it diverging? What do those secondary indicators tell us to help us understand the context of price action? And Jaw, I'm right with you. Those voices, we got the angel on the right shoulder telling us one thing. We got the devil on the left shoulder, and our, trading is really done between the 6 inches between those two voices, right? You got the left shoulder, you got the right. You can also put it like this, Jaw. On the right-hand side, you got your creative minds. You got the creative side telling you certain things. On the left-hand side, you got the analytical voice in your head telling you certain things. And that's what you're trying to comprehend between that 6 inches between those ears, is to understand the context of that analytical versus creative conversation. And so Market Mamas, i.e. Coach Becky's the one who gave me that little thought up there, but it's that context that the indicators can give us to help us understand what are we really seeing out there. Because a lot of times in reversal, there's a shift in momentum. And when there's a shift in momentum, certain traders are going to see that through the lens of bullish continuation. Other traders are going to see that through the lens of bearish reversal. Where's the truth in that? Because great technicians can disagree. Where's the truth in that? Well, indicators can help us understand that context. And so I definitely want to talk a little bit about divergence as well here. And so when I'm looking at things technically that make up the hallmarks of reversal analysis, there's certain things that occur from a technical perspective that makes you start thinking about reversals before the reversal even occurs. And I know every single one of you have done that. I certainly have. We have our level, we have an opinion at the level, and we're like, yep, that's going to reverse at that level. Well, that's your opinion. Your opinion doesn't matter to the market. And I know that's tough to hear, but guess what, guys? The market doesn't care about my opinion either. It doesn't care about any one person's opinion. The market's too big for that. And so it's, you have an opinion, but does the market share your opinion? That's what we have to really kind of focus on, is understanding the process that the technical analysis goes through to help us get to that ultimate confidence on that reversal. Because you're in a reversal, guys, you're going against the trend. You're saying this is the end of the trend and it's the beginning of the next trend. That's what you're saying. Whether you're right or they're wrong, the market's going to have a say in that. Well, everything that goes into a quality reversal, you don't need everything, but these are the things that you typically like to see to give you that confidence in a reversal. Number one is, and I don't have it here, but I will just say this as a day trader. Number one, high quality level. Like you're typically see reversals. They typically don't come out of nowhere. They typically don't just happen through a catalyst, because in a catalyst event, you typically see what we call a V-shaped recovery. And V-shaped recoveries from a trading side of the equation, I don't want to say it's a new pattern, but it's certainly a much more popular pattern over the course of not just, the headlines we get on an intraday side of the equation due to the Iranian conflict and presidential updates on that side of the equation, but it's been a pretty compelling pattern ever since the pandemic, quite frankly. And so before the pandemic, I really felt there were two very important reversal patterns. You had the M formation and its cousin, the W, and you have the head and shoulders formations, both the head and shoulders and the inverted head and shoulders. Post-pandemic, we do see more V shapes. And as algorithms become a more important factor for the market, we see more V shapes. And as AI platforms start to come on and the speed of the market increases even more, we will most likely see more V shapes. And so the V-shape reversal is typically a reversal that is driven through a catalyst. Whereas the other two, the W and its cousin, the M, and the head and shoulders variety, those are more traditional, more standard technical type situations that also have some time factors to them. V-shapes quick, the other two not so quick. And the reason is because to create a high quality reversal, It's not just about your level. Your level's number one, absolutely, but it's not just about your level. It's about the momentum coming into your level. What's happening with trend momentum coming into your level? What's happening with the pivot formations within the backdrop of that reversal? The pivots, momentum's going to tell us a part of that story. Pivots tell another part of that story. And so when we're talking about a high quality reversal, such as an M, a W, or a head and shoulders, there's going to be a time factor in that because you have to have pivots. And pivots have minimum time durations to them. For example, you can't have one candle equate to a pivot, or every single price point in the market would be a pivot, and it would drive us more crazy than social media posts. And so we want pivots have minimum durations to them. You have to have a minimum duration of 3 bars within a move to create a pivot. So these are the early stories when you're talking about a reversal, is you're talking about understanding the concept of momentum. So it's all about the level. That's number one. Where's your level? Is it a multiple time frame level? Has it been tested many, many times? How high quality is that level? Number one. Number two, what's the momentum going into that level? Are bears losing momentum coming into a support? Are bulls losing momentum coming into a resistance level? That momentum is going to tell a little bit of the story. But at the end of a technical day, nothing tells the truth like a pivot does. Because when you talk about a bullish uptrend team, pivots increase, resistance gets broken constantly in an uptrend. Resistance is the number one thing that gets busted up in a bullish uptrend. Resistance here gets broken. Resistance here gets broken. Resistance here holds. When resistance holds, that trend is over. You should not be relying on that previous trend the very second resistance holds, because it's no longer part of the equation. Once resistance holds, you are now firmly entrenched in some degree of neutrality, and that some degree of neutrality is going to depend on whether it's a bullish continuation or whether it's a bearish reversal is going to be what happens next. And so in the early innings of reversals, it's really about momentum, and it's really about understanding pivots. And so when you look at momentum team, momentum can be looked at through a variety of different lenses, obviously. The type of momentum I'm talking about right now is not necessarily candlestick momentum and catalyst momentum and bar by bar trading and high bases or flags, or I'm talking about trend momentum. When you start to see waves decrease in their ability to go up, you're seeing momentum shift. And so as if a market goes up, say 20 points, and then goes up 10 points, and then pivots at 10 points, you're seeing momentum shift. And so when you're looking at momentum, you can track this through 2 different varieties from a trending perspective. Number one, you could look at it from a breakout to the next resistance. So a market breaks out, how far does it run above the breakout channel? If in wave one, or in example one, you run 2 points and then you run 4 points on the breakout, that's a sign of bullish continuation. So if you have increasing momentum going into a resistance level, you're not exactly going to be looking for a reversal there, team. The first thing you're going to be looking for is a bullish continuation pattern, because bulls have momentum. You never want to fight that momentum. You never want to go against the market. You always want to trade in the direction of the prevailing momentum. And you definitely always want to trade in the direction of the trend. And so when you're looking at the momentum, the first thing you look at is kind of resistance to the next level of resistance. How far can it run before it gets tired? And I think that's a great point, Nacho, because it's also about understanding the consistency and the volatility there. Are we dealing with a sprinter, and we got to be a little bit more aggressive, or is this more a methodical walk around the park type situation? You know what I mean? And so momentum is going to be a very interesting situation, but you look at it from resistance to resistance to resistance. And if resistance is expanding, those bulls are feeling froggy. they're feeling froggy. Whereas if momentum starts to contract, you're seeing the opposite impact. They ran a sprint, Nacho, and they got tired. So for example, I'll give you another analogy. Team, if you got up outside your chair staring at these amazing computer monitors that all of you guys stare at, and you went outside and we all touched some grass for about 5 minutes and we ran a mile as fast as we could, would we get a little tired? Would we want to put our hands on our knees a little bit? Would some of us maybe want to take a nap? Like you're going to get tired. And markets get tired too, guys, because markets, we're looking at the collective emotion and pricing of everybody in the market. So as the market runs 4 points and then it runs 2 points, I'm not going to suggest that the market now has the ability to run 2 points when it just showed me it can only run 2 points. And so the market shows that to you through the momentum shifts. And so you have increasing momentum, which puts you on the radar for bullish continuation analysis. And then you have the opposite impact of that, which is slowing momentum, which gives you the understanding that the market's getting exhausted. The type of momentum we want to see as we're coming into our level that we want to see through a reversal lens, we want to see slowing momentum. Now, the second way to determine momentum, again, indicators can help us understand the concept of momentum, but I wouldn't look at indicators to give me the initial read of momentum. I always want to do that from a price perspective. I don't want to pull up secondary indicators just to make sure that, well, what does my indicator tell me about momentum? You can read momentum on the chart. You do not need an indicator to tell you about momentum. It's very clearly established on the chart. You can see it through through resistance levels expanding. You can see it through the natural Elliott wave cycle of wave counting, and from the support pivot to the resistance pivot. You don't need a secondary indicator to tell you what's happening with momentum. But what the secondary indicators can do is confirm your natural read of the momentum. So if we're talking about coming into a major resistance level on the intraday side of the equation, and I have an opinion there, I want to make sure that we're getting a decreasing momentum environment to show me that those bulls are getting tired, that those bulls can't carry anything any longer. And then when it double tops here, you start to see the ending of the trend. And so when you're talking about momentum is that early warning sign to helps us understand if the level is going to give us some reversal analysis, or if that level is going to give us some continuation. Increasing momentum going into a resistance level, I'm going to be looking for bullish breakouts. Decreasing momentum going into a reversal into a major level on the intraday, I'm going to be looking for reversals at that point. Right now, I'm looking for more reversals than anything on the bullish continuation side of the equation or bearish continuation side, because the market hasn't proven it can break out on the daily chart. And if the market cannot prove it can break out on the daily chart, what am I thinking it's going to break out on the 1 minute chart for? And so until this market breaks out, I kind of feel like reversals are going to be a really good pattern. And that breakout might take 3 days to occur. That breakout on the daily chart might take 3 weeks to occur. I don't know. It's our job to trade what we see and not complain about the environment we have. So once again, you have 3 basic reversal patterns. You have the double top, double bottom. That's the M and the W. You have the head and shoulders, which is the head and shoulders or the inverted head and shoulders. And then you have the V shape and the inverted V shape. Now, when you're looking at the double bottom, double top, guys, it's very simply put a holding of resistance or a holding of support. Once support holds, once resistance holds, and we have equal pivots, we are absolutely hunting the double bottom or the double top. So if the pivots in a reversal are equal, this is a traditional reversal type situation. If the pivots in a reversal are offset, it's either a head and shoulders or a V shape. And so when we're talking about the cleanest reversal patterns out there, they're going to be the ones that pivots tell a very clean and compelling technical story. Because if it gets dirty from a technical perspective, it's going to take a little bit more time to clean that up. And so when you're talking about the reversal situations like a W formation, what you typically see is the market's coming down, 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 and typically it has a little bit of momentum. And let's say we have an opinion down here where you have a major support level. Well, you have the contract goes from all the way up here to all the way down here, and then it starts doing this number as it gets into support. Well, as you start to see that play out, where the waves get contracting, and the expansion of momentum from the breakout of support to this support level starts contracting, that's the sign of momentum shifting. And that's very important, guys, because if the momentum doesn't shift here, you're going to see something where it's more like this, where it becomes a little bit more difficult to process, I would say. And so as you get the momentum shift coming into a key level, at this point, it's really about understanding how that story gets told. And so that first pivot that establishes the support level, that's not this level we're trading off of, guys. I know some of you love to put a limit order down at a level that you have a strong opinion on. I'm not saying anything negative against that. I'm just saying that's not a reversal. That's not a reversal pattern. That is, you have an opinion at a level and you're trying to maximize your reward to risk ratio and you're giving up probability to do it. That's a different philosophy. It's not a reversal. You're doing it a little bit different. And again, I do it too. Everybody does it. You have an opinion at a level. You want to maximize your reward to risk ratio. And as you maximize your reward to risk ratio, you're going to give up your probability. Because if you're going to have a cheap risk, big return opportunity, you never have probability on that. That's 2 + 2 when it comes to market mechanics. Every time you have a higher probability in the market, you're going to have a little bit less of return. You're going to have a less return, bigger reward to risk ratio. Anytime you have a low probability situation, you typically have a little bit more return to get, but you're not going to game the system that is more effective and efficient than you are, team. And so if you're putting an order at a level, again, I'm not trying to talk down that in any capacity. I'm just saying that's not a reversal. That a reversal is tracking a reversal formation and waiting on confirmation on that reversal. And so and you only get a proper reversal with pivots. And so the first pivot that gets established, that's just telling you that support level is a viable, great support level. You come back up, and then the very second it holds that double bottom, at that point, that trend's over. The previous trend is over, and we have a new trend. But we do not know what the next direction is yet. Because let's say something like this occurs where the pivot holds, comes back up, but then constantly decreases resistance. If resistance is constantly decreasing, you don't have a reversal, team. You have a bearish continuation pattern. It's the pivots that tell the story of the difference between a reversal and a continuation pattern. So support holding is kind of step one in the formation of a reversal. Step two would be to understand what happens at resistance. Does it come all the way back up to the previous area of resistance? At that point, you have equal pivots at resistance. You should be looking for bullish breakouts. You should be ready for any time you break back up, because at that point, you are starting a new trend. Whereas if you decrease resistance against the backdrop of that reversal, once again, bears still have control. It's the pivots who tell us who has control. And as the bears had control throughout the trend, and then they had control throughout the pattern, they should have control in the next trend as well. And so it's very important for us to see that come back up into resistance and then break out of resistance, because the breakout is what establishes the trade, and the breakout is what establishes that next trend. The head and shoulder formation is a little bit different, because the thing that occurs is you get your slowing momentum in the trend, and then it increases support. Once it increases support, you now see it through the lens of bulls have control. This is the first increase in support. Now it's just a matter, and I heard Coach Breezy talk about this the other day when he was talking about the neckline. When you get above the neckline, that's where the real trade is. And so if you're front running, you certainly like an increase in support in a front run, and that would be a viable pattern to front run an ultimate reversal. I like that a heck of a lot more than just buying a support bounce in a downtrend. And so you see that increase in support. That's a really good situation to front run that little move. Whereas the second trade is when it gets above what's called the neckline. And the third pattern that we talk about in reversals is the V shape. Now, the V shape is a newer pattern in the market. M formations, W formations, head and shoulder formations have been around for 100 years. V shapes are a little bit more new to the way we navigate the financial world. The V shape recovery is the right side of a head and shoulders formation without the shift of momentum of the left shoulder. So remember, a head and shoulders formation goes left shoulder, head, right shoulder, break out of the neckline. So literally tracks head and shoulders, knees and toes. Let's go. Let's sing some songs. But when you're looking at a 1-2-3 reversal V-shaped formation, you don't have the shift of momentum. Remember, these are catalyst-driven patterns on the 1-2-3 V-shaped recovery. And so you don't have any momentum shifts. It comes into a level, and all of a sudden it increases support and it lifts off. And so the 1-2-3 is a very similar to a head and shoulders formation without the momentum shift in the previous trend. Now, let's go talk a little bit about some of those reversals that we saw earlier this week. Now, when we're looking at kind of earlier this week, team, I kind of felt like there was a couple very interesting reversal situations that were brewing right here, and then obviously as we see up here at the top side as well. Now, when you're looking at this overall neutrality earlier this week, let's kind of look at it right here. When we're looking at this earlier neutrality this week, guys, this is the level right here at the 75-76 level, which is a very important level for the S&P 500. It was a breakout level today. It was a reversal level earlier this week. It was a breakdown level with a tremendous amount of chop yesterday. It's a level that's been playing out all week long. On the flip side, the top side of resistance right now is 76.30. And so you had a range for the most part of this week between 75.75 and that 76.30 level. And markets for the better part up until today, and really kind of a little bit yesterday, just up to resistance, down to support, up to resistance, down to support. And I felt like here, this reversal here, more on the 1-2-3, comes down, hits support, holds support, no momentum shift to the left side here. Let's get a little bit bird's eye view right there. So you see how this one here is just down, all the way down, straight down like a rock, down to support. Now, the first thing that we typically see in a reversal is a shift in momentum. If there's no shift in momentum, you're most likely going to see a V shape is what you're most likely going to see. And that's exactly what kind of played out here. There's no pivots here, team. That's consolidation. There's not an official pivot there. Remember, reversals have pivots. V-shapes are volatility events that are driven through catalyst. There's no pivots here. And so you hit support, consolidate, break up. That's your first signal. The pullback would have been your second signal. And then you see that momentum back up into resistance, come right back down. This second situation right here coming in, I believe it was on Tuesday of this week. This situation right here was a very, very good reversal. And it told the entire story very, very well. For example, you have a situation where you're coming down with some momentum. So you see kind of this level right here. So this is your initial move. This is your secondary move. Do you see how the second box is less than the first box? So when you're tracking momentum, you can either track from the breakdown to where it gets extended, the breakdown to where it gets extended, or you can track the wave itself. The wave goes from resistance to support. And so if you're just take one thing away from this conversation of momentum, there's two ways to track it just from a pure price perspective. Obviously, indicators and other things out there as well, but either the wave, meaning resistance to support, or the breakdown, breaking of support to where it gets overextended. However you parse it, whether you're parsing it through the breakdown to the extension, the breakdown to the extension, or you're looking at the overall wave, I think we can all agree that this is slowing momentum as we come into a key level of support. And so as we're coming into that key level of support here, this is where I personally start getting excited about reversal type situations, because as you come into that key level of support, I already have the momentum shift, which tells me that the bears are losing momentum. That's what it tells me. Bears are losing momentum coming into a key level of support. If I'm a bull, I like that. I like it a heck of a lot more than this type of situation where it's all a volatility nightmare, where it's a speed to the downside, consolidation without any pivot confirmation, without giving you any aspect of the story. It's just volatile. And people are saying, well, I think it's going to go up because we're closer to support, or I think it's going to go down. That's not system trading. That's not rules-based trading. You have an idea in your head and you go do it. That's not technical trading. This over here, slowing momentum, double bottom, double top, breakout, that is a reversal. This nice little W formation right there after the slowing momentum, confirmation candle, catch the 9 EMA on the 15-minute, and let's giddy up and let's go, go, go. That to me is a high quality reversal. This to me is a volatility nightmare. The difference is pivot formations. Pivots tell the story. Here, there's not one pivot other than the pivot at support. The next pivot is the increase in support. There's not a resistance pivot here. This is just volatility. This is a clean story because pivots. So one was a volatility nightmare. The other one was one of the cleaner situations we had. What was the telltale difference? They both had the same level. They both had heat coming into them. The difference was the momentum shift. You had a momentum shift coming into that level. And when you have a momentum shift coming into that level, the bulls are going to spot that literally without binoculars, without the sight. I shut your eyes off. You could trade that pattern. Literally, that tells such a compelling pattern. Now let's fast forward to kind of later on this week. So let's just kind of fast forward here. This is a bearish continuation. Why? At no point did you ever see an increase in resistance. And guys, we made that trade yesterday in Power Hour. Becky made that trade. I made that trade. We made that trade because we felt we were getting a reversal. Ultimately, the 15-minute chart never got back up into resistance, held firm, lowered its level of resistance, came right back down. So we were trying to get in front of that. We were trying to front run that larger reversal based on the lower time frames, but ultimately never reversed. We were just being aggressive off the low point. Again, I'm not trying to say you can't be aggressive coming from a low point. We were literally doing it yesterday. What I'm suggesting is it's not a reversal unless you have the pivots tell you it's reversal. And quite frankly, the only thing we had here was a little bit of slowing momentum, and we did get that quick reversal. Now, again, I'm talking on a 15-minute time frame. There was a high quality reversal in the 2 to the 3 minute time frame, but I'm talking a little bit more of the 15-minute chart, 5-minute chart, a little bit more my standard style. Now, you come into today here, and I felt like today was certainly a reversal, but there's one thing to add in the conversation here today on this high quality reversal today. Time in pattern. Let's talk about that very quickly. why is time in pattern so important? Because where V-shaped recoveries are very, very difficult to trade. Time in pattern is it turns reversals into consolidation trends, into neutral trends. And when they break out of those things, they become pretty stinking good, quite frankly. Because the longer the time in a reversal, it plays for the bulls. Or it like at the top side, the longer the time in a reversal at the top side, it plays for the bears. The longer the time in a reversal at the low side plays for the bulls, because the bears had the edge coming in. They had the edge. They saw a shift in momentum. And now that shift in momentum here from what we were seeing earlier in the session yesterday, look at how it kind of flatlines here. Support holding, support holding, support holding, support holding. And what occurs there, team, is divergence. See, divergence doesn't happen oftentimes in V-shaped recovers and volatility events, because oftentimes the speed is too much. And by the time the move is done, the indicators haven't even caught up to that. But when you get quite a bit of time in the reversal, you can start to see other things get dialed in there as well. And one of those things that is an early sign for reversal analysis is the concept of divergence. Now, what divergence is and where it plays a role in reversals is when we have an identification of a reversal pattern and we go to our secondary indicator to confirm that reversal. Divergence helps confirm the reversal, because most of the time you're looking at indicators, you're looking for indicators to basically reaffirm your opinion of price. In a reversal situation, price is coming down, 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 but in divergence, you're seeing it start to go up, 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 because it's confirming the momentum shift is what you're seeing. That's what divergence really does, is it confirms that momentum shift to a certain extent. And so what divergence is when price is coming down, but the indicator starts going up. And it's really when you're looking at support. So support pivots are pressing down or equal. So divergence is support is pressing down, support on your indicator is pressing up. And so here you got support pressing down, support pressing up. That's putting a lot of pressure on those bears and for the bulls to take the edge there. And so divergence is an early warning sign. On bearish reversals or on bearish divergence, price is pushing up, resistance is going up, but what's happening with the indicator? It's going down. What's happening there, guys, is the momentum is shifting on the price and the indicators confirming that the momentum is shifting. You don't get divergence without a shift in momentum. And so if you're having a difficult time reading the natural state of momentum on the price perspective, which can be a little bit difficult because there is some degree of interpretation there, pull up your indicators, pull up RSI, stochastics, MACD, whatever your favorite indicator is, because divergence works pretty much the same on all of those core indicators. If resistance is going up in price, but the pivots in resistance are going down in RSI, that is divergence. Same thing happens on MACD. As MACD price is coming down, MACD histogram is already shifted, showing you that clear shift in momentum. And that clear shift in momentum is extremely important for me as a technician, because I might not be the earliest in the trade, because I got Jesse Livermore living in my head. I like confirmation. I like confirming patterns. I don't like being too aggressive inside pattern development. I like being aggressive as we break out of patterns. And so a lot of understanding the reversal is understanding the story that we're seeing play out there to put us in an environment where we're ready to take advantage of the break or the breakout when it occurs following the divergence. So you see divergence over here, price pressing down, indicator pressing up, ultimately price breaks up. Divergence here, price pressing down, support pressing up, ultimately a reversal, break back up. And so regardless of the indicator that you're looking at, divergence can be a very helpful tool in helping us understand the nature of these reversals. So let's go to the first one here, and let's just look at it from an indicator perspective. So let's go over here and let's look at RSI first. Actually, let's look at let's look at RSI first. All right, so price is coming down, 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 down. So far as price is coming down here, the indicator is doing nothing but confirming that. Now, as price comes back up, you got a slight increase in support right here. You have a slight increase in support right there. There is no divergence here. RSI told a very clean story of the price, but there is no divergence because the price and the indicator were doing very similar things. Well, let's look at over here in a standard reversal. You have a momentum shift here. So from right here to right here, what do we see on the indicator? We see it flat. As it pivots here, what do we see here? An increase in support. So when you're looking at divergence here, guys, kind of looking just kind of right here at RSI, right here, flat, price is coming down. Right here, pivots are equal, pivots up. That shows you bullish divergence. And when you see bullish divergence, you got to be ready for that breakout, because that's what it's giving you the sign about. Is it's giving you an early sign, because the divergence happens inside the pattern, guys. And so you see how we're going through that double bottom, double top. Confirmation is all the way over here. So you're going through a double bottom, double top, and then you see that first breakout. Well, we're already at 45 on our side by the time that first breaks out, which means when you see that early sign of divergence in the reversal here, yeah, can it still break down? Of course it can. Price can do whatever it wants to do. But what does the indicator tell us? What does the price tell us? What does the momentum tell us? It's trying to tell a story. And that story is not just what we like to fixate on sometimes as day traders and just look at the micro level and the micro analysis and the one candle and be so fixated on that one candle that we're missing the story that the market is trying to tell us from an overall technical perspective. And so I wanted to talk today about reversals for a couple reasons. We're living in an environment where we're going to see, in my estimation, more chop, more neutrality on the daily chart, more of a cash flow environment, in my opinion, in the leadership of the market as of right this very second. And so I don't expect a lot of downward pressure, honestly, unless some other catalyst comes out. I expect a little bit of consolidation at the top end of the market here. And as such, on the intraday side, when you see the daily chart get extended and the daily charts start to go a little bit neutral, that creates a lot of compelling intraday reversals to track. So I wanted to have that conversation here today in the lab. I hope you guys had a wonderful, wonderful time in the lab here today. I hope you guys learned a lot about how I see reversals and how divergence plays within the backdrop of those reversals as well. What does ServiceNow tell us? ServiceNow from a divergence indicator perspective, it's confirming. It's confirming, Vodka. It's confirming bullish uptrend, increase in pivot. And so it's converging. There is no divergence as of right this very second when you're talking about ServiceNow. Divergence doesn't happen oftentimes within the developing trend. It happens typically at the end of a trend. Jaja, I need you to digest AVG earnings when you come back. We'll talk about that in Power Hour. Jaja, absolutely. I certainly have a take on Broadcom's earnings. One of the reasons, Jaja, I keep saying I expect consolidation at the top end of the market, that's a little bit of Broadcom's earnings. No lie. That's a little bit of Broadcom's earnings, because that was the first earnings report we've seen on the AI trade out of a catalyst stock in the AI trade to give us any degree of hesitation on the AI trade. which is the dominant trade in the market by a country mile. And so Broadcom gave us a little bit of an early warning sign there. By the way, I do not have a negative take of their earnings. It's very difficult sometimes to achieve high bar expectations in the market. And I would certainly say Broadcom is suffering due to that. But we'll have that conversation in Power Hour, and we'll be back with Power Hour and more from BluSky after we get redialed in and we come back with an awesome conversation for Power Hour. So team, if you need, this is a great time to go up and refill that water and come back. And when we come back here in about 5 minutes, we'll have a compelling and awesome conclusion to BluSky TV today with Power Hour. Thanks, everybody. Stay profitable. We'll be back in 5.
Hey guys, welcome to Psychology Lab. It's Becky here. I'm happy to be here with you guys. How's everyone's day? How's it going? Just gonna type in the chat and say hello. Welcome back. How's everyone? Guys, got some good trades this morning. It was a very interesting morning. With the little pullback and then some longs. The market is bullish, remains bullish. There's a little pullback. Anyway, always interesting, right? Okay, well, let's talk psychology, huh? Because that's a key part of our growth as traders. I have experienced, and I know that's true for a lot of the traders. Nearly all that I have encountered and worked with have been everyone learns a technical skill and then they have to figure out kind of the deeper layers of what consistency and success looks like after you get a fundamental lockdown. And so that's kind of where we're at, and how I kind of approach these psychology labs is what topic can we discuss that really will help us all be more productive and more, lock in that green on the charts. And so that's so important. And so today was actually a suggestion from one of our traders, Mary. She is in the live streams regularly. She's in the Discord here at BluSky. And so I really love when I get suggestions, because then it helps me figure out where we're at in our headspace, and what can help you will help me, will probably help everyone else. It's like, when you're in class, this is early years in trading are equivalent to college to become a successful, profitable day trader. And so when you're in the early phases of that, like, it's strongly encouraged to ask questions and kick things around and say what's on your mind, because, that old adage is true that if you're thinking it, probably a lot of people are thinking it and working through it on their own. And I am very grateful to be in the position to be able to have these conversations with you guys and just talk about what is happening in our experiences as growing day traders and how we might be able to lock in. So I hope Mary pops back in today because I love this topic she brought up. So the conversation today is going to be about understanding ourselves, like knowing who we are and how we can make our trading work for our best good, right? Our most successful outcomes, and allowing it to play to our strengths and diminish the implications of our weaknesses, sort of, building a system that really works with who we are so that we can embrace it and fully achieve our highest potential. And so I think that there's deep layers to this. Like, when she made the suggestion, I was all about it because there is so many layers that we can unpack with this that are kind of driving our energy that we bring to the charts. And so let's, I love getting into the layers of what is going to cause significant change for us. So let's do that. I mean, today is it's a blue sky psychology day. And so, early in the week is a great time to have these conversations as well. I think that that's all good things will happen from this. So let's do it. The question that changes everything. Okay. How many of you have found a strategy that worked only to find yourself unable to consistently follow it? Anybody? Because I have absolutely found consistent strategies that work well. And right, they are established. They come from mentors. They come from profitable traders who have been locking in greens for a long time. And so when we see those opportunities and we see other traders making money, you think, I can just adopt that strategy. I can backtest it. I can understand it. And then boom, profitability, right? That's the goal. That's the mission. That's what we are pushing towards. So what's the deal? Why are we not all profitable if there's, multitude of consistent strategies out there that bring profits? Well, where is the breakdown, and how can we target that so that we can instead pivot and grow and achieve greater success? And so I think that the common assumption, which is certainly how I approach trading in my early, years, is that when my strategy was really fine-tuned, when I really understood VWAP and moving averages and supply and demand, that's when the money would flow freely and endlessly and with multiple zeros on the end. But that's not always how it goes down. Okay. That's why we have the psychology lab. That's why these conversations exist in the trading world, because it's not exactly how it always goes down. There is a deeper truth underneath of that. And that a lot of times a strategy is only as good as the person executing it. And if it feels out of sync with who you are and how you behave, how you see things, how you're trying to use risk, put risk on, take risk off, if that is misaligned, then it's always going to be swimming uphill, paddling uphill. It's going against your grain. And so it's not going to be as fluid as it could be to have beautifully growing profits, right? That makes sense. So you can have a profitable strategy and good risk management, which is a part of that strategy, right? It has to be. You can have a strong understanding of market context and how it moves and how value migrates and what it looks like to be in a trend. But then the sabotage comes in. That's where everyone kind of can fall on their face, right? If you don't always act consistently in alignment with that plan. So what's the problem? Our psychology is fighting the system can absolutely be a situation where who you are is countering what you're trying to do. And so then it gets very, very messy. And so what I want to talk about today is basically this. How can we adjust everything, understand ourselves at the deepest levels, and then make it all cohesive so that we can lock in? The unconscious is powerful, right? I don't know if you guys have done much research into this or looked into it. I'm going to talk a little bit about some research today, but the subconscious is a boss inside of every one of us, right? It's a positive energy. It's a force underlying what we are doing. It kind of helps to run and manage our trades. And so it has to be given credence and understanding and energy for that. Now, Carl Jung is an important person out there in the world who speaks to stoicism and personal growth and psychology. This quote from him: until you make the unconscious conscious, it will direct your life and you will call it fate. So that is basically getting to the heart of like, there is deeper layers of it, and we can choose to dig into those and try and understand them as part of our subconscious, unconscious, so that we can start to have some power and work with it instead of fight it. Or we can just, call it what may, call it fate, call it just what's going to happen. The chips will fall where they may. Well, I don't know. Maybe let's unpack that a little bit and see if there is something underneath of that we can have, some potentially greater control over, right? I think a lot of traders will lean into fixing results by refining their edge. But what if the real work is more internal, right? What if that is what changes everything once you get your strategy locked in? I think that that's true. And I think that's why we've had some really good conversations here at the Psychology Lab related to that. So, hey, Fatima, nice to see you. So today we're going to dig into that, how the unconscious psychological patterns can shape our decisions that we encounter on the screens. Mary, I already gave a nod to you, girl, because the subject is brought to us by you. So thank you for the suggestion. I'm super happy to have had it. I really actually very much love suggestions for the Psychology Labs. So cheers to that. So that's what we're going to do. Actually, exactly that is we're going to explore our subconscious, unconscious psychological patterns that are having a large contributory factor to our decisions when we are at our charts, and how we can work with that to be more powerful. Okay, so let's start here. The trader you think you are versus the trader you actually are. Is that something you guys think about? Like who we believe we are to be, but then the reality sometimes speaks a different tune. When we look at our journal and our outcomes, the end of the week, we review what happened. So let's unpack that, right? Most traders know goals. We know account size. We know where we're trying to move through time, right? Through our energy and what we're bringing to the charts, what we would like to build as day traders. We also know setups. We know, buy and supply. We know, mean reversion. We know breakout trades. You have favorite setups. You have A+ setups. You have B setups that you just have to work through. And then we know preferred time frames. Like these are things that we've locked into. We have studied. We back tested. We have notes on. We have an understanding of. So that is concrete. That is something that we feel like we can lean into. But what about? Here's where it gets different, right? Here's where the variability comes in, and not every trader even thinks about these things because you don't know that you need to until you know that you need to. But a lot of us don't think about early in our trading career that what our emotions will be under pressure. When the market starts moving, it starts going against you, your P&L is dipping, you are encountering some resistance and some potential struggles on the charts. What's going to happen with your emotions? Where is your underlying programming going to go to that is going to feed how you manage that trade? A lot of times this can be kind of deep wounds. And so like parts of our life that have nothing to do with trading, but have poked at our internal sense of worth and identity and belief in where we're going and status quo of where we've come from. Well, we understand money to be worth and how it can be used or not used and have to be squeezed coming into our world, what it feels like to be under financial pressure. All those things, I don't think that a lot of people have to think about when you're not putting this kind of pressure on in terms of day trading and you're seeing the immediate like positive or negative outcome of those situations. So I think that those are big things that it's important to kind of uncover. Also, like the hidden motivations for trading is a big factor as well. Are you genuinely just a practitioner and you want to understand the market movement and see if there's potential here? Or is it like largely driven by a financial money mindset type situation that may or may not be super healthy until you give it some attention and some fine tuning? So what are the motivations? What are the underlying wounds? What are our emotions going to play at? Those things are really a big deal about what happens on the charts. But that is a deeper layer of who we are that is not always focused on and kind of given the time to be understood and supported in a way that helps us kind of break some barriers and break through where there could be a pressure point at. And so a gap on, you might have this great strategy, but you have the psychology that you're kind of trying to ignore because that's really deep, hard, complicated, weird work that you're not really into it. You'd rather just focus on the strategy and the money should come. But that disconnect can really lead to a very long period of complication and struggle. And so that's why kind of blowing it open sometimes is rough for a period, but you can find deeper layers that you need to work on managing that can really be a game changer. So why do you really trade? Let's start with that. We just kind of start somewhere with this topic, right? So when traders are asked why they trade, the first answer is almost always like surface level. It's conscious. It's the obvious one, but it's generally not the real one, like the deep internal underlying one. So I love this. I heard this exercise a long time ago about figuring out your why can be surface level, but it can be so many layers deeper. So if you just start asking yourself and then going one more why deeper, the surface level is like financial freedom, right? I want to travel. Ooh, we're gonna get into the wound part. Hang with me, Mary. That's like deep important. Um, I'll promise I'll get you. But so autonomy is freedom from the control, right? We want to have financial freedom. We want to be able to make our own income. We want to not have to clock in and out for our job. There's no boss. You don't have to report to anyone when you're trading, unless it's like you and your partner, maybe, or your bank account. But you have a lot of autonomy, financial freedom, so that you can be economically independent without having to, again, clock in and out. Those are a little more surface level, but they start to get deeper as you go on. But the actual driver isn't always money. It might be autonomy, validation, self-worth, recognizing that distinction changes everything about how you design and follow your system. And so I think when you can say, I want financial freedom, but why? Well, I've never had financial freedom. I have come from a home that was just barely making it through. And I didn't come with a lot of gifts and ability to travel and nice things in life. And that sounds amazing. But why does that sound amazing? What do you think you need? Well, maybe I've always felt like I was less than others. And I never felt great about the fact that I didn't have what some other families had. And I was always jealous of that. Well, what do you want to do with trading that would bring you out of that? Like, how does that make you feel? Well, I want to feel like I'm worthy of all the good things too. Like, I want to feel like I have more in me. I'm worth more. I can create a bigger world that the other people maybe had more easily. I want to build it for myself. So you see how going deeper, like, gets into like more of the heart of like what you could really feel about financial independence, what it could mean, what it could expose in who you are and what you are driven to achieve beyond just the trips and the ability to, freely peruse different car models. So yeah, self-worth, I think, underlies a lot of that when we start getting into what it means to have true financial freedom. That's why we're getting deeper into these identity wounds there, Mary, is because when you start digging into the why behind surface level on all psychology questions, it gets less comfortable and exposes more about who you really are at your core. And that the who we are at our core is what creeps through in moments of pressure. That's what creeps through when we're in a drawdown, when we're in a tilt situation and we have to decide whether to feed the tilt or to walk away. Those underlying wounds and like whys and driving motivations for all that we're doing is what is kind of deep inside there. And when you really feel the pressure, that's what seeps out, because your frontal lobe, where you have the focus and the ability to be logical, gets given less energy the deeper you get into an emotional high pressure situation, such as upside down in a trade or in beautiful profits in a trade as well. So those are a big deal. I think the hidden motives that shape trading behavior, most people often trade to meet psychological needs that they haven't consciously identified. Again, that's where we're going at today. So these motives don't disappear, but instead they surface through behavior because they're not obvious. You have to really have some quiet time and think about and maybe journal out, like, what is my why? And if you get to a why, what is the why behind that? And then you peel back the layers of the onion on that. And doing some focused work like that will expose these, underlying layers, but they are usually not consciously identified early in a trader's career or until you really kind of poke at it. And so what could be there, right? And so a validation, needing the market to confirm your intelligence or your worth. That's that self-worth kind of thing playing into there. The market can be really validating. When you start learning a system and you talk to other traders and you start locking in good trades, it can be such a boost for who you are and where you're going and what you are worthy of in terms of finance or credibility or momentum or prestige in this industry. That can be something that you didn't think about. It could just be early. You want money to travel and you want to see if you can do this thing. But then once you start getting into it, the drive to persevere when it gets hard, that comes from something deeper. And this validation could be a key point. also control. So seeking certainty in inherently uncertain environments. Now, there is a lot of variability in life, in adulting, in once you get past childhood and early adulthood, the teens and the early 20s, you start to figure out like my life is going on. My life is progressing. Like, what does that look like? What is my experience? What could I have control over? Where could I take it? Where am I stuck? That is a sort of control over our lives that not everyone seeks to have and is not super tangible if we don't purposefully pursue it. And so that is a sort of situation where like there is a lot of uncertainty and a lot of things could be taken out of our hands in terms of you're an employee and you need this pension and you need this health insurance and you need you need to work your hourly hours so that you get this paycheck so that you can afford to do this and blah, 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 XYZ. You get kind of stuck in a rat race. But if you want to pursue, bigger things, there's a control element of like, can I control it? Can I not? There's uncertainty up there. What does that mean? And then if you're seeking control, but it's still uncertain, then if you squeeze it too tight, it's just going to blow up harder too. And so what our connection is to needing control is a big driver as well for a lot of people. Some people really need that. And so in moments of uncertainty, it gets dangerous because you start making haphazard choices. You start making emotional choices to grasp back that control instead of being a little bit more fluid with the uncertainty that is kind of in the backdrop of what trading is. We can't always lock in certain outcomes, but accepting that, it takes a choice. So recognition, trading for social status or to prove something to others. That's a tricky one and it's a slippery slope because it's easy, right? Trading is obviously we're online on YouTube right now, right? Online on BluSky TV. Seeking recognition is a very real thing that you can get into in trading. And it depends on what communities you're in, what rooms you're in, who you have learned, who you have met. If that's a part of the vibe of a place where you're at is to want to seek the recognition or a status or being able to, post XYZ each day, that can drive you to make certain choices. That can drive you to not take a loss because you don't want to show a red P&L or to trade minis when maybe you're not totally ready because other people are trading minis. And so you want to be like them. That can be a dangerous situation in terms of like trying to fit in or one up or look great instead of really locking into good trading. And so those are different energies that you can bring to your trading, and seeking recognition can make sense, if you haven't had it or you've had recognition in other areas of your world. Maybe you had a second career and you really were a high achiever, well recognized and well supported, like sought after as a resource in that environment. And so then when you come to trading and you're new, you're like, no, I'm a boss. I'm really good at what I do. Like I succeed. People look to me for advice. That can carry over. But when you haven't had a really robust, consistent system for quite some time, it's harder to seek that earlier, but that can be a driving force for the way that you behave on the charts. Now, throughout today, I just want to say with each of these topics, I'm kind of just, some of these are going to be more powerful for us and some of these are going to be less powerful for us because we're all made up a little bit differently. So I wanted to seek the main ones that impact most of us and kind of talk about them independently. And then as you guys are listening, just think about what your experience is and how it has potentially played into your trading. What speaks to you more might speak to someone else a little bit less. And so we just need to find the parts that really kind of make sense with our journey and our experience. And then, get the information from that and allow it to help us like strengthen who we are as traders. That's the whole point of this. Because with psychology topics, it's massive, right? The way that our brains work is like so variable. And so my role here talking about like one subject, I kind of talk about it from different angles. So that way you can hear it all and then see which one strikes the nerve most in your energy. And then those down along that line is going to be the most helpful, is how I see it anyway. Now, freedom also, escaping a situation rather than moving toward a goal. So sometimes we seek the charts to feel some kind of way, whether it's freedom from your job, you have the autonomy here and you're irritated by an obnoxious boss over there. And so this is a freedom for you to just do you and to like potentially build something impressive that is on you. A retail day trader, like we hold the responsibility of our outcomes. And so that gives you the space to like do you, like believe in what you are trying to achieve and lean into that freedom that trading can provide. Instead of just like, if I make $400 a day, then it can do this. And it's like a really business model strategy, just seeking kind of almost an escape into that freedom can be good and bad. Like there's deeper layers of freedom, I guess is what I'm saying is it can be used for a positive energy for the freedom that you're trying to create for your family, and then have that be a factor behind a business model and a strong strategy that you adhere to, versus just seeking almost the privacy to just do what you want to do. And I think that part of that underlines a lot of us retail traders' approaches, but it has to be contained within its place, understood, given the, respect that it deserves as part of our situation. But the priority has to be strong executions in order to make money, because there's just too much leverage in the world of trading. There's too much ability to lose money. You know what I'm saying? Carl Jung again, the privilege of a lifetime is to become who you truly are. And that's why I think these conversations are so valuable, because trading is a beautiful opportunity, like really incredible, massive, like overwhelmingly positive opportunity for us. And it can help us give an avenue of becoming who we really are. It can expose our deepest like wounds and identity layers. And then we can work with them, grow with them. If we find something deep within us that feels like an unstable wound, something that is hurting and that expresses itself on the charts in and potentially a negative way usually, then if you approach that and you try and heal that and then adjust it and make sure you're giving it credence as a part of who you are that made you and brought you to this point, and working with it as you move forward, it's so powerful. So I love that quote. Okay, so the drivers behind this, right? Let's keep knocking through this. Many behaviors that look irrational from the outside are psychologically logical from the inside. So they're not mistakes necessarily. They're a response to unmet needs. And that's what I'm talking about, like the deep needs within us that we don't always recognize. If our executions, our outcomes are kind of trying to meet that need without asking us permission first, it can play out on the charts. And so we want to recognize those. Now, this is a different way of looking at similar things that we just covered. So I'm just going to cover it in a slightly different way, because maybe it will like help just kind of experience it and understand it. So one of these is definitely the need for certainty. So over analyzing, freezing on entries, waiting for one more confirmation. The market threatens uncertainty and the brain seeks safety. And so these situations, this is where you kind of have more of the like hesitant profile on your charts, where you see your setup and you just wait. You're just not sure. You're not sure if it's quite there. One more confirmation would make you feel better. And then all of a sudden it starts flying. And that's really frustrating. So that need for certainty could be a part of deeply underneath of like, you want to feel safe and you want to make sure that you're making the best choice. And this has to be super logical and smart, and you have to be a good investment for your money. And so then you kind of hesitate with that. And so that seeking that safety is something you kind of want to recognize and give support to and space to, and allow that to be a part of who you are, but then work with it in terms of targeting. Then in that situation, you want to target decreasing hesitancy in those sort of behaviors with active choices. A need for significance is another one. So oversizing positions, chasing home runs, the losses can become identity threats. So this is where you're like less comfortable in taking the hits, and you give it more room. You will average into a loser because you don't want to take that loss, because you want to feel really positive with who you are and what you have going on. And so the losses can become threatening, not just financially, but also to your worth and your core. And so that can create these type of like more aggressive sort of behaviors on the charts. The need for control. So that would be like moving stops, interfering with trades, kind of monkeying trades, squeezing trades, overriding your system. That's where the uncertainty feels intolerable. You want to be in charge. You want to make this work or not work, and it has to look like this. And so if that uncertainty really bothers you and you need to have control over your situation, it's going to play over in these certain ways on the charts, interfering with your trades and overriding your system that you have defined. If it says you get in here, then you get out there, but instead you get out here because you just don't like XYZ and you want to. So over managing could be a sense of an underlying need for more control, which is something to kind of know and give respect to in your life. Similarly, the need for achievement, which sounds really positive, right? Like achievement, high achieving, like making that great P&L, making those outcomes, that's the goal, which it still should be. But if you lean too heavily and the winning is expected and it needs to happen, then you can also not take the losses and not let it happen over time, but instead you can put pressure on doing it faster so you get the rewards, your standards keep rising. You're not satisfied with the $300 that got you to a payout by making $300 consistently. Instead, you are more so forcing bigger outcomes to make sure that you are achieving higher metrics instead of staying stagnant or whatever, even though it's just allowing your system to catch up with you, which that can lead to burnout because you're constantly increasing the pressure that you're carrying on yourself, and it makes it harder and harder and harder. And that is definitely a recipe for tilting. So realizing if you can kind of dig into any of these behaviors that are in the starting of each of these boxes, the oversizing or moving stops, if that is a behavior you see on your trading, then the title of this could be kind of an underlying subconscious need and driver for you, which is a part of all of us, right? These are the psychological energies for all of us. And so what drives people is not what they know, but what they need. And I love that quote by David McClellan, because driving forces are not always understood. It's not always logical. It's not always mathematical and scientific, especially when you're doing something as day trading. It's the psychological element is very, very real. That's why we have these conversations. That's why the psychology topic is so big in trading, because, when your strategy isn't holding you and you're struggling, there's a psychological underpinning to that. And so figuring out what that need is that is coming through your trading and out in your executions, identifying that and working with it is such a powerful choice in terms of targeting the need versus the way it plays out in the charts, which is why I love this conversation so much that we can dig into this. Oh, where's my mouse? Self-awareness is a performance multiplier. You guys heard the term self-awareness? You guys are kind of sleepy in the chat. Hope you're just enjoying listening to me keep carrying on. But self-awareness is a really powerful tool. So there's research behind this. This is why I'm going to nerd out with you guys on science a little bit, because I like to do this every time we get together. But a lot of the way that I think about the topics that we bring here today is like, is there psychological research that supports what's going on in our brains and how we can work with it? And there is such psychological research behind this topic. So this one research study found that while most people believe they are self-aware, only a very small minority actually demonstrate when it's objectively measured. So they figured out like objective tests to figure out what your self-awareness level actually is. And for people who thought they were really self-aware, it was actually a very small number that played across and made it through that test, showing true self-awareness, which is so interesting, right? I think we oftentimes say, of course I'm aware. Like, I know who I am. I know how I show up. I know my strategy. But the layers beneath that, I think, is where the real money is at, so to say. Self-confidence in self-knowledge is in itself a blind spot. So in trading, blind spots can be really expensive, right? If we don't know, we don't know, or we don't know the underlying issue that is holding us back, there's so much risk there because you're basically not really exposing and really dealing with the biggest thing at hand. And so studies in emotional intelligence consistently do confirm that self-awareness is the foundation for self-regulation. And self-regulation, you guys, that's where we want to live. That's where we need to lock into being able to recognize what our minds and our emotions and our psychology need, so that way we can regulate and make the right choices in the moment. Self-awareness is the foundation for self-regulation. So that's where I want to talk about. Self-awareness is super, super a powerhouse for us. You can't manage emotions if you don't recognize them, if you don't call them out of the shadows, if you don't name them and say, I am feeling XYZ. Probably that means this is the risk and I maybe should walk away. I'm feeling really stressed and anxious and I'm very uncomfortable in this position. Probably that means you should close it because you're no longer operating super focused and like front brain mode. So before asking, how do I stop revenge trading? This is where I want us all to think of, what is revenge trading trying to satisfy within me? Am I trying to regain control or restore self-worth after having a bender on the charts, reducing discomfort? What underneath of what I am experiencing am I trying to like fix right now by getting back in this trade, by forcing my P&L to go green because I don't want this red day? What else is there? Are you having some concerns at home? Are you worried about money? Are you worried about making it so that your status stays up or what have you, depending on where you put your energy when you're not on the actual charts? James Clear is one of my favorite authors because the book Atomic Habits is fire. One of his quotes is, awareness precedes control. So if we are aware of what's going on, that's how we get the control that we desire. by understanding all the aspects of especially our psychology on trading, understanding that what we are experiencing makes it less vague, makes it a real thing, makes it like, data on the charts. It's data in our brains. So then with that, we can build the control out of that because we have shined our lights brightly on our emotions. And so then we know, then we can create a strategy anyways that says, if I am heavily in this emotion, this is what I ought to do. And that puts it into your strategy book, in your playbook, as example of how you're trading a breakout trade. Well, how do you manage sadness and sleep deprivation? Probably should be taking a day off, right? Going for a walk outside instead. Thanks, Fatima. Okay, so let's discover our trading operating systems. Okay, so this is where every trader has a psychological operating system running beneath the surface. The goal isn't to become someone else, especially you see someone out there in the charts, you see how they're executing, you see how they're living, you see what they're putting forth in their energy for their trading outcomes. The goal shouldn't be to become them. Instead, I think what is the most powerful is coming into alignment with who we already are. Who is Becky? What drives me? What do I really want? What scares me? What makes me want to squeeze my trade? What makes me want to go all in and throw caution to the wind? Like, what parts of me come out in those moments? And then what do those parts need? How can I manage them? How can I settle them so that I can really treat trading as a business? So for each of us, I think that we can do some things with that. These are questions that will help us get deeper into knowing thyself, understanding who you are, who I am bringing to my charts, who it is that sits down with access to the mouse to click the buttons. So what emotion do I struggle with most? Is it fear, frustration, boredom, greed, impatience? And if you guys want to screenshot this and just take it for part of your journaling exercises tonight or tomorrow, or when you have peace and quiet and you want to really spend an hour thinking about your psychology and how you want to like really lock it in, because hello, we want fat payouts. And if you want a fat payout, spending an hour on psychology once a week is a really strong choice. I'm just saying, I'm not saying because I'm a psychology coach. I'm just saying because I like the payouts also. So screenshot this and then use this as an exercise. But what emotion do I struggle with most? These are some suggestions. It could be anything. Just kind of go inward and like let that question sit in your mind for a moment and think about what is the strongest force for you that gets you into trouble. Another question to ask to get kind of into the heart of your core is, what emotion am I actively avoiding? So failure, rejection, powerlessness, embarrassment. By asking ourselves these questions when no one is there, when you're not in psychology lab, when you are by yourself with a pen and paper, it pokes at a part of ourselves that it's less comfortable. It's not super fun to poke at this part of ourselves and to expose what maybe our red days look like underlying our hearts and our experiences and our energy at our core. Maybe something from our childhood kind of fed into this situation that is deep inside of each of us. But if you can say, I am avoiding failure and rejection because at some point in my life, like I had massive experiences with failure and I had to dig my way out and it was terrible. And I hate that time of my life and I'm not going back there. So maybe in your charts, you're avoiding taking a stop out, you're avoiding a small red day or not averaging to a loser because that loser would feel like failure. You see how it kind of can be like, oh, shoot, like that does really sting. That certain experience really stings for me. And it's because it has stung before and I don't want that anymore. If that's the case, we'll talk about what we can do with that, right? But I think first digging into your own psychology, your own experience in this life to figure out where your soft spots are is a big deal. Another question, what does winning mean to me? So money, proof, validation, freedom, safety. The meaning shapes the motivation. So what a positive outcome on the charts means, what it will provide to me that I need, that kind of creates an awareness also in your situation of I need money. So like then you need to make sure you're backing off and you're position sizing for longevity and to be able to get your accounts to hold through a period and get to the payouts phase. If it's validation, maybe if it's for a good way and it's like in a safe, inviting, supportive community, such as our great one at BluSky, then you can continue on. But if you find yourself in rooms where it's constantly trying to like one up each other and like people are talking smack about someone who gets a red trade or whatever, don't do that. Like you need to tune out anything that is putting more pressure on these things that are dangerous for you, such as constantly seeking to be the best in a validating situation. Another question to put into your potential journaling opportunity on this is, what does losing mean to me? I was wrong versus I am wrong. This distinction is kind of a big deal. So when you are in a losing trade, do you think I was wrong on that trade? It's not going to work out. That support didn't hold. I need to take this hit and see what else is going on. Maybe I'll look at this. You know, if ES is being obnoxious, let me look at NQ or gold. That trade just didn't work. My long opportunity was wrong. Versus I'm wrong. Like I can't get this trading. Like I don't understand why I show up every day and I'm trying to win and I'm just wrong on the charts. Like if it's about you versus about the trade idea and the data that's printed, those are different energies, and they can really kind of hurt a little bit if you make it so personal in terms of your worth and your experience and your ability to be a trader, versus let each trade stand alone. We all come to the charts, we make an analysis on the market, we make a thesis on what it might happen, we have a plan for what our best trade would be, and then we execute. And so if that trade doesn't work out, that's the natural variance of being a trader. Like there is no 90, 100% traders. That's a lie. And so if our trade is wrong, that just needs to be that trade was invalidated. I can't wait for another opportunity that maybe will be better, and then I can make it up. And it's not a big deal because the loss was mitigated. It was kept small and within reason for my account. So that containment, I guess, of the risk is like really, really helpful for our mental stability, right? Yeah, Reno, thanks for being here, friend. All right. So what about this statement for yourself too, guys? This is the journaling page, right? And so have this as part of this experience for you as well. When I lose money, the story I tell myself is. Now, this really plays into this last question I just covered is too, what does losing mean to me? So when I lose money in trading, what does that mean? I don't want to tell my spouse. I'm worried about paying my rent. I can never make this. It's been 2 years in and I'm still not making a damn profit. So I guess I just suck. Like if that is what it tells you, there is psychological work to work on. These questions need to be explored every week until you really kind of get to the raw heart of them. And then you can start to heal those and think about what you could do differently in your daily actions, in your approach to the markets that contains that emotion while you maybe work through it in other ways that we can talk about as well. But if instead, when I lose money in trading, the story I tell myself is, that trade didn't work out because support didn't hold. So maybe we're actually having a bearish day. Let's see what my larger time frames show. Let me pull back. Let me, phone a friend, see what Waji is thinking on the charts right now, see what Fatima is thinking on the charts. Like it looks like it might have rolled over. No wonder my long didn't work. Factual, business, on the charts, data driven, not underlying emotional validation, right? It's quite a different situation. And I think that each of us is going to find some answers in this journaling that is emotional, that is deeply psychological, and that deserves a little bit of love and attention and support for where we're trying to go. So how do we lock it in, right? Designing a system around who you actually are. So we talked a lot about kind of blowing up and getting to the heart of who we are as traders. What do we do with that information? That doesn't sound fun, does it? Well, it's not always going to be fun, to be honest. It actually might be really hard at times to kind of get to the heart of it makes me think about this period earlier in my life when I had these really rough things happen to me and I didn't like the outcomes, and I've been working really hard to move in the right direction. If that happened to you, that's not going to be a super fun thing to relive. But the point of it should be powerful. It should be, what can we figure out that we ought to make sure we're giving credence to in our current world? So are you the type that hates uncertainty? So mechanical rules and lower discretion tend to work better, right? If you hate uncertainty, then make your system really black and white. I want to only entertain a trade if I see this candle pattern and this is the breakout, this is my trigger, this is how I get in, and my risk is always at this point, under this level, what have you, whatever your system is for risk management, ATR or a point system or a candle closure. Having hard rules will help kind of manage if you're the type of person that is really uncomfortable with uncertainty. Maybe you had a lot of uncertainty earlier in your life and you just need to feel safe. Well, create an ironclad system. I think that that's an excellent idea. Systematize the decision so it's not emotional. So you don't feel as if there is uncertainty and you don't know what you're going to do with XYZ. Systematize it and that's the type of person who really will thrive with a really consistent, hard black and white system that they can refer to at any point, will really be helpful. Now, what if you're the type who have found that you thrive on flexibility and you want that freedom and that autonomy? So then structured discretion and context-based decision-making may fit better with guardrails, not rigid rules. This is me. If I had to think about everything on the screen right now and who I am as a trader, when I was putting this together, I was sort of, every time I put together a psychology lab as a side note, it makes me think about my whole self, my life, my psychology, my emotions, my trading, my most recent trading day, my experience as an evolving trader. And so I always am like, I should think about that. And when I was doing this slide to kind of think about where we can go with this is who I am. I really prefer flexibility and fast choices, and I can switch teams in a given day, no problem. I can switch instruments. Like, I want to be able to see a lot of things and like make quick choices. I can get into trouble there. I can do a lot of executions and stuff that way, but I know that for me, I'm comfortable there. Like, I like taking the data quickly. That's why that's why I've gravitated to day trading versus swing trading and long-term investing. I want the action. I want to make quick choices. I want to be challenged in that way. That fits with who I enjoy. That fits with part of my internal structure that works well. And so I want my system to cater to that, because if I try to follow strict rules, there will be a point where I'm like, nah, F those rules. I'm not doing it. It's annoying and I don't feel it anymore. But if my system instead is like, has structure and has a basis and has a clearly delineated A+ strategy and setups, and then I have a little bit of discretion around those. When I see a certain level acting as resistance and I'm starting to get some energy there and I'm starting to get some closures, I need to have some discretion and some context behind my choices. And then I can take a trade without it being a perfect setup. In some ways that probably feels terrible to other people. So traders that really need some certainty in their life, they're like, you're just a gambler. I think it's gray. And I think we each have to know who we bring to the charts and how we thrive, because it's different for us. And so if you really like that flexibility, I do best when I have a structure and a system that I'm working on trading, but I give myself a little bit of wiggle room, because then I'm not fighting myself with it. I'm instead saying, you really need to see XYZ. And if you're going to trade before you get more confirmations, you have to start with a small position. And then as the confirmations come in, then you can add. That is one way that I directly manage as part of myself, and something that I had to learn over time. Of going full size at the beginning will sometimes take me out full size very fast, and my trade could work, but not before I'm not stopped out first. So allowing myself that flexibility looks like leveraging down in the beginning until more confirmations come in. This is an example of knowing thyself and adjusting your trading entry criteria to fit with that. Does that make sense? No rigid rules for this personality, because that can make them fight the system harder and just really just throw it all out the window and go rogue. Done that. A couple people in this room know me quite well, and so you know that. Okay, so what about flooded by frequency? Fewer trades. If you're like, you just trade, like you put a lot of trades on the chart. My girl Kendra, many years ago, one time we were learning to trade, and she called it a confetti party, basically, when you overtrade the crap out of your day, and there's longs and shorts and stops and hits and targets and stuff. And if you have your fills on, it's a confetti party. So that is very frequent trading, and not always for a good thing. Some people are scalpers and they just lock in 20 points, 10 points, 20 points, 50 points. That can be their system. But if you trade high frequency and you're getting a lot of mixed results, maybe you got to back that off a little bit. Fewer trades, but higher quality setups. And so in that situation, if that's your tendency, don't say I can only trade once a day, because you're not going to do it. But to kind of delineate, I need to slow it down a little bit and really say I can take a couple of trades, but I have to prioritize at least these parts of it so that they're really high quality. And that will help you, allow you to take your frequent trades, but to specify that they have to be a certain quality and have a certain number of confirmations at least. And so you want to be able to slow down the amount of money you're throwing around and lock it in specifically. And it makes your trades a little bit more effective, but still allows you some freedom to trade. So understand what you're trying to do when you're unregulated, and then create a system around allowing that to come through, but regulating it to a certain extent, if that makes sense. A good trading system is profitable. A great trading system is profitable and psychologically sustainable, which is what I'm talking about today, which is what a lot of my psychology labs talk about, is making a good system better, making it great. So that way, when you do have a strong strategy, you have good mentors, you have a good read of the market, you have an ability to make good trades. If you get your psychology stable around that, that's where the magic happens. That's where the consistency and the ability to leverage up and the ability to compound your gains over time, that's where it gets incredible. That's where the doors open and the ceilings just float away and you can keep pushing yourself. Because if you can get your psychology super rock solid and in support of your strategy in terms of your hard system and your trading approach, then it all works together and creates like this beautiful finished product type situation. I mean, we're never done learning, but it sets the stage so much more stably for that bigger growth. All right, so the ultimate goal isn't just better trading. The deeper purpose of self
Welcome to another episode of Market Skycast, the official podcast of BluSky Trading. We are live on YouTube. This is cut live. No edits, no nothing. So if we mess up, you'll see it in real time. And as always, I'm your host, Justin. I am here with the other coaches, Coach Matt and Coach Becky. How are you guys doing today?
Great. Thank you. Good morning. Happy Monday, everyone. It's been an interesting week after the way last week closed. Goodness.
Yeah, doing good. Excited to be here, and happy Monday to everybody.
Yeah, so as always, I'm going to start with the Middle East conflict, and I don't want to spend too much time on it because I think it's kind of a moot point at this moment. The same thing happens. There's a ceasefire. There's no ceasefire. There's a little bit of news. The market does not care at all. But do you guys have like anything you even want to talk about that happened since last week, just regarding that situation?
I guess I'll jump in here. When the market tells me to care about it, I'll care about it. And just to give you an example of that, Friday, we saw a massive sell-off in the market. It literally had nothing to do with the Iranian conflict. Yep. Sunday, during the futures open, we saw absolutely no volatility during the futures open, which I felt was a very big positive coming into today, quite frankly. No follow-through to the sell-off on Friday. And yet, Justin, we had big-time escalation over the weekend. It wasn't like there wasn't escalation. Iran and Israel were literally firing missiles at one another, and the market's like, nothing to see here. And so I've long held the belief that as long as the market believes that the president of the United States of America, the most powerful man in the world, does not want to escalate and wants a off ramp and wants to continue to go down the ceasefire route and wants to work towards a deal, the market's going to bypass the news and it's going to focus on the future. If the president of the United States decides to go a different route, the market will probably wake up to that. But until the market tells me to care about it, and until I see crude oil telling me to care about it, there's other more important factors that are impacting the market right now.
Yeah, absolutely. Becky, anything you even noticed, or do you care, or you just look at the chart? I know you.
I mean, I definitely care, but I am a technical girl, so I would lock into my strategy, my levels, why and where the levels are at. And then, of course, if something hits and it feels like news on the charts, I'm going to try and hunt out what causes the move and figure out if there's validity to it or not. But until that point, like, just wait and see is my stance on it all.
Mm-hmm. Yeah, absolutely. And it was funny. I was hanging out with a trader buddy of mine yesterday. We saw the market open, and I was like, which way are we going to gap up or down 100 points? And the market opened, and it was nothing. I didn't care at all. Nobody cared. So I think we're kind of on the same page that like the news is the news. It's going to happen. You might get a little jump, a little dump, but it doesn't matter. But I want to get into what happened Friday, because we had a massive move and it had nothing to do with the Middle East conflict, which is kind of the first time in the last 3 or 4 months that it's happened. Mm-hmm. So Matt, let's start with you. What were your thoughts on it? What do you think was the catalyst, and how are you reacting to it? Let's just get into it.
Yeah, honestly, I wasn't surprised that we started seeing some downward pressure on price on Friday. We were overextended in the trend. We were starting to see a shift in momentum even before Friday. For example, we had our first red candle on Wednesday. In the last 11 trading sessions, we had a doji on Thursday, and then we had the sell-off on Friday. It wasn't like that sell-off on Friday came from nowhere. The momentum had shifted earlier in the week, and the bears were having a little bit of control of price. That's number one. Number two, there was a key economic report on Friday with the labor market news, and there's something in the market that I think confuses a lot of people oftentimes. We had a labor market print that was a really good labor market number. It came in well above expectation. I believe it beat the expectation by like 100,000 jobs. It was a kind of a shocking number, quite frankly. And yet the market came down. And I'll tell you right now, guys, the number one question I was asked by a lot of my students on Friday and over the weekend was, why is the market going down as much as it is when the labor market just had such a good number? And I said, well, you got to understand that the U.S. stock market is not a perfect reflection of the U.S. economy. That's number one. Number two, when you're dealing with the dual mandate of inflation versus labor, and you already have concern on inflation, meaning the Fed cannot lower interest rates because of inflation, when the economy actually goes up and the labor market has a good number, the market has to reprice in Fed expectations. And that's what occurred here. It's what's called good news is bad news. Good news for the US economy, bad news for the traders in the short term, because you have to price in the expectation. For example, on Friday morning, 1 second before the labor market printed its number, you had 12% of economists polled expected a rate cut by the end, a rate hike by the end of the year. Right after the print, that number was 30%. 30% of economists polled now expect a rate hike. So the most likely, when the Fed takes action out of their prolonged pause, the most likely action right now is a hike, not a cut. And that's got to get priced into the market. And so I really do feel like that's what we saw on Friday. And after the initial saga of downward pressure and price, we were about 3 hours into the trading session. I remember making a comment to a bunch of traders, guys, momentum's picking up. It's not slowing down, because it looks like the bulls took an early weekend, and they did. And so I do think about half of that candle on Friday was just the bulls giving up because of the volatility on Friday. But I do see it as a pricing event and not a catalyst. And that's how I personally see it.
Yeah, great point. I think that's such a hard thing for traders, is to wrap your brain around, like, good news is bad news. Bad news could be good news because this happens, and if this happens, this happens. So yeah, that's a great point. And
you can blame Ben Bernanke because he's the one who did it.
Oh, that's hilarious. Now, Becky, my perma bear, did you catch the move, and what were your thoughts on this?
Okay, so in a perfect world, I would have caught that elevator all the way to the bottom, but I had 0 trading time on Friday. You cannot even imagine my frustration. I was at my one hospital shift last week, and I just, every hour or two between patients, I would take a peek at the market, and I'm like, what is happening? And I don't have good technical analysis on my phone. I don't trade from my phone, except for like sometimes managing the end of one position or something. So it's a little bit of a bummer. I got 0 bites of that, but you know what? That happens, and you can't live in that FOMO, because that would have been a bummer. But for me, I really appreciate what Matt was saying about shifting sentiments, because that was mine as well. And I remember live streaming with you guys last week when we would start. A lot of times we start the live streams during trading hours with the top-down analysis. And so if you look at the 4 hour and the 1 hour through all of last week before Friday, it was losing momentum. Like, it was making higher highs and higher lows on most of those 4 hour and hourly timeframes. However, it was weakening, and it was barely taking the top, and it was having very steep retracements on the bear side. And so for me, that was a sign that the bears were starting to gain some dominance in the situation, and we were not seeing beautiful, strong, bullish trending days anymore. So it did end, strong up until then, but there was definitely signs of weakness in the market. And so for me, technically, that would put me on edge. Like, if this was, you bring it down to like a 5-minute chart, say you're intraday, and we were seeing this trend, there is weakness there. That's where I'd be tightening up my stop. I would have it right underneath these doji candles at the top, because I am seeing a loss of the bullish strength. Yeah. And so Friday fits for me, because when it finally came out, like Matt also said, I have to echo, because there's a lot of bullish stops that are going to pop on that break of structure. So you have new bears that have been hunting, and then bulls that are getting stopped out. So it's a double momentum situation once you really get a liquidation day. So I think that fed into Friday's like massive strength. Now, Sunday open, like, we've seen that a lot, of a big, strong close on Friday, one way or another. And then the open on Sunday is like, meh, like, it'll take back a lot of it. So, I mean, the bulls since yesterday open didn't surprise me either, because, they want to, the market has an era of manipulation to it. And so people who would chase those shorts after the fact got it handed to them, say, a little bit. And so don't be a chaser on these big engulfing candles. Let the market have a minute and show you what she wants.
Yeah, well, can I just jump in real quick there, Justin? Because the emphasis on, like, the question coming into this week, in my opinion, was, is this a one-day shock, like just a liquidation event or a volatility pocket, however you want to describe it, or is it a catalyst for further movement? Yes. And that was one of my big questions coming into the week. It had my top 3 questions were all technical analysis coming into this week. Had nothing to do with the Iranian conflict, really little to do with earnings. Economics later this week are going to be very important. But coming into the week, I was like, are we going to see follow through? Because if we see follow through, this isn't a one-day shock event. This isn't a one-day liquidation event. There's something else brewing out there. but we saw absolutely no volatility on that futures open last night. The NASDAQ was sitting at intraday support level at 28,800, didn't breach it. The S&P 500 was sitting at a 4-hour support level, didn't breach it. Market had one of the most benign, boring opens last night, and I felt it was the best thing for the market coming into today. Because it does give me more confidence that my initial read, a liquidation event, a volatility pocket, again, however you want to describe a one-day pricing event, but that's how I saw it in the real time. And then when I saw the futures open on Sunday and we didn't see follow through to the selling pressure on Friday, I kind of felt like that was a little bit of confirmation that this isn't something bigger than just a pullback to a certain extent.
Mm-hmm.
Yeah, absolutely. And you know, it's funny because I was streaming on Friday in front of, our BluSky crew, and I got in, pretty close to the top of the New York session, and I was like, you know what, it's Friday, like let's lock in our $300-400, let's get the hell out of here. And then just oh my god, and it just kept going.
Just kept going.
And then this is one of these things where a lot of people don't get the entries they want because there were not really any significant pullbacks, like Matt mentioned. The bulls just gave up. They took the weekend off early. So I locked myself out on accounts before lunch, and I came back and I'm like, oh my god, we're down 1,000 points from where I entered earlier. Wow, I could have made so much money. Like, how do I hack my accounts to get back in so I can just hop in and market into these shorts? Which I'm glad I can't, because I probably would have lost a ton of money. But I'm going to kind of switch things up a little bit, because I have a question for what's usually in our coach's corner, but we're already talking about it. And I mentioned that a lot of these setups that people have didn't present themselves because there was not a significant pullback to get in. So let's just kind of have a discussion about FOMO, since somebody did ask me this question based on Friday. And Becky, let's start with you, resident psychology expert. Is FOMO something you have eliminated, or can you manage it?
It's funny because I do the psychology conversations, and also I have FOMO from Friday. So I have FOMO from Friday because I didn't get any of that action. So I do think that it is something that I have not eliminated, but I have learned to manage. And so I feel like what has happened is I think I'm still human. I do want to be in the good trades. When I see a good trade taking off and I'm not in it, I do wish that I was in. So that is still definitely a part of my brain and my emotions and my approach to the market, is that if there's a great trade that I see based on my levels, I wish I had leverage on. But the difference now is, as I get deeper into my career, I'm better at walking away and just taking a deep breath and letting bygones be bygones, and know that I can't catch every trade. And so in that situation, when it was falling, I did have some I wish I was in the short. But then what else I had? I had some, I wonder if it's going to hold and we could bounce here. So the risk would be for me on FOMO, if I don't get a good entry, I don't get my peak opportunity, then I could get into some revenge trading, right? I think there was a lot of people also got wrecked on Friday. Those that didn't catch the short probably maybe tried to catch the knife and got in some trouble. And so I think it goes both ways. And knowing that when I have traded with some FOMO energy and I have attempted to either chase or fade, if I miss the good entry that I would have gotten on a move, both of those things have caused way more damage than FOMO ever has. And so for me at this point, I would rather just sit in the FOMO than mess around and find out if I can't get the entry in the beautiful trade that I would like ideally. So my answer is I definitely still experience it. But the difference is now I recognize that there's more danger with that emotion than opportunity. And so I choose to shut it down, lock myself out, walk away if I didn't get the trade that I wanted and it's going without me. There's another bus coming at the station.
I love that analogy is if you miss the bus, another one's coming. Because how many times have you chased the bus and you should have just waited for the next one? Matt, now you've been in the market a long time. You've seen a lot of different events happen. Did you have FOMO early in your career? Have you gotten over it? How do you deal with it now?
I think FOMO early is normal. Absolutely, 100%. If you have FOMO as a veteran, you haven't lived the market enough.
Doing something wrong, right?
There's billions of transactions every single day in the financial world. You're not going to catch them all. And when you realize how much opportunity you miss, you're not going to laser focus on the one you're staring at. You catch the ones you catch. You put yourself in a position to be successful. But if you're not around the market, if you're not doing the things you're doing, you shouldn't have FOMO. Look at it with fresh eyes and talk about what's next. Catch that next buzz, for example. On Friday itself, my Friday was probably a little bit different than your guys' Fridays, to be honest with you. I was in management mode a lot on Friday. And so a lot of covered calls, a lot of buyback covered calls, a lot of trying to dodge stop hunts on swing trades like Money Mayweather in a corner. And so there was a lot of management, I will say, on Friday. And I also do a lot of writing and a lot of research on Fridays. And so I don't day trade typically on Friday. But I will tell you, as I was managing covered calls and doing everything else on the longer term side of the equation, I would spot check the ES and I'd be like, oh man. So maybe there was a little bit there. But no, I don't have FOMO in general. Like and honestly, I haven't felt FOMO in years.
Becky, FAFO means F around and find out.
Oh, yeah. I'm thinking first.
Somebody in the chat said that.
First.
Okay. See, I'm thinking technical. He's coming at me with the.
That's so funny.
That is funny. But yeah, just like you guys, I think we're on the same boat. Like early in my trading career, like, oh my God, how did I not catch that 200-point move? What was I doing? Oh no, I missed it. Then I'd mark it in and try to catch the bottom when the bottom was already in. And now I opened my chart a couple hours after lunch and I'm like, oh, we're down there. That's crazy. Wow. Okay. Yeah. Bye. We're done. Like my weekend's already started. And I do want to talk about a lot of people on the daily, and I'm sure you guys had eyes on this, but this gap fill on both ES and the NQ. I think that was everybody's major target. So I know a lot of people tried to catch the bottom on this gap fill, and it filled the gap, and then it dropped another 600 points. Mm-hmm. So that was pretty. It was a big deal for me that we just continued. But now I'm curious. Do you think? I know you mentioned this earlier. Is this continued move? Is it not? Becky, do you think this is the start of the downside?
I think there's more down to this. I do. I think right now we're in a retracement, and I think now the key opportunity is to watch the resistances on our way back up. Now, I absolutely could be wrong, and to each their own on this. We could make another high after this because we've seen massive engulfing, but it goes down to a key level, and that level holds, which could absolutely be what's happening. But for me, that was a substantial move. We've been in bull run for a very long time. We're coming into the summer months, and this was a statement candle that broke many structures. And so I am 0% surprised at the bulls today, potentially even more this week. However, if I had to pick a direction, I would say this is a retracement, and there's more downside to come. Because I think we have a little more retracing to go. We are very, very extended, and this was a massive statement candle.
Yeah, and you mentioned the word retracement, and as I'm looking at the chart, I was typing in. We were trading this morning together, actually, and we got the 50% retracement of the daily candle. And Matt, do you kind of want to talk about 50% retracements and what that kind of means technically wise?
Yeah, retracements can be within, like you did a candle retracement to kind of understand the percentage retracement on that individual volatility move. You can do it on a trend. You can do it on a wave within a trend. There's a lot of ways to do it, but the 50% retracement is what I consider the Goldilocks number in a retracement. So on the Fibonacci scale, you got 23, 38, 50, 61, 78. Of those levels, kind of Becky mentioned navigating a pullback, and I would certainly agree with that. I think we're navigating a bullish retracement against the weekly chart right now. And so understanding those key levels are going to be very important. But the 50% zone is that target zone. So when you go down 4, you retrace 2, right? Mm-hmm. When you go up 10, you retrace 5. That's the Goldilocks zone. And so, like, I'll always remember, like, you can teach it through a lot of different ways, but I remember Treasury Secretary Scott Bessent was in front of Congress one time, and the Democrats were kind of harping on him and trying to box him into a corner, and they were talking about how the market was down XYZ points. And Bessent says, well, the market went up 4 points yesterday, so it's down 2 points today. That's another day. He was talking about a 50% Fibonacci pullback. The Treasury Secretary of the United States of America in a Senate meeting was talking about 50% Fibonacci retracements. It's the Goldilocks number. And so when you go down and you're expecting that pullback, that target zone is the 50% zone. When you're trending up let's say you go motive wave up and you're assessing a corrective wave down, which is what we're doing now, you would target 23 for flags, 38 to 50 for standards, and under 50 for deeper. And so the 50% number is that Goldilocks Fibonacci number that is a target zone for bulls and bears, depending on what type of analysis you're going through. But it's a very important metric and a very important number.
Yeah, and we're talking about the 50% retracement, the 0.5 fib, whatever you want to call it. You can draw a box on the daily chart and just hit the middle. But if you're looking at my chart and you're listening or coming back and listening, we literally tapped the 50% retracement to the tick almost on both the ES and the NQ. And now we're starting to fall down lower. Now, I haven't traded since Becky and I were trading, but makes perfect sense exactly where we went to, right?
And the thing with your charts is that what we need to know as day traders, as intraday traders and swing traders is, where is everyone looking? Because if you're in a trade or you're potentially looking for a trade, you're looking where to scale out, it needs to be part of your strategy of like, what are the numbers that people hunt? And so support and resistance on the larger time frames, of course, and fib levels are key. And so if you're hitting a massive range like this, you do want to know the 50% and you want to have it marked, because that's going to be a factor on where you think all eyes are on. So if we're talking about it because we all understand this premise, then it's understood at a global level. And so that's something that you should delineate on your chart and kind of pay attention to. So if that's not a part of your view of the market, start playing with that. I would encourage people.
Yeah, absolutely. And I think that was a great discussion, and great technical discussion, great psychology discussion all around. Now let's go back to the normal way we're doing the podcast. We got some big data coming out this week. Economic data. There's a little bit of earnings. I don't think it's gonna be the most important thing on anybody's mind, but you mentioned what was it, 12% of economists were saying rate hikes, and now it's up to 30+%.
Yeah.
And that kind of lines up with
it's going to be higher after this week.
This week, huh?
I'm going to tell you right now, it's going to be higher than 30% by the end of the week. These inflationary numbers are high bar expectations coming into the week.
So why don't you get into it? What are you looking for this week?
Well, for me, I think there's three things that I'm laser focused on this week outside of price action, outside of the technical backdrop, technical picture. Those are the most important for me. If I had to put three things this week that are just a little bit more important to me than everything else, I would say CPI on Wednesday, PPI on Thursday, and the SpaceX IPO. Those three are extremely important in my estimation. And what I meant about the high bar expectation is this: regardless of what happens with the real actual numbers on inflation this week, the expectations are high, which means regardless of beats or misses, we're going to be dealing with elevated inflation by the end of this week. Literally, the year-over-year CPI number is expected to be at 4.2. Last month, it was 3.8. The month-over-month numbers are expected to grow as well. Year-over-year with core CPI, that's a little bit of a different picture, but that's not the one that's impacting everybody right now. It's the regular CPI report, because it's all energy cost and food cost, and core strips those things out. And so you have an expectation of the CPI report to come in at 4.2% this week. You also have elevated expectations on the PPI report. What that means is this: we had a hot labor market number on Friday. The Fed knows they got a little bit of room to play with on the U.S. economy right now. They have zero room to play with and maneuver on inflation right now. And so inflation, even if it comes in as a miss, it's still a concerning number for the central bank, who will rely on the dual mandate. If labor's doing fine and inflation is a concern, you have to see more adjustments on the rate side. And so those three data points: CPI Wednesday, PPI Thursday, and on the 12th, we have SpaceX. Those are the most important ones for me this week. But regardless of what happens this week, I expect more economists to expect more rate hikes coming into the future.
Yeah, and I'm looking at the comments right now. Somebody's mentioning Trump intervened, and Becky said Trump lost the argument with Miss Market on Friday. Did you guys see his social media?
What's he going to intervene with, though? Like sincere question here: what is Trump going to intervene with on inflation?
Well, that's a good talking point because we do have a shakeup in the Fed. There's new leadership. Is he going to go along with what Trump just wants to do, or is he going to do what's best for the economy?
His first meeting's later this month, and there's not a chance in the world he can lower interest rates in the face of the economic data. If he does, he'll be branded the worst central bank president in the history of mankind. He'll lose all support amongst every economist. He'll lose all support amongst the Republican senators. They will look to impeach him if he lowers interest rates in the face of brewing inflation. What Trump can fix on the inflationary side is figure out a deal with Iran so that we don't have to deal with the elevated gas prices that are impacting everything else downstream. That's what he can fix. He can't intervene with the Fed. The Fed has to do what the Fed does. The Fed has a dual mandate. It doesn't, in that dual mandate, it doesn't say you have to do what the president says. It says if the number one job of the Fed is to maximize the economy, and as they maximize the economy, they have to adjust interest rates to control inflation. Because if you give the president what he wants right now, you're going to be dealing with 10% elevated inflation in consumers' lives, which means not one consumer will be able to retire in time. And so can the Fed do what the president wants? The answer is no.
Yeah, it's funny. I don't know, Becky, did you see his social media post? The job numbers came out, which was good, right? And he said stock market will go up. And then what happened right after he posted that?
I'm not gonna lie, I feel all right with that. It's kind of funny.
Yeah, absolutely. So, I mean, Matt already touched on the most important data points, but I'm sure you're mainly looking at Wednesday as well, correct?
Yeah, I think that's very important fundamental data information. And I think that will give a little bit more information that we just need to understand in the backdrop. And that could frame up what we're expecting to see technically moving forward. Maybe if it's exceptionally positive, that'd be kind of surprising, but that could be a factor to consider. But I just think we're just going to need to pay attention to that and be careful if you're trading at that time, an hour pre-market Wednesday, and then to a slightly lesser extent on Thursday as well when PPI hits, to recognize that those are going to have some energy into that trading opportunity at that time. However, it will kind of be in the backdrop for me of supporting or giving a little bit of counterbalance to the moves that I would be expecting. So I consider it, but not the biggest part of my understanding of the situation because it happens pre-market. And so when the market opens on both of those days, I want to see kind of what it did, what levels it put us at, and then I want to see what happens at the key levels at that time. And like I said, I'll be definitely, my strategy always, even with all of these things that we consider and whatever could come out at any point, I always approach my charts not looking at to take a trade until I have my larger time frame levels drawn. And if price is pushing towards them, I got to see what happens at those levels, and that will kind of remain and pull me through this. But I do love it that this information on CPI and PPI comes out before market open because it could be really informative leading into both of those trading sessions.
Absolutely. I think this is a great time to go back and watch Matt's technical lab on secondary patterns because the CPI print is one of the best days to get a secondary pattern. And I'm kind of wondering, like, is this going to be the next leg down if it comes in a little bit hot, or is it going to relieve some pressure and is it going to go back up? So I kind of think today and tomorrow, maybe a little bit of sideways actions going into the CPI print. So I'm really want to see what happens on Wednesday. So I'm excited to do that. And I will not be trading it. And I know you guys do not trade the initial reaction. We'll wait for the secondary patterns like a smart trader should. So if you haven't watched Matt's lab, go to our YouTube channel, watch that secondary pattern lab, because that is where the money is printed. Not on the initial reaction, it's to the secondary reaction. And then, so that's pretty much what we're looking for economic data wise. Is there any significant earnings we should care about as indice traders or not really this week?
Oracle's the only one that has the ability. And the only reason I say that is Oracle was a catalyst about 9 months ago, and they're the ones who started the whole IGV software sell-off. So Oracle came out with earnings about 9 months ago, and they basically gave a guidance report, which was kind of fake. And once the market caught on that was kind of fake, i.e. their expectations on credits was like $300 billion in revenue. And people are like, you guys are just shifting money from one tech company to the next, and everybody's calling it one-to-one revenue growth. And so once the market was trying to figure that out, they blamed Oracle. I still blame Oracle. Oracle, I can't stand that company right now because of what they do. Like,
tell us how you feel, Matt.
There is nothing that gets my blood working faster than manipulation in the financial world. And it's one of the reasons I can't stand Goldman Sachs, because they wake up in the morning and they manipulate the market with their Wheaties. But for Oracle, they tried to do what I call trickeration in earnings. Markets sniffed it out and created a massive downtrend in software. And so there was that moment. Maybe made me there on the ServiceNow comment. I was responding to YouTube, by the way. But in terms of today, moving into this week, I don't think this is an earnings week. I think SpaceX is going to be an all eyes moment later this week. I think everybody and their dog, both the lovers and the haters, are going to be all over that SpaceX IPO. Everybody's going to be talking about it. Everybody's going to have an opinion on it. And I think it really does kind of dwarf anything else that comes out from a individual stock perspective throughout the week. So you got Adobe, you got Oracle earnings. SpaceX's IPO is just too big for that. So I'd say not a major catalyst this week.
Well, since you brought up SpaceX, I know it's on everybody's mind. I know funds are ready to make their position. Just quick 30 seconds to a minute. What do you think is going to happen during the IPO, and are you participating in it?
I will never ever participate in an IPO. I think that's degenerate gambling type stuff. The data strongly suggests be patient. In fact, over the weekend, I did some deep research on 15 of the most popular, biggest IPOs since Google. And there was only 3 IPOs that went up in the initial public offering of the top 15 in the last 20 years. There was only 3 that went up. None of them lasted. None of them. And in fact, 6 months later, every one of those 3 that went up, there were bag holders for years, legitimately bag holders for years. The IP going up is your worst case scenario from an investor perspective. And I know it's shocking, but that's what the data suggests. In about 4 situations of the 15, so 3 went up, they all went down after the initial trend. The 4 of them went sideways in the first 3 to 4 weeks, and they all created amazing breakout opportunities for long positions. So neutrality in the first couple weeks is a positive for the bull. Absolutely 100%.
So that kind of means that they kind of priced it properly, and it's like going to hold.
Well, and what happens is you start getting your first pivot, you start getting understanding of technicals, you get a couple moving averages out there, and people can start relying on technical analysis. The vast majority of IPOs, so in the 3 directions a stock can go, the vast majority of IPOs can come down. And some of those downtrends lasted 3-4 weeks, some lasted 3-4 months, but the vast majority did go down. In every single situation of the 15 IPOs I researched over the weekend, every single situation suggested do not touch the IPO.
That makes sense. And I want to go back. You said one of your biggest pet peeves or things is financial manipulation. You are in the wrong business, brother.
I like to call it out
because we see it every day. Becky, are you even paying attention to SpaceX IPO? Do you care, or are you just? I know you're not really in the markets on Friday, so is it even on your radar?
I love IPOs. I love watching them and seeing how they move. I've traded a few. I've had good and bad results from them. And so that's how I learned also to not chase an IPO, because that was my biggest losses, was chasing the IPO. Now I've had a couple where I've actually put some puts on IPOs later at the end of that day, and it's gone very well for me. So I do think that there's options in both directions on that, but I absolutely agree. I did not have the stats. So I love that Matt came in with that today, because that's great information for you guys, because statistics are important in this world. Like, we need to look left in more aspects than just candle patterns. Like, look back at what other things have happened on earnings, on IPOs, on Sunday opens, because the trends are a trend because it matters. If predominantly a certain situation happens, you have to have more probabilities weighed against that continuing to happen and to be what we see in these situations. So I do think there's been a ton of front running and a ton of anticipation. So all of the big money that got in way lower than where the IPO is going to release at is going to be real excited to let all the FOMO chasers, retail traders, hold that bag for them. And so I agree. I will not be longing SpaceX IPO, but I would definitely be side-eyeing it and watching where a retracement will hold. And I love how you said, Matt, about a neutral opening is the best you can hope for, because for me, that makes so much sense technically, because the people who got in really early in our front running are selling, and it's meeting equal buyers. So it's holding. There is enough interest, and it was priced well, and there is the counterbalance to that. So if we see that, even a slight fall, and then it holds, that means buyers are still rushing in. So that's a very strong sign for them. So we'll see.
Yeah, and I'm with Matt. I think IPOs, don't touch it. Let the dust settle. If you do miss a banger, it is what it is. You can always get in on a pullback or when the technicals actually line up. Maybe the 200-day moving average finally shows up and you can see what the heck the price is doing.
Listen, I can only say what the data suggests, and 3 to 6 months after an IPO, outside of the 4 that went neutral and then bullish, you would have got a better price as an investor downstream.
That makes so much sense. And
IPOs are completely overvalued when they get released. And then this week, you're going to see a marketing campaign to even make them even further as everybody rushes to participate in the hottest IPO of all time, just so Elon and his insiders can dump stock to them. And so to me, it's like, do you want to be a back holder? Like, go buy the IPO. That's what the data suggests. If you like back holding, go buy the IPO. That's, again, I can only tell you what the data suggests. I'll also say this. I will be an investor in SpaceX. It is a company that I am absolutely hunting. It is a company that I want to be a part of. It is a company, I'm a big space guy. Call me a Star Trek nerd. That's fine.
Oh, look at your background.
I am a big nerd. Absolutely. I am hunting SpaceX. And if it skyrockets on the IPO, I'm going to have to teach myself to be patient and not chase, because the data suggests be patient, and I'm going to be patient. So even though I love SpaceX, like Google literally just signed a deal with SpaceX to give them $910 million every single month.
Chump change.
Like it really is to Google. But I'm very excited about the SpaceX IPO. I think it's an all eyes moment. I'm just not going to touch it on IPO day. And by the way, I wouldn't trade options on an IPO. They're too liquid. Bid-ask spreads are way wide.
Yep.
And that's even if they happen. We don't know yet.
Yeah. IPOs are fun. I used to mess with them when I was like, I would day trade, throw a little bit of money, but I'd be out within like 15 minutes. I'm not a holder of an IPO ever, because like you said, the couple of times I've tried to hold it or swing it into the next week, it loses almost 50% of its value, and that's just not something I'm trying to do. I'd rather wait for a value area and get in.
Well, just there's a recent example on this, CBRS, Cerebras, and a very big IPO in the chip manufacturing. CB as in boy, Bravo, CBRS. Okay, so this was one of the latest IPOs recently. Okay, so what happens on the initial release of the IPO? Down, first trend down, and then guess what happens today? They get an upgrade from a bank, 3 other banks initiate coverage on the stock, and all of a sudden bulls are here. And so now is the time you look at this for secondary pattern development. Now is the time you look for, technicals to be the king. The IPO pricing is over. Now it just becomes a technical conversation. I don't know that SpaceX is going to be different. I don't know if it's going to be the same. I just know what the data suggests, and CBRS is the base case.
That makes total sense. Absolutely. Now let's go back into the Coach's Corner segment. Let's talk some questions we've had from real BluSky traders. And this one is a very broad topic, so I'm very curious what you guys are going to say, but let's just get right into it. And I know my answer. I'll wait till the end. I'll chime in. But Becky, let's start with you. What's the hardest habit to break in trading? Yeah, there's a lot of them, right?
Yeah, we're traders with great bad habits.
I gotta go over trading, because for me, I think it goes hand in hand with revenge trading. But basically, there's not unlimited good setups in the day, and FOMO feeds into that, chasing feeds into that, too much noise from other communities or bot channels feed into that. But I think the main action on our charts is too many trades, because you'll be taking A setups and D setups and B setups, and then you get one loss. You're going to claw yourself back to green. Versus, I think more mature traders will try and prioritize 1, 2, or 3 really good A+ setups, and then win or loss, they got to cut it down and manage their risk. I think that is a sign of maturity in trading. And I think in the early months to years, over trading is extremely dangerous, because you can get into those cycles of fight or flight so easy. Like I talked in my psych labs about your brain moves out of the prefrontal focus to, behind the rear brain of just emotional trading and chasing it. I want to fix it. And so got these points. And so I definitely think when your brain flips into that amygdala emotional trading, you get into over trading. super dangerous. So for me, the first thing that ideally you can prioritize breaking the habit of is too many trades in a session, because you're just no longer in that strong, sharp technical analysis focused part of your brain, and the risk is just way higher.
You know what, Becky? I'm gonna have to start going before you because you always steal my answers, and it's getting old. What about you?
Sorry.
What's been your hardest habit to break as a trader?
Justin, I'm going to agree with you. I just want to complain about Becky taking my awesome answer. Honestly, I thought Becky nailed it. Home run on the answer there. I think over trading is the answer here. I don't think it's the worst habit. I think over leveraging is the worst habit, but it's over trading is a very over leveraging yourself. That's kind of an easy fix. The market's going to fix it for you. But over trading, like, we all have a tendency to do it, especially on the day trading side of the equation.
Oh, yeah.
I love Becky talking about if you're over trading, you're taking B and C, D setups. And I kind of feel like she's talking to me when I over trade. I like to hunt A setups on the day trading side of the equation. I'll take a B setup for a swing trade on like one of my core watch list. But as a day trader, I don't trade as much. I pride myself on taking the easy trades, the A setups, and oftentimes because I'm getting involved in the conversation, or I'm hanging out with you fine folk, or, we're just all talking about an opportunity, I find myself kind of doing a little bit as well. And so even as a veteran here, like it's, and we're all veterans, but I'm just saying, as somebody who's like been around a block a time or two, I still find myself doing it. And so I think it is a very tough habit to break. And I felt Becky just gave a wonderful, wonderful answer.
Yeah, I mean, I was going to say over trading, but I'll kind of add to it. I think one of my biggest habits dealing with over trading was just doing less screen time. I think when everybody gets into trading, and we've talked about it before, you have to watch every candle. You have to do this, the fear of missing out. You want to be on the charts all the time. And I think less screen time helps with the over trading. So, but yeah, I mean, I don't think there's a better answer than that besides over leveraging. Maybe one A.
I think those are the two answers: over trading, over leveraging. Both of them are easy to do, and both of them are damning. But I think the over trading is the one that has the impact on, at least on me, on a day in, day out basis, because there's always a trade on that 1 minute time frame, guys.
Oh yeah, and I remember, when I was coming up, when I was trading with people, we all traded a lot, but as we progressed and became profitable, the one common theme, or I guess two, and that we mentioned them both. One was trading less. Who would have thought? Only taking your A+ setups, like you said, and two was sizing down, deleveraging. It's a common theme with all traders. And is that something you've noticed throughout the years with people where you finally saw them get over the hump? Was it just trading less?
It's always those two. It's when they feel comfortable with who they are as a trader and they just solely execute their system, and they don't try to modify it to justify things or to take action, because that's what over trading is. You as a day trader, you have your core time frames you trade, but all of a sudden you find yourself on a 2 minute chart because you want to make a trade. And it's really easy to do, harder to break, but it is very easy to find yourself into that. I know I've been guilty of that in the last week. I'm willing to bet you two have been guilty about that in the last week. It's an easy problem to get yourself into, but when you recognize it, pull yourself out as fast as you can.
Yeah, and to your point,
the streamers, and I know Becky deals with this too when she's streaming. Like, we kind of want to get in the trade because we're streaming, so that's another thing we have to fight.
It is. It is.
Yeah. Anything you want to add to that, Becky?
I just love your point about cutting the screen time to help manage it, because we talk about how this is something that a lot of early traders experience, is over trading, and it's a very dangerous habit to feed into and continue to execute with, because then the deeper a habit gets ingrained in who you are, it's much harder to break. Every day that you continue doing it, it's more a part of how you approach the markets. But to your point of like just cutting the screen time is so valuable, because I do believe there's value in screen time and giving you experience. But I would say that during the markets open, when your conditions are not favorable, that's when you need to have that balance in your life where you walk away, you shut it down, you lock yourself out. If you're at a good win or a decent loss and you want to stop, shut it down, walk away, and then maybe you'll have that mental capital saved versus like just nonstop trance, going down on your time frame, trying to make it back in bites. That's kind of feeding that toxicity and that fight or flight part of your brain that you feel like if you just work with it, you can make it back. And so if this is the habit of yours, just to kind of psychology nerd out for a minute, do cut that screen time after your key trading session when you tend to have your best wins. After that, put some breaks in your day, and that will help kind of start to shift that for people.
Yeah, and guys, use the lockout feature on your accounts. This will save you a lot of headaches and cut down on the overtrading. But yeah, great discussion as always. One last little question. And this is something I struggle with, especially as somebody who streams in front of people. The question is, does watching your P&L help or hurt your performance? And let's go ahead and start with you, Matt.
I'll be simple. I don't keep the P&L column in view when I'm in an active trade. And it's because it does impact me. And I believe it impacts. I think you got to be robotic for the P&L column not to impact you.
Yep, absolutely. And Becky, what about you?
Ooh, I have done either way, but I do know that when it's on, I am paying more close attention to it, and I am not trading my trade setup to its ideal like trading outcome, because I will be like, oh, that's really good profit, I don't want to let it come back on me, so I'll cut my winner short when I see it. And it definitely makes me monkey with my trade more having it on there, so I do try to shut it down. And I would say this is actually a sign that I am starting to go into that like fight or flight mode, is when I turn it on. If I'm trying to go from a red to a green trade and I'm starting to get aggressive and I'm like watching it and I need, well, if I make 300 then that is not my best trading approach. So I have definitely correlated having my P&L on and trading my P&L. You hear people say, don't trade your P&L, trade the setup. Like that is that. When you trade your P&L, you are already trading more emotionally, either fear or greed based is why you watch that P&L. So I definitely would encourage, I think, at Stronger Trading to just, I know your levels and manage those at your risk and trade your best setups to their fruition. Let it be a stop out or to your targets. That's ideal for me as well.
Yeah, I mean, I'm the same way, and we all get into trade. We have our targets, but just like you mentioned, I will cut my winners early when I see $300 in 30 seconds. It's just hard not to take that quick money, but the trade will play out, and I'll leave money on the table, or I'll cut my losers a little bit too early because I'm like, oh my God, I'm down $200 in 5 seconds. Like, what do I do? So I think I used to, I messed around with trading with the tick value on the chart. But then I realized very quickly that I can just do the math in my head within 5 seconds and know exactly what my P&L is anyways. So I do actually know people that just don't have anything. They just have their take profit, their stop loss, and don't have any numerical value. So I think it's a very hard thing to get over. And if you can get over and the money does not matter, that's when you know you absolutely made it as a trader. Would you guys agree?
I don't think it's one of the things that there's one answer fits all here. Like some people can look at that P&L column and be perfectly fine with it and it doesn't impact them. And oftentimes some people like to look at it honestly and it kind of helps them, but that's just not me. It drives me crazy. And I'm kind of similar to Becky. I want to focus on the trade. I want to focus on the key levels of support where I'm managing that trade. I don't want to be influenced to do something based on the P&L. Now, obviously, you kind of already know where it is, right? Like you can probably tell within a few clicks of where your P&L is. Exactly. So it's always in your head, and so I don't need the visual because it's already there. But
I think you can use it as a tool as well to know like where you need to ideally scale in and out and when you can see it fluctuate, especially if you're in a position where you're starting to adjust your leverage size. If you have a strong stance and you're starting to leverage up, you need to have eyes wide open and fully understand what you are taking on. So if it's anything outside of your normal trade size and trade setup, I do think it's an important metric to kind of pay attention to because you're shifting your trading a little bit in that situation. So you want to kind of know where you're at on the gameplay field because that can be a factor of as you're adjusting your system, you do want to be eyes wide open on all the implications of that. And then I think Yeshwan's comment is really good. I mean, if you have a little bit more maturity with it and you kind of want to understand all aspects of what your motivations are, you can use it. But if it is causing you to go into that fight or flight and get more aggressive and fight for $100, then that is when I think it can be detrimental.
Yeah, absolutely. And I think, like you said, every trader is different. Some people don't care. Some people do care. But as always, guys, great discussion and another great episode of Market Skycast, the BluSky podcast. If you are listening for the first time or you're just joining us, we do this every Monday live on YouTube. So we'll be doing the same thing next. And if you're here watching on YouTube, stick around. Matt and Becky will have the Power Hour show starting at 3. Maybe we'll get them to start a little bit earlier. We'll see. But they'll be doing some live trading, some actual technical analysis. Hopefully hit a banger. I know Becky hit 100 points during Power Hour on Friday. So, or no, on Thursday, I want to say, whatever. It's 100 points almost every time she streams. So it doesn't matter. Just join us. But until then, guys, we're going to take a quick little break and stay profitable.
Hey guys, welcome to Psychology Lab. It's Becky here. I'm happy to be here with you guys. How's everyone's day? How's it going? Just gonna type in the chat and say hello. Welcome back. How's everyone? Guys, got some good trades this morning. It was a very interesting morning. With the little pullback and then some longs. The market is bullish, remains bullish. There's a little pullback. Anyway, always interesting, right? Okay, well, let's talk psychology, huh? Because that's a key part of our growth as traders. I have experienced, and I know that's true for a lot of the traders. Nearly all that I have encountered and worked with have been everyone learns a technical skill and then they have to figure out kind of the deeper layers of what consistency and success looks like after you get a fundamental lockdown. And so that's kind of where we're at, and how I kind of approach these psychology labs is what topic can we discuss that really will help us all be more productive and more, lock in that green on the charts. And so that's so important. And so today was actually a suggestion from one of our traders, Mary. She is in the live streams regularly. She's in the Discord here at BluSky. And so I really love when I get suggestions, because then it helps me figure out where we're at in our headspace, and what can help you will help me, will probably help everyone else. It's like, when you're in class, this is early years in trading are equivalent to college to become a successful, profitable day trader. And so when you're in the early phases of that, it's strongly encouraged to ask questions and kick things around and say what's on your mind, because, that old adage is true that if you're thinking it, probably a lot of people are thinking it and working through it on their own. And I am very grateful to be in the position to be able to have these conversations with you guys and just talk about what is happening in our experiences as growing day traders and how we might be able to lock in. So I hope Mary pops back in today, because I love this topic she brought up. So the conversation today is going to be about understanding ourselves, knowing who we are and how we can make our trading work for our best good, right? Our most successful outcomes, and allowing it to play to our strengths and diminish the implications of our weaknesses, sort of, building a system that really works with who we are so that we can embrace it and fully achieve our highest potential. And so I think that there's deep layers to this. When she made the suggestion, I was all about it, because there is so many layers that we can unpack with this that are kind of driving our energy that we bring to the charts. And so let's, I love getting into the layers of what is going to cause significant change for us. So let's do that. I mean, today is it's a blue sky psychology day. And so, early in the week is a great time to have these conversations as well. I think that that's all good things will happen from this. So let's do it. The question that changes everything. Okay. How many of you have found a strategy that worked only to find yourself unable to consistently follow it? Anybody? Because I have absolutely found consistent strategies that work well, and right, they are established. They come from mentors. They come from profitable traders who have been locking in greens for a long time. And so when we see those opportunities, and we see other traders making money, you think, I can just adopt that strategy, I can back test it, I can understand it, and then boom, like profitability, right? That's the goal, that's the mission, that's what we are pushing towards. So what's the deal? Like, why are we not all profitable if there's, multitude of consistent strategies out there that bring profits? Well, where is the breakdown, and how can we target that so that we can instead like pivot and grow and achieve greater success? And so I think that the common assumption, which is certainly how I approach trading in my early, years, is that when my strategy was really fine-tuned, when I really understood VWAP and moving averages and supply and demand, that's when the money would flow freely and endlessly and with multiple zeros on the end. But that's not always how it goes down. Okay. That's why we have the psychology lab. That's why these conversations exist in the trading world, because it's not exactly how it always goes down. There is a deeper truth underneath of that. And that a lot of times a strategy is only as good as the person executing it. And if it feels out of sync with who you are and how you behave, how you see things, how you're trying to use risk, put risk on, take risk off, if that is misaligned, then it's always going to be like swimming uphill, like paddling uphill. It's like going against your grain. And so it's not going to be as fluid as it could be to have like beautifully growing profits, right? That makes sense. So you can have a profitable strategy and good risk management, which is a part of that strategy, right? It has to be. You can have a strong understanding of market context and how it moves and how value migrates and what it looks like to be in a trend. But then the sabotage comes in. That's where everyone kind of can fall on their face, right? If you don't always act consistently in alignment with that plan. So what's the problem? Our psychology is fighting the system can absolutely be a situation where who you are is countering what you're trying to do. And so then it gets very, very messy. And so what I want to talk about today is basically this. How can we adjust everything, understand ourselves at the deepest levels, and then make it all cohesive so that we can lock in? The unconscious is powerful, right? I don't know if you guys have done much research into this or looked into it. I'm going to talk a little bit about some research today, but the subconscious is a boss inside of every one of us, right? It's a positive energy. It's a force underlying what we are doing. It kind of helps to run and manage our trades. And so it has to be given credence and understanding and energy for that. Now, Carl Jung is an important person out there in the world who speaks to stoicism and personal growth and psychology. This quote from him: until you make the unconscious conscious, it will direct your life and you will call it fate. So that is basically getting to the heart of like, there is deeper layers of it, and we can choose to dig into those and try and understand them as part of our subconscious, unconscious, so that we can start to have some power and work with it instead of fight it. Or we can just, call it what may, call it fate, call it just what's going to happen. The chips will fall where they may. Well, I don't know, maybe let's unpack that a little bit and see if there is something underneath of that we can have, some potentially greater control over, right? I think a lot of traders will lean into fixing results by refining their edge. But what if the real work is more internal, right? What if that is what changes everything once you get your strategy locked in? I think that that's true. And I think that's why we've had some really good conversations here at the Psychology Lab related to that. So, hey, Fatima, nice to see you. So today we're going to dig into that, how the unconscious psychological patterns can shape our decisions that we encounter on the screens. Mary, I already gave a nod to you, girl, because the subject is brought to us by you. So thank you for the suggestion. I'm super happy to have had it. I really actually very much love suggestions for the Psychology Labs. So Cheers to that. So that's what we're going to do. Actually, exactly that is we're going to explore our subconscious, unconscious psychological patterns that are having a large contributory factor to our decisions when we are at our charts, and how we can work with that to be more powerful. Okay, so let's start here. The trader you think you are versus the trader you actually are. Is that something you guys think about? Like who we believe we are to be, but then the reality sometimes speaks a different tune. When we look at our journal and our outcomes, the end of the week, we review what happened. So let's unpack that, right? Most traders know goals. We know account size. We know where we're trying to move through time, right? Through our energy and what we're bringing to the charts, what we would like to build as day traders. We also know setups. We know, buy and supply. We know, mean reversion. We know breakout trades. You have favorite setups. You have A+ setups. You have B setups that you just have to work through. And then we know preferred time frames. Like these are things that we've locked into, we have studied, we back tested, we have notes on, we have an understanding of. So that is concrete. That is something that we feel like we can lean into. But what about, here's where it gets different, right? Here's where the variability comes in, and not every trader even thinks about these things because you don't know that you need to until you know that you need to. But a lot of us don't think about early in our trading career that what our emotions will be under pressure. When the market starts moving, it starts going against you, your P&L is dipping, you are encountering some resistance and some potential struggles on the charts. What's going to happen with your emotions? Where is your underlying programming going to go to that is going to feed how you manage that trade? A lot of times this can be kind of deep wounds. And so like parts of our life that have nothing to do with trading, but have poked at our internal sense of worth and identity and belief in where we're going and status quo, where we've come from. What we understand money to be worth and how it can be used or not used and have to be squeezed coming into our world. What it feels like to be under financial pressure. All those things, I don't think that a lot of people have to think about when you're not putting this kind of pressure on in terms of day trading and you're seeing the immediate like positive or negative outcome of those situations. So I think that those are big things that it's important to kind of uncover. Also, like the hidden motivations for trading is a big factor as well. Are you genuinely just a practitioner and you want to understand the market movement and see if there's potential here? Or is it like largely driven by a financial money mindset type situation that may or may not be super healthy until you give it some attention and some fine tuning? So what are the motivations? What are the underlying wounds? What are our emotions going to play at? Those things are really a big deal about what happens on the charts, but that is a deeper layer of who we are that is not always focused on and kind of given the time to be understood and supported in a way that helps us kind of break some barriers and break through where there could be a pressure point at. And so a gap on, you might have this great strategy, but you have the psychology that you're kind of trying to ignore because that's really deep, hard, complicated, weird work that you're not really into it. You'd rather just focus on the strategy and the money should come. But that disconnect can really lead to a very long period of complication and struggle. And so that's why it kind of blowing it open sometimes is rough for a period, but you can find deeper layers that you need to work on managing that can really be a game changer. So why do you really trade? Let's start with that. We just kind of start somewhere with this topic, right? So when traders are asked why they trade, the first answer is almost always like surface level. It's conscious. It's the obvious one, but it's generally not the real one, like the deep internal underlying one. So I love this. I heard this exercise a long time ago about figuring out your why can be surface level, but it can be so many layers deeper. So if you just start asking yourself and then going one more why deeper, the surface level is like financial freedom, right? I want to travel. Ooh, we're going to get into the wound part. Hang with me, Mary. That's like deep important. So I promise I'll get you. But so autonomy is freedom from the control, right? We want to have financial freedom. We want to be able to make our own income. We want to not have to clock in and out for our job. There's no boss. You don't have to report to anyone when you're trading, unless it's like you and your partner maybe, or your bank account. But you have a lot of autonomy, financial freedom, so that you can be economically independent without having to, again, clock in and out. Those are a little more surface level, but they start to get deeper as you go on. But the actual driver isn't always money. It might be autonomy, validation, self-worth, recognizing that distinction changes everything about how you design and follow your system. And so I think when you can say, I want financial freedom, but why? Well, I've never had financial freedom. I have come from a home that was just barely making it through. And I didn't come with a lot of gifts and ability to travel and nice things in life. And that sounds amazing. But why does that sound amazing? What do you think you need? Well, maybe I've always felt like I was less than others. And I never felt great about the fact that I didn't have what some other families had. And I was always jealous of that. Well, what do you want to do with trading that would bring you out of that? Like, how does that make you feel? Well, I want to feel like I'm worthy of all the good things too. Like, I want to feel like I have more in me. I'm worth more. I can create a bigger world that the other people maybe had more easily. I want to build it for myself. So you see how going deeper, like, gets into like more of the heart of like what you could really feel about financial independence, what it could mean, what it could expose in who you are and what you are driven to achieve beyond just the trips and the ability to, freely peruse different car models. So yeah, self-worth, I think, underlies a lot of that when we start getting into what it means to have true financial freedom. That's why we're getting deeper into these identity wounds there, Mary, is because when you start digging into the why behind surface level on all psychology questions, it gets less comfortable and exposes more about who you really are at your core. And that the who we are at our core is what creeps through in moments of pressure. That's what creeps through when we're in a drawdown, when we're in a tilt situation and we have to decide whether to feed the tilt or to walk away. Those underlying wounds and like whys and driving motivations for all that we're doing is what is kind of deep inside there. And when you really feel the pressure, that's what seeps out, because your frontal lobe, where you have the focus and the ability to be logical, gets given less energy the deeper you get into an emotional high pressure situation, such as upside down in a trade or in beautiful profits in a trade as well. So those are a big deal. I think the hidden motives that shape trading behavior, most people often trade to meet psychological needs that they haven't consciously identified. Again, that's where we're going at today. So these motives don't disappear, but instead they surface through behavior because they're not obvious. You have to really have some quiet time and think about and maybe journal out, like, what is my why? And if you get to a why, what is the why behind that? And then you peel back the layers of the onion on that. And doing some focused work like that will expose these, underlying layers, but they are usually not consciously identified early in a trader's career or until you really kind of poke at it. And so what could be there, right? And so a validation, needing the market to confirm your intelligence or your worth. That's that self-worth kind of thing playing into there. The market can be really validating. When you start learning a system and you talk to other traders and you start locking in good trades, it can be such a boost for who you are and where you're going and what you are worthy of in terms of finance or credibility or momentum or prestige in this industry. That can be something that you didn't think about. It could just be early. You want money to travel and you want to see if you can do this thing. But then once you start getting into it, the drive to persevere when it gets hard, that comes from something deeper. And this validation could be a key point. Also, control. So seeking certainty in inherently uncertain environments. Now, there is a lot of variability in life, in adulting, once you get past childhood and early adulthood, the teens and the early 20s, you start to figure out, like, my life is going on. My life is progressing. Like, what does that look like? What is my experience? What could I have control over? Where could I take it? Where am I stuck? That is a sort of control over our lives that not everyone seeks to have and is not super tangible if we don't purposefully pursue it. And so that is a sort of situation where, like, there is a lot of uncertainty and a lot of things could be taken out of our hands in terms of you're an employee and you need this pension and you need this health insurance and you need you need to work your hourly hours so that you get this paycheck so that you can afford to do this and blah, 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 XYZ. You get kind of stuck in a rat race. But if you want to pursue, bigger things, there's a control element of, like, can I control it? Can I not? There's uncertainty up there. what does that mean? And then if you're seeking control, but it's still uncertain, then if you squeeze it too tight, it's just going to blow up harder too. And so what our connection is to needing control is a big driver as well for a lot of people. Some people really need that. And so in moments of uncertainty, it gets dangerous because you start making haphazard choices. You start making emotional choices to grasp back that control instead of being a little bit more fluid with the uncertainty that is kind of in the backdrop of what trading is. We can't always lock in certain outcomes, but accepting that, it takes a choice. So recognition, trading for social status or to prove something to others. That's a tricky one, and it's a slippery slope because it's easy, right? Trading is obviously we're online on YouTube right now, right? Online on BluSky TV. Seeking recognition is a very real thing that you can get into in trading. And it depends on what communities you're in, what rooms you're in, who you have learned, who you have met. If that's a part of the vibe of a place where you're at, is to want to seek the recognition or a status or being able to, post XYZ each day, that can drive you to make certain choices. That can drive you to not take a loss because you don't want to show a red P&L, or to trade minis when maybe you're not totally ready because other people are trading minis. And so you want to be like them. That can be a dangerous situation in terms of like trying to fit in or one up or look great instead of really locking into good trading. And so those are different energies that you can bring to your trading, and seeking recognition can make sense, if you haven't had it or you've had recognition in other areas of your world. Maybe you had a second career and you really were a high achiever, well recognized and well supported, like sought after as a resource in that environment. And so then when you come to trading and you're new, you're like, no, I'm a boss. I'm really good at what I do. Like, I succeed. People look to me for advice. That can carry over. But when you haven't had a really robust, consistent system for quite some time, it's harder to seek that earlier, but that can be a driving force for the way that you behave on the charts. Now, throughout today, I just want to say, with each of these topics, I'm kind of just, some of these are going to be more powerful for us and some of these are going to be less powerful for us because we're all made up a little bit differently. So I wanted to seek the main ones that impact most of us and kind of talk about them independently. And then as you guys are listening, just think about what your experience is and how it has potentially played into your trading. What speaks to you more might speak to someone else a little bit less. And so we just need to find the parts that really kind of make sense with our journey and our experience. And then, get the information from that and allow it to help us like strengthen who we are as traders. That's the whole point of this. Because with psychology topics, it's massive, right? The way that our brains work is like so variable. And so my role here talking about like one subject, I kind of talk about it from different angles. So that way you can hear it all and then see which one strikes the nerve most in your energy. And then those down along that line is going to be the most helpful, is how I see it anyway. Now, freedom also, escaping a situation rather than moving toward a goal. So sometimes we seek the charts to feel some kind of way, whether it's freedom from your job, you have the autonomy here and you're irritated by an obnoxious boss over there. And so this is a freedom for you to just do you and to like potentially build something impressive that is on you. A retail day trader, like we hold the responsibility of our outcomes. And so that gives you the space to like do you, like believe in what you are trying to achieve and lean into that freedom that trading can provide. Instead of just like, if I make $400 a day, then it can do this. And it's like a really business model strategy. Just seeking kind of almost an escape into that freedom can be good and bad. Like there's deeper layers of freedom, I guess is what I'm saying is, it can be used for a positive energy for the freedom that you're trying to create for your family, and then have that be a factor behind a business model and a strong strategy that you adhere to, versus just seeking almost the privacy to just do what you want to do. And I think that part of that underlines a lot of us retail traders' approaches, but it has to be contained within its place, understood, given the, respect that it deserves as part of our situation. But the priority has to be strong executions in order to make money, because there's just too much leverage in the world of trading. There's too much ability to lose money. You know what I'm saying? Carl Jung again, the privilege of a lifetime is to become who you truly are. And that's why I think these conversations are so valuable, because trading is a beautiful opportunity, like really incredible, massive, like overwhelmingly positive opportunity for us. And it can help us give an avenue of becoming who we really are. It can expose our deepest like wounds and identity layers. And then we can work with them, grow with them. If we find something deep within us that feels like an unstable wound, something that is hurting and that expresses itself on the charts in and potentially a negative way usually, then if you approach that and you try and heal that and then adjust it and make sure you're giving it credence as a part of who you are that made you and brought you to this point and working with it as you move forward, it's so powerful. So I love that quote. Okay, so the drivers behind this, right? Let's keep knocking through this. Many behaviors that look irrational from the outside are psychologically logical from the inside. So they're not mistakes necessarily. They're a response to unmet needs. And that's where I'm talking about like the deep needs within us that we don't always recognize. If our executions, our outcomes are kind of trying to meet that need without asking us permission first, it can play out on the charts. And so we want to recognize those. Now, this is a different way of looking at similar things that we just covered. So I'm just going to cover it in a slightly different way because maybe it will like help just kind of experience it and understand it. So one of these is definitely the need for certainty. So over analyzing, freezing on entries, waiting for one more confirmation. The market threatens uncertainty and the brain seeks safety. And so these situations, this is where you kind of have more of the like hesitant profile on your charts, where you see your setup and you just wait. You're just not sure. You're not sure if it's quite there. One more confirmation would make you feel better. And then all of a sudden it starts flying. And that's really frustrating. So that need for certainty could be a part of deeply underneath of like, you want to feel safe and you want to make sure that you're making the best choice. And this has to be super logical and smart, and it has to be a good investment for your money. And so then you kind of hesitate with that. And so that seeking that safety is something you kind of want to recognize and give support to and space to, and allow that to be a part of who you are, but then work with it in terms of targeting. Then in that situation, you want to target decreasing hesitancy in those sort of behaviors with active choices. A need for significance is another one. So oversizing positions, chasing home runs. The losses can become identity threats. So this is where you're like less comfortable in taking the hits, and you give it more room. You will average into a loser because you don't want to take that loss, because you want to feel really positive with who you are and what you have going on. And so the losses can become threatening, not just financially, but also to your worth and your core. And so that can create these type of like more aggressive sort of behaviors on the charts. The need for control. So that would be like moving stops, interfering with trades, kind of monkeying trades, squeezing trades, overriding your system. That's where the uncertainty feels intolerable. You want to be in charge. You want to make this work or not work, and it has to look like this. And so if that uncertainty really bothers you and you need to have control over your situation, it's going to play over in these certain ways on the charts, interfering with your trades and overriding your system that you have defined. If it says you get in here, then you get out there, but instead you get out here because you just don't like XYZ and you want to. So over-managing could be a sense of an underlying need for more control, which is something to kind of know and give respect to in your life. Similarly, the need for achievement, which sounds really positive, right? Like achievement, high achieving, like making that great P&L, making those outcomes, that's the goal, which it still should be. But if you lean too heavily and the winning is expected and it needs to happen, then you can also not take the losses and not let it happen over time, but instead you can put pressure on doing it faster so you get the rewards. Your standards keep rising. You're not satisfied with the $300 that got you to a payout by making $300 consistently. Instead, you are more so forcing bigger outcomes to make sure that you are achieving higher metrics instead of staying stagnant or whatever, even though it's just allowing your system to catch up with you, which that can lead to burnout because you're constantly increasing the pressure that you're carrying on yourself, and it makes it harder and harder and harder. And that is definitely a recipe for tilting. So realizing if you can kind of dig into any of these behaviors that are in the starting of each of these boxes, the oversizing or moving stops, if that is a behavior you see on your trading, then the title of this could be kind of an underlying subconscious need and driver for you, which is a part of all of us, right? These are the psychological energies for all of us. And so what drives people is not what they know, but what they need. And I love that quote by David McClellan, because driving forces are not always understood. It's not always logical. It's not always mathematical and scientific, especially when you're doing something as day trading. It's the psychological element is very, very real. That's why we have these conversations. That's why the psychology topic is so big in trading, because when your strategy isn't holding you and you're struggling, there's a psychological underpinning to that. And so figuring out what that need is that is coming through your trading and out in your executions, identifying that and working with it is such a powerful choice in terms of targeting the need versus the way it plays out on the charts, which is why I love this conversation so much that we can dig into this. Oh, where's the mouse? Self-awareness is a performance multiplier. You guys heard the term self-awareness? You guys are kind of sleepy in the chat. Hope you're just enjoying listening to me keep carrying on. But self-awareness is a really powerful tool. So there's research behind this. This is why I'm going to nerd out with you guys on science a little bit, because I like to do this every time we get together. But a lot of the way that I think about the topics that we bring here today is like, is there psychological research that supports what's going on in our brains and how we can work with it? And there is such psychological research behind this topic. So this one research study found that while most people believe they are self-aware, only a very small minority actually demonstrate when it's objectively measured. So they figured out like objective tests to figure out what your self-awareness level actually is. And for people who thought they were really self-aware, it was actually a very small number that played across and made it through that test, showing true self-awareness, which is so interesting, right? I think we oftentimes say, of course I'm aware. Like I know who I am. I know how I show up. I know my strategy. But the layers beneath that, I think, is where the real money is at, so to say. Self-confidence in self-knowledge is in itself a blind spot. So in trading, blind spots can be really expensive, right? If we don't know, we don't know, or we don't know the underlying issue that is holding us back, there's so much risk there because you're basically not really exposing and really dealing with the biggest thing at hand. And so studies in emotional intelligence consistently do confirm that self-awareness is the foundation for self-regulation. And self-regulation, you guys, that's where we want to live. That's where we need to lock into being able to recognize what our minds and our emotions and our psychology need, so that way we can regulate and make the right choices in the moment. Self-awareness is the foundation for self-regulation. So that's where I want to talk about. Self-awareness is super, super a powerhouse for us. You can't manage emotions if you don't recognize them, if you don't call them out of the shadows, if you don't name them and say, I am feeling XYZ, probably that means this is the risk and I maybe should walk away. I'm feeling really stressed and anxious and I'm very uncomfortable in this position. Probably that means you should close it because you're no longer operating super focused and like front brain mode. So before asking, how do I stop revenge trading? This is where I want us all to think of, what is revenge trading trying to satisfy within me? Am I trying to regain control or restore self-worth after having a bender on the charts, reducing discomfort? What underneath of what I am experiencing am I trying to like fix right now by getting back in this trade, by forcing my P&L to go green because I don't want this red day? What else
BluSky TV. I got the amazing Coach Becky with me today to navigate Power Hour. Our favorite hour, Becky, is Power Hour because you get Coach Becky and myself to not only break down the market and have awesome conversations, drive the technical conversation. And we're going to start with Coach Becky. Becky, how you doing? By the way, had a wonderful time on the podcast with you earlier, but officially for Power Hour, how you doing? And why don't you give us a little bit of a breakdown on your current trade setup here?
Yes, thank you. That was a fun podcast. I love podcasting with you guys. It's great. Yeah, so I streamed with Coach Justin in the morning, and I caught some good trades. I caught some shorts, and then I caught the long, and then I scalped a little on the short also. So that was a fun, very busy trading morning. But I was coming in, and I was switching gears from my podcast mode back to my charts as I was getting ready to stream Power Hour with y'all. And I was noticing that we were kind of squeezing and we were angling down. And I'm like, oh my gosh, could the support hold or could we break? And so I was looking at all my levels and I drew this kind of wedge on the price action that we're seeing intraday today. And it was right here. Price was pushing up right here against my lower trend line. And again, against the moving average 9 that it had broke below on the 5-minute. And I was like, okay, like we're angling down. Also, what I had noticed is that it's not a super aggressive day in terms of the bulls. There has been some bearish moves on there, and we haven't tagged VWAP yet. So this blue line down here is my VWAP. However, on my other chart, I have it higher. And so I put I'm in a short basically, but I put my exit at the more conservative VWAP. When there's misalignment between different programs, I tend to go for the more conservative target because the more aggressive one might not get hit. Yeah, right? See? Yeah. We want to get filled. We want to win. Yeah, so I got in here just with 3 micros. I don't feel a need to trade much heavier than that. And my intention is to scale out 1 when we break this low here of the previous push down, and then we'll see if I can hold the other 2 to my VWAP target. But what I was looking at on the larger time frame was, on Friday, obviously we saw this big liquidation area. Big liquidation. So then I drew this candle as resistance coming into this morning because it kind of fell and it hung here midday and then broke for another strong leg down. So this was resistance this morning. We did clear that with strength today, but I left it on my chart for Power Hour because I still think that it is in play. But then coming down to the smaller time frames, I drew this. This is actually the a 5-minute range, this purple one that's kind of overlaid on that. So we're basically just filling out inside that chop. But that is the opening 5-minute range. And we have really played above and below that a lot today. I'm trying to get this so everyone can see it really nicely. But the first move was bearish. And then we found support down here, just above VWAP as well. We had to push up. We didn't quite get to this target that I was hunting today. You guys heard me in earlier stream. I was aiming for 61 and 89 was my exits on the long, and it didn't quite get there. So breaking it down to the 5, that's where I found my entrance for the short right now, is because of that. I drew this trend line on the 5-minute, but kind of zoomed out. And then here we pushed up against both the 9 moving average, as well as that trend line that was broken here, retested a couple bars, and then was again shorting off of that. So I got in really high up here. I started with my stop loss high above the last pivot on the long side. But the longer this progresses, I might snug it down because Power Hour, we only have an hour left of the day. And so I'm hoping that it will drop down. But you guys know that I do hunt the VWAP target in Power Hour if it is within range and fits with the context. And so for me, we've seen plays in both directions today. And right now we're currently angled down and we haven't tagged VWAP yet today. And so I don't know that we'll get that low. I'll scale off here, ideally, when we take out the liquidity at this pivot. And then I'll see what happens down here. It could not get to this target. That's, again, another reason why I put it at the more conservative VWAP. Well,
honestly, if you get underneath your first pivot there, I'd like this to get to the second one and even maybe a sell-off coming into the close, Becky, because I'm not involved yet, but I will get underneath that pivot because you break that pivot. And I'm looking at the ES, but it's a very similar backdrop to what you're looking at on the NQ today. You get underneath that pivot, you're also getting underneath the previous resistance channel as well at the 74.20 level. And so before we even saw any upward movement in price today, we broke out of that 74.20, and then that pivot happened at the 70.23 level. And so it's kind of, there's that 3-point zone of a very important support zone between 74.20 and 74.23. Underneath that level, it opens up a good 20 points down to 7,400. And then we actually could catch some volatility as well. And so I actually really like your trade here. I thought the NASDAQ was in a better position for a short earlier today. I think they're now kind of caught up to one another. I don't think there's a substantial difference between the ES and the NQ, but I did prefer the NQ on both sides of the equation because it had a little bit of a better trend today than the ES did. But now a little bit of a similar backdrop here, but I'm certainly hunting that 23 level, and I'll go with a partial underneath 23, and I'll actually add to it if we get underneath 20. And so just kind of targeting down around that 7,400 level. I want to get your take on gold here as well, if you don't mind, because I like the current trade you're looking at. And you know me, whenever we're looking at gold, and if you'll go like down to the one, not the 4 hour, but like give me a 15-minute read here, because I kind of like the ultimate reversal that is playing out here on gold.
Yeah.
And I'm not involved yet, but I have been looking at this all day long, and I am thinking about going either above that pivot you just drew or the one against the current pattern, right? Exactly. That one against that current pattern right there. How would you approach let's say it's not gold. Let's just say just pure technical conversation here. How would you approach a potential breakout like this?
Yeah, I think that is a great opportunity because it has been pushing up since pre-market. It pushed up and it didn't quite get to that target, and it fell back, but it didn't fall back hard, and it fell back on top of VWAP, which is right here, which would be beautiful long here on VWAP. This is kind of making like a multiple attempts at the top here. So I don't know. I think that it's continuing to fail to break higher. So we'll see if it could come back down here even to hold one more term. It almost seems like
so either one, wait for a VWAP bounce to kind of get in early position to go into that, or wait for a clear breakout.
I think so, yeah, because I wouldn't like the long here because it's tried 3 times to break higher and it hasn't. So I think it might be going a little lower. But if it broke higher, that would be a stance. And so then we could take that momentum up is how quick read on that.
Yeah, I like that. That might be a tonight conversation with the Asian Open tonight, but that is something I'm interested in on gold. Just want to bring it up. We can go back to the NQ or the ES. What's up? What's up, Ace? Good to see you, brother.
Yeah, hey Ace, hey. Yeah, this is the 5 minute on gold. It almost looks like a soft lazy M here. So if this breaks down, I think it can come down to the support area we saw earlier.
Yeah, I definitely want to buy it where the current price is. I kind of feel like we're going to test VWAP here, or we're going to hold in base and do absolutely nothing.
Yeah.
And because because of the timing aspect of that, it might be a tonight conversation for the Asian Open with Coach Breezy, but that is a level between the 71 and really kind of that 77 level. That 6-point range right there is a really important intraday level of resistance. Anything you do underneath that level of resistance on gold you would certainly be looking at that as a front run and scale and position size accordingly. Thank you for that. But yeah, we can come look back at the NQ here because ES is getting testy.
Yeah, it's about to take out my first scale.
You're gonna scale, and I'm gonna make my first trade on your scale.
Get it, hey. You know what?
On this trade, I am. I do like our edge here.
I do too. Yeah, I couldn't go long. I mean, the long did not get to my target. There's my first scale on the short on NQ. Yeah, it was breaking down, and then the trend line was there. A trend line was here, and it broke. That was a nice retest.
Haven't had an official higher high since like 2 hours into the market session today.
Exactly. Yep. And what I didn't like about that is it had clear targets just above, and it could not get there. Like the bulls just did not have the strength today. It was a beautiful run up. We were in it.
If you look at what it ran into, though, Becky, on the daily chart, it ran into a lot of resistance.
Part of that is what you're saying is exactly the truth, because I was looking at my level after I got out and it didn't get to my target, and I was stop gain situation. I was looking at where I drew this upper resistance here, and I was conservative with it. But if you actually like look at it down here where we stopped was actually the bottom of this larger base here. So if I would have been a little more gracious and given this a larger area, it would have hit my target like precisely. And so,
I'll give you a couple data points of context for that level of why that was a high. That's also the 20 daily period moving average. That's also a previous daily pivot point recently as well. And so it wasn't so long ago on the daily chart that was acting as a resistance level on the daily chart. Now you're running into a cluster of moving averages that are now downward pressing. There's just a lot of resistance at that level for the market to break through in a one-day move.
Yeah.
I kind of feel like if the bulls are going to recover what happened on Friday, it's going to take 2 to 3 days, and they're going to have to get some data points along the way to help that. And so, yeah, I would have been pretty surprised to see that level get broken today off.
Yeah.
Basically no news alleviation event, like, and not even knowing, like, the market got gut punched on Friday. We're just seeing a little bit of slowing momentum today. So I just, without a catalyst, I don't think you're going to recover up the entire drop we had on Friday.
I had no idea this trade was going to be this fast.
By the way, I'm in that trade now.
This is why I'm a bear, Matt. This trade was this fast. This is fast. I'm be out right now, 130 points in 20 minutes. Whoop, whoop.
Let's get it.
Let's get
a little froggy here.
Let's get it. Let's take it, sink it.
This thing's not overextended. We're just breaking. Let's get it down a little bit. I know you got your scale out, do that, but let's keep a partial here. That's all.
Oh God, are you talking me into holding longer?
Well, I just got in. I need some friends.
I like 710 on your downside. On ES, I like 710 a lot.
Yeah, I'll scale out at 710 and then ride it to 7,400 and make a decision. That's kind of my thoughts.
And pull this down too.
Didn't we do that last week? 710. Like, I don't think it was 7410. It was probably like 7510, but I can't remember. But there was a 10.
Yeah, it's an area in play.
Yeah.
All right, I'm going to put my scale out location back on, and then this one can go a little lower. Where is that? 12.
Oh, we getting excitable, Ace? We going to 0?
Drop it, mama.
Like it's hot. Drop it like it's hot.
Yeah. It's Friday night or Monday afternoon. I don't know.
Can I at least scale out on the way to 0? Like, is that okay? Can I?
Diamond hands.
Yeah.
Oh, look at how close I got to my target. Oh, yeah. Wow. Like a half of a point on NQ.
You're going to get another test down there.
I know. Son of a gun. That's the thing. It's a key level. Like, it's just, that is my VWAP on, over here, it's at 29 is my VWAP on one of my main charting charts.
We have increasing volume going into a breakdown.
Mm-hmm.
Let's get somewhere.
And it's taken out. It took out some liquidity at this. Every time we hit a pivot, it takes out some liquidity. So there's going to be some dancing at those levels. On ES, 74.18 was the key area from Friday as well. It's the value area low. So it's dancing a little bit there. Gosh, now I got to think about where to put my runner if I'm going to take one off and leave one, because we got all day to hang out. I don't hate that. Do you think you could get down and take out the low on NQ? Because ES is weaker and already took out the low of today's session.
Can we take out the low from the futures open last night?
No, NQ today. So that
just
would be
today
down
from the cash open.
Yeah,
I think we can test the lows there.
Right? Because I had, where is that? There we go. 329 is the low of cash open today. Okay, so that was my 130 point scale out.
This gold trade is not going to be a trade till tonight, given the fact that we're talking about shorting the ES right now.
Yeah.
So let me get NQ up there.
I didn't talk about long in that because it is breaking down on gold here.
I think NQ can get to 290.
I'm not going to take the gold one.
Like, yeah, I think we can get 100 points here. 294
was my target this morning if we kept falling, but we did not.
I want to target past that. Like, if you get under VWAP, like 290, 300, like 300. So
didn't move it. I left it. I didn't move it fast enough. My runner just got taken. I was debating where to put it.
Oh, do the retracement then. Just wait for a pullback.
Yeah. Yeah. Hey, that was a thick win. That's good.
That was a great trade.
Yeah, that was good. I actually think I'm going to show you guys.
I'm going to have to get another big 5-minute candle just to catch up with you.
I think I just passed this account. Actually, I was aiming for 20K on this account, and I just passed it. you guys, live on stream. I had my P&L hidden because I knew it was within range today. And so that's fun.
Nicely done.
Let's see what my stats are. You guys want to see my stats while it's playing out? Why not?
Yeah, of course.
Hey, so this is the dashboard. Tracy is awesome, by the way. Okay, so profit factor 1.93, average win loss about 1-to-1, win rate 66%. You can see it in real life. That's my equity curve. Can't be mad about that.
That is a 45-degree angle up. That's fantastic.
And a lot of it's been live streaming. I've been live streaming a lot. This is the last month, basically. I've had this account like creeping it up towards 20K, which was the target. And then you can see I didn't trade Friday. I got no bites of that beautiful liquidation. Traded small on Thursday because I didn't trade all day until power hour, and I traded light. So this is about a point, like 800 to 900 is kind of average. 200 is light, 1400 is high. This was my last month. Pretty solid on the month. My average is like 3.5-ish K a month for this account size. The leverage size I trade. You guys see I trade a lot of micros. That last trade I was in was 3 micros. On NQ, I trade like 2 to 5 micros. On ES, I trade 4 to 10, just because it trades a little bit differently. But yeah, so that I had to progress that to a live account. That was kind of fun. All right, let's get back to the charts. We practice what we preach around here is the moral of that. Like, we talk about the trades live, we execute contracts, we talk about what we're seeing, why we see it, how we draw our levels. Like I told you, why I drew this purple one is the 5-minute opening range. This one is based on the hourly resistance from Friday. Those are the levels that were key for me this morning. I did get stopped out on my second short because I thought it was going to go lower. Anyway, not perfect, but profitable.
Good trigger though. Like, I see your trigger there, and that's a good trigger.
Yeah.
On the one you got stopped down on.
Yeah, let me bring it.
NASDAQ needs to get under VWAP. Come on, let's go.
No. This is in target. It's going to hesitate here. I will bet money.
Oh yeah, we're gonna dance a doji dance here.
Yeah, I think that's why I was like, I might as well pull up my stats and have a peek, because it's also a high volume node from Friday, because there was a lot of contracts exchanged right here on NQ. Let me see, show you what I mean. See, I drew. It's the heart of that orange zone, which was my support this morning. So this right here, where we're dancing at, is 417 is where I have it marked. Right here, that's a high volume node, means a lot of volume of contracts were exchanged at that price, which is what you can see at this consolidation. And so I put on my volume profile on another, and I saw the peak of the volume within this consolidation was at 417, and the confluence of that and VWAP was my target this morning, because of high levels of liquidity at this are often retagged and act as a magnet, the high volume nodes. So. And down here, there's a lot of open air. From this consolidation to this consolidation is a lot of open air, because this was all overnight over here. But it's definitely sinking today. I mean, the resistance here from Friday held. We've just been drifting down. That's why. And I don't know if you are this way too, Matt, but I think you are. Be active on your charts. So if you're looking for a trade, like, I think it's so valuable to draw things. Like when I came in and was getting ready to power hour coming off the pod, I didn't have these trend lines on here yet. Everything else I already had, but I added the trend lines when I was looking at it, because I was noticing we were squeezing here. So when you're squeezing, you want to put levels on that highs, lows, trend lines, and what you can lean upon. And so that is so valuable for me to be able to see it more clearly, is to put some lines on it. Some people don't like a messy chart, but I do.
You hear me talk about it as I hunt for trades, meaning I identify my levels and then I patiently wait for the price action to engage and interact with my levels. And the 70, for example, the on the ES trade that we just took at 74, the breakdown of 74.23 that I added and you scaled out one time, I had that level drawn literally 4.5 hours ago.
Yes.
Like it's been a level all day for me.
Yeah.
The first, like, my analysis was, if we close underneath 74.30, add a partial, add continuation to full position underneath 74.20. That plan was literally stated 4.5 hours ago.
Beautiful. It could retrace here, like breaking this low here with a clean break underneath this support that we saw earlier.
NASDAQ looks like it wants to test the 90 EMA on the 5-minute chart.
Yes, exactly. Yeah, it does. The confluence of that is going to be something.
This is the test whether or not I'm going to get my T2 or not, by the way.
Yeah, it's going to tell us.
Like, if the 90 EMA slaps this bad boy down, which it is akin to do, I'll most likely get my T2 on the ES. If it doesn't, I'll probably get stopped out for slight gain, I'd say.
Yeah. Yeah, I think that this absolutely could be retested and it could hold for another leg down. We've got 40 minutes left, so
I'm
it
not
could.
worried about the trade yet, by the way. Like,
I mean, we've seen
I'll set through this pullback. I know a lot of traders won't set through a pullback. I will set through this pullback.
Yeah. If I in a different situation, but given that I just crushed this account profit target and that was a really good trade, I think I'm going to chill and watch the action.
Yeah, it was a great trade.
Yeah.
If you get a good pullback where you feel comfortable, you can do it again. But
yeah, depends on the time too. I mean, if we get a pullback and there's only like 12 minutes left of the day, I'm not touching that because any game could play at that point. It could fizzle, it could pop either direction. But if there's still time in the day, we get a good pullback and we get a doji in the next like 15 minutes or so, then there could be another leg.
It's got to be perfect to get a new trade. Like it's got a path, but it's got to be clean.
Yeah. Round trip crew. That's right. Long as it's shorts, we take it up, we take it down. There was definitely plays this morning. Like I was short.
The round trip crew. Start in the morning with the buy, end with the sell. Oh yeah. Okay. Sounds like a good trading day to me.
Yeah, right. Sounds like money. If you can stay flexible. So that's what we talked about too last week of in a recent conversation about like should you be either long bias on a day or short bias on a day and then hold to it and try to stick with it or be flexible? Because I can see an argument of like holding to your bias if the data continues to support it. But I also am really in the camp of like stay flexible with the data because it can change at any point. I mean, the shorts stopped working. And so the play was long. And I traded a little more NQ than I traded yesterday. But if you're in a short and it gets to one level and then it is not falling farther and we're starting to see signs of bullish defense, then it's smarter to be like, I don't love the shorts anymore because XYZ. The data that I now understand is shifting my bias.
I might be a little bit different there, but I never come into the trading day as a day trader saying I'm going to wear the bull hat or I'm going to wear the bear hat. I identify where the bull opportunities are. I identify where the bear opportunities are. Yeah. And it's, here's my bull levels where I need to see development. Here's my bear levels. Like, and then whichever one interacts with, I'll put on the bear hat, I'll put on the bull hat. But no, like I've said this many, many, many times, the greatest flip-flopper in the world is not a politician. They're the second greatest flip-flopper in the world. The greatest flip-flopper in the world is day traders. They will flip that switch like an Allen Iverson crossover so fast you can't even see it. We're getting it. We're getting our sell here.
Yes, think it. Beautiful.
Told you I'm going to sit through the pullback, but we never got one. So that made this easy.
Yeah, that was beautiful. Like for me, the shorts was going to play if we came all the way up to here. Like.
Yeah, I thought the pullback was warranted, but just never did it.
Yeah.
Now I just want to see where it goes. Now let's see. Go.
I
didn't sell out at 74.10, Becky. I still got the position going.
She's dropping, and that is some strength.
I will scale out at 7,400 though. Like that'll be 22 points. On my average, it'll be like 20 points. So
look at this tiny doji on VWAP. This is what I'm talking about with VWAP. Like it doesn't have to be your end all, but to recognize that and give its credence is worth it because like it shows you 5 minutes of price candles exchanges on VWAP in this trade. And so like that, it doesn't mean you have to get out, but it just means it's something to pay attention to a lot of times, especially towards the end of the day when there is a full session's worth of day creating that value.
I think it has to be a target in trades. I think it has to either be T1 or T2. It doesn't mean you have to get out of the trade. I obviously didn't get out of the trade just barely, but in management, you want to have levels where you have decisions and VWAP, very similar to the 9 EMA for me. Those are decision levels. Like it doesn't mean get out, make a decision. Do you trail scale or get out? That's a decision. Make a choice. Live with your choice, but you got to go through the evaluation of making that choice. And you got momentum going into a target. That's going to make it easy for me. It's going to be either scale and trail at that point. But I definitely want to keep some on because you have momentum.
Yeah.
Like you have momentum right now. Don't let this, we talked about last week, how to let winners run.
Yeah.
Don't cut off momentum is how you let winners run. Don't make decisions based on the profit that you have right now. Make decisions based on the size of the candles and the volatility. And right now, I mean, the market's not telling me to do anything yet. So I'm just going to keep on the short and we're going to let it go.
If I had kept my runner on NQ, which I should have decided quicker on and moved it out the way. But I like the 295 area after we break the low of the morning, which is at 224, 324. 324 down to 294 is the level. The two lower targets that I could see. What this is saying, this is not locked. Oh, it's because I acknowledged that I hit threshold.
Yeah.
Wow.
You just said you did good.
I'll take that. Like, what are you talking about? I didn't.
Yeah, you're like, I didn't do anything bad.
The lockout splash can mean all kind of things.
All right.
This is the good one. I don't know how you can get rid of it. Go away.
By the way, my stop loss is currently at break even.
Yeah, winner, winner, winner or a winner.
Yes. I don't want to give up this game though. Let's go. Come on.
Yeah, come on, keep going.
I'll give up. I'm willing to give up a little bit of it, but not a lot. Let's go.
There was a little bit of consolidation around here on Friday as well before the last drop that closed out that section. There was some consolidation here around the 4 level.
Well, the market on Friday, even after the official close, still dropped like a rock.
Yeah, it did. Right. I saw that. Like it continued for until absolutely no more contracts.
Until they couldn't short.
Yeah.
Like until it was theoretically impossible.
Yeah. Which would have sucked to have to get stuck in that. Like
there was one trader like, let me just get one more in. Just one more, please. Not happy hour yet. Let's go.
Right. I'm not ready. All right. So we're bouncing a little bit here. We're hesitating here. We got 33 minutes left.
Yeah, no extended bounce. I ain't worried yet.
Yeah. Let's see what Gold did.
Gold ain't gonna do it. Yeah, Gold, you don't even need to look. If we're talking a short on the ES, like that breakout never occurred on Gold.
That was the M pattern, man. It retested that 9 after closing strong below it. Retested.
Good short underneath 36 there too.
The 6 short. Yeah. I don't think we're to target yet. I think we got a little bit more on the downside to go.
No, Gold wants to come down a little bit lower.
Let's see, make this more precise now that we're over here.
I'll tell you, Gold doesn't have much to go down anymore before you start getting into some very, very, very interesting support levels.
49.20. Yeah.
Like 42.50 is like the most you can give up here before I start getting very concerned about Gold holdings.
Which, let me zoom out a little bit so I can see what you're talking about.
I shouldn't say very concerned. I've been covering them for a while. But on Friday, like no joke, I probably wrote 2.5 months of covered calls on Friday alone on Gold assets.
Hey.
Which feels good when you can cash flow that much, but you also have to deal with a lot of volatility, and obviously that's not fun.
Yeah, no. Yeah, we'll see if it breaks this this purple support area that was around VWAP and held earlier today. Because that was market open lows here. And we're approaching the top of that 15-minute range. Could be a decent bounce spot.
Yeah, this is a zone it's trying. At a level, key level, I always look at it. All right, are we going to get a retracement? Are we going to get a base? Like, what's the pattern here? As of right now, it's kind of a tweener. Are we going to pull back or are we going to base?
Yeah. Yeah, looks good.
Slowly but surely, that 90 EMA on the 5-minute chart just keeps creeping down, though. Little by little.
Keep dropping, mama. Yeah, it's taking a little moment here, but if they're catching, this is the 15-minute 9.
Yeah,
that was even closer of a kiss.
All right, you got your 5-minute upward movement in price, guys. That's good enough. Now bears push it.
Right, let's go.
I'm with A. Send it to 0.
Where the bears at? Come on, it's our turn.
All right. Here's where it gets very interesting on the 5-minute chart as you go in to test the 9 EMA here.
Yeah.
Very, very interesting. If you're going to catch a trend, you got to hold through a pullback.
The 9 is under that break level here, which is a good thing.
Yeah, that's why I'm at break even.
And I like this purple line is my very low from Friday, just based on that volume profile, which is at that 19 area. So that also is in conflict with the potential short because we traded underneath of it. Retest could be the move down here too. And now that we're underneath that, but See what she does here. There's a lot of confluences right here.
Just flag. Just alleviate the overextension, pivot and go here. That'd be great.
Yeah. You need to kiss it, start wicking right away.
Yeah, I want to get that 7,400 level.
Yeah.
I'm only going to get it if we get a pivot here.
Yeah. Yeah, it's kind of make or break right in here between, is that like 18 and 24 is the range here that the bears need to own.
Yeah, bears need to own it right now.
Uh-huh.
Right meow.
Right now, please. Come on.
Hey, say meow 10 times. Let's go.
Give it some bearish love. What's she gonna do?
Give me a heart attack. Kidding.
Uh-huh.
I just want doji. Come on. Just doji it up. Next candle. Push it down.
Right here. Get out and push.
Someone push the car.
The 9 should be the pusher. Come on, show your weight. Throw your weight around.
She's trying.
She is. Look at that wicked. It's dancing.
She's trying.
Get it.
It's just a dancing that within a tick.
Like right here, I wicked it 3 or 4 times in this little half an hour pocket here, and it continued. So it can wick at things and come on.
Oh, you little bugger. You little bugger.
There's, that's the thing with these end of day trades is that it hasn't been an only bearish day or only bullish day. It's been a mixed day. And so in those situations, I think plays in both directions, gets a little froggy, as you say. And then there.
I like that phrase.
I like
it's a little froggy.
I never really said it to you, but you say it and love it every time you say it. So now it's going to be something you're going to hear me say.
Embrace the frog.
I can't believe I missed when you said vodka earlier said FAFO. I literally,
oh my goodness,
all the time in my life, and I couldn't connect because I was podcasting. I was like, "You mean first in, first out?" That's fun.
Listen, as a trader, you see an F something F, like you're like, oh yeah, first on, first out. Like, yeah, that's a standard rule out there. Let's teach it. FAFO. That was epic, Becky. I'm not gonna lie.
You have heard me offline talk, like you know that I
you gotta say this, man. Yeah, worse mouth than me.
I was focused on being professional at that moment.
Mm-hmm.
Oh God, do you see this wick right now?
Yeah, I do. I'm not enjoying that wick. Not at all am I enjoying that wick, actually. Oh, goodness gracious.
Hey, you know what?
I don't listen. I don't regret pushing my stop there. I don't regret holding through, but that wick did get me. It did get me. Now I'm going to have to reassess. Remember when we were talking about over trading? If you can couple over trading with revenge trading, it's always good, Becky. Like,
well, that's
what they say, right? If you ever feel like you're over trading, just make sure to put a little hefty dose of revenge on that, and that additional emotion cancels everything out. So
it's a double strength
situation. We're all good here.
Dude, I did that live while screen sharing. What was that, 2 weeks ago, where I got stopped out of my short and I like re-shorted when it was lower? Both.
I remember that. Yeah.
Yeah, dude.
That was last week. Yeah, that was last week.
I think it was a week and a half ago, but still, you know what? I can find actually that red day is literally on one of the 2 on my month's situation. Actually, that goes to say don't revenge trade, because that was a revenge short and it flipped me into red. I can point. Let me just show you the exact day. I'm not saying I'm salty. I'm just saying.
They say no revenge trade, but I think I'm 3 for 3 on my last 3 revenge trades.
Yeah. I mean, you know what? This was a retest and now we're rejecting.
It's literally going to give me everything I wanted. This stupid wig. Honestly, if we had another hour and a half, I wouldn't have trailed it against the 5-minute, but
yeah. But that's the thing though. It's like we always can regret risk management, but when you manage your risk, you don't regret days. It contains it, because it easily could have flown too. It could have
on Friday out the initial dump in the morning, I got stopped out of 3 swing trades. Okay. Every one of those in the moment, I was like, that sucks. Okay. 2 were profitable. 1 was at a loss. Now, 3 hours later, I was extremely happy they got all stopped out.
Yes. Yeah, because think about how much the loss could have been so much more substantial. We talk about VWAP, right? VWAP on ES is here. And
Yeah.
so that line up there would have tripled your loss if you would have held all the way and like given that wiggle room. And it could be a
I know
target.
it happens. I got wigged out. It's not the first day, won't be the last day I got wigged out.
Yeah. Yeah.
Although when this thing dumps another 20 points to my target, I'm gonna be like,
Yeah. It does look a little bit like that 9 EMA is working its magic.
oh, it always does.
Happens. We're humans.
I decided to be aggressive on the management. I'm fine.
Yeah.
It was my choice. I made it. Market taught me a lesson.
Yeah.
I don't know what I learned. I'll do it next time too in the last hour.
All right. It's just the outcome. That's the thing about trading is there's probabilities. Like it's just a probabilities game of like sometimes that's how it's going to go. Like it could be a good trade and you could get wicked out. And that's just, you have to accept that in order to play this game because risk management is required.
My only regret is I didn't scale out at the 10 level that I said I was going to when I set up the trade. Scale out at 10, lock it in at 7,400. And it went past 10 like a hot knife through butter, went to 7 pretty quick. So I was just like, maybe we get down there. So that's my only regret on the trade is I didn't stick to the game plan of scaling out at 7,410.
Yeah, it was falling very fast. You're right. I mean, the momentum was there to like hold. So get it.
The mistake was I should have put in the order when I made the comment, but I didn't. I did a visual thing, but we'll see. I mean, watch the bulls come in here.
Yeah, they sure could. Let's see what NQ is doing. Oh, see, now I don't hate my scale near as bad.
No, your scale's fantastic. If the plunge protection team is active on a Monday where we're not dealing with volatility,
they don't know their job to roll. Sure hope not. Sit down.
I hope not, but it is days like Friday. They do get a little spicy.
Yeah, NQ, they're both kind of pushing up here. So
the plunge protection team is the head of the central bank, the head of the New York Stock Exchange, the head of the Chicago exchanges, the Treasury Secretary, and there's one more on the plunge protection team, the PPT, established by Ronald Reagan administration in 1987, and their job is very simple. They stand firm in the face of volatility by borrowing central banks' money and putting it into the stock market like the brave citizens they are. I hope you guys caught the sarcasm on that one.
It was dripping off that last statement.
Yeah.
I see the purpose. I understand why it was formed because there are certain situations where it can really be kind of a safety net to force a little bit of a breather. But I think it's also made by humans, controlled by humans, and so there's an element of manipulation always.
Yeah, there's a specific reason why it's there because you can't wipe out retirement accounts in 2 days.
Yeah.
So like there's specific rules in equation to stop volatility. Because fear is such a aggressive emotion and how it manifests to every one of us. When we see that type of selling pressure, it influences more selling and more selling and more selling. Could you imagine what our world would look like if the S&P 500 went down 23% in 2 hours?
So
could you imagine what would happen to retirement accounts in America? Could you imagine what would happen to our universe in our world in 2026? It would be crazy. It'd be absolutely chaotic. So there's rules in place to stop it. And bears say that's bulls cheating, and I say I agree. That's why I'm a permabull.
Yeah.
Markets aren't free and fair. Like that might be said out there, but it is not an equal fair game played between the bulls and the bears.
With everything. I mean, when humans are involved, they're fair. You know what I mean? Like there's humans making choices, and so there's manipulation and money and extra influences being a factor always. So that to say otherwise would just not even make sense. Yeah.
Oh, the insider trading. Don't get me started on that one. Like I said, the number one thing that gets me upset in the market and gets me on a soapbox, just throwing daggers everywhere, is insider trading, market manipulation. My opinion is very simple. I'm a free market capitalist. I hate manipulation in the financial world. We can all kind of read a chart and 2 + 2 ourselves. But trading and investing is a hard enough game in and of itself where you have to master your own emotions. People who do it based on insider trading, every single one of us that don't should hate those people with a passion
Yeah.
because they make it harder for everybody else, including regulations.
Right. Yeah. Manipulation is not, it's really frustrating.
Yeah.
Uh-huh.
And it happens every second of every day, obviously, in the markets. But my ammunition is reserved for the big dogs that do it: the central banks, the big banks, politicians.
It's which sucks because we always like in my world, in my perfect world that I dream of, good, honest people who want what's best for humanity in the world would be in positions of power, and that's who we would elect, and that's who we would keep in power, and that's how we would regulate the right choices for humanity. But I mean, that's just so far from what we could achieve anymore. Like it's gotten so derailed from that pure intention at the idea of the core of democracy that it's just.
We are far closer to idiocracy than we are sending our best and brightest up to the hill.
Yeah.
Yeah. Congress is the most inept, weak Congress in the history of the United States of America. And it's getting even worse and worse and worse. Congress has Article 1 powers, and they act like they're not even in the Constitution.
That's what Vodka just said is like what eats me sometimes. Like good guys don't make it in politics. It's just like, oh, I wish. This is the world. We just got to do our best and vote and manage control we can control and watch our risk. Breezy shorts exist for hedges against your long-term holds, which should be bullish given market history. That simple, best bet will forever be targeting structural pullbacks. Yeah. Perma bull right there showing up. What's up, Breezy?
You should add to long-term retirement accounts on every single market correction. I agree with Breezy.
But what about these bear trades, Breezy? What about the bear trades?
Oh, those bear trades help offset those swing trades I got stopped out on last Friday. Breezy's right. They're hedging. Apparently now my day trades are hedging my swing trades. Let's go. Oh,
hey, you know what? There's a season for that, and the fact that you can hedge and you have the skill to hedge, like that's the next level that a lot of traders don't get to before they get into some troubly situations. So, cheers to that.
My number one hedge is writing a covered call. I think it's the easiest and best way to hedge any risk in the market for obviously longer term side of the equation, not on the shorter term side, but longer term side. I believe writing a covered call is infinitely better than buying a put option.
Because that fits within the backdrop of the market structure is bullish, and these are pullbacks, and so then you still get to hold your bullish momentum while covering yourself.
And think about it in a pullback. In a pullback market, the prices are coming down, volatility is going up, which means the value of options are going up in that pullback. Well, if you buy a put option, you're paying premium for that put option, whereas if you sell a call option, you're receiving premium. And so I would rather receive premium than have to pay premium.
Yeah. Excellent point.
Oh, selling puts, yeah. The cash flow side on a high volatility environment, especially once you allow volatility to decline just a little bit, you don't want to do it in the most sensitive of times. But I think you can say any cash flow strategy. I'm obviously talking about covered calls, but you can talk about naked puts that way, bear calls, bull puts, iron condors, calendar spreads, direct Devicons, like you name it. Anything on the cash flow side of the equation is going to bleed in that environment. This thing's just going to hug the 9 like white on rice till the close, by the way.
It sure looks that way. Yeah.
Just going to hug it. It's like we're done for the day. This is the sign we're done for the day, by the way, when it doesn't move off the 9. It's just like we're done here. Nothing to see.
Yeah, I think the bears dried up at achieving a couple targets here. On ES, I think that 704 to 710 is holding up, and I think VWAP is holding up on NQ. I think those are.
Yeah.
There's just too much thinking around this last almost 40 minutes here. Is just last 20 minutes here is not doing a lot. 14 minutes left of New York session.
Yeah, and by the way, I am a fan of naked puts, just to be clear. I think they're a wonderful way to get your price you want. And if you don't get your price you want, to get paid to want to get the price you want. I agree with everything you said in chat.
Yeah. Nice.
I don't know. I think we all need to be careful what we ask for here on the way more downside. We're entering into some pockets where you might not want to see the end result of that pocket.
I kind of want to look at the large time frame here since that trade's kind of done. So this, I'm gonna just go to NQ because I don't have as many lines on it.
All I'm saying is, if you're going to ask for more downward pressure and price, you might as well ask for 7,200 on the or 7K on the ES, because if you get underneath 73, you're most likely going to 7K.
Okay, this is the ES 4 hour.
I don't want the ES to break 7,300 in this pullback. Like, as long as that happens, I think it's a one-day event. If we start pulling back more, I think it's going to be a more difficult conversation, honestly. But you just don't got a lot to play with on the pullback here, because you lost momentum in your previous wave. And when you lose momentum in your previous wave, you give up a little bit and then it opens up big pockets. So always be careful what you ask for on that downward pressure and price. You might get a little too much of it. I would, like, for me, Breezy, I think gold's a target and I think Ethereum is a target. Gold's got some interesting support levels around 42.75 on the weekly chart. I think it's definitely a build zone there. I have it as a covered call environment as of right this very second. I don't have any interest in Bitcoin personally, but I do have interest in Ethereum. Ethereum last year around this same price level, around that $1,500 price level on Ethereum, that's where our buddy Steve basically took that shot on Ethereum. And he built a position in Ethereum, and I started doing it too because Steve had a big opinion on it. And I just remember, like, oh yeah, I'm starting to like this reversal here. And all of a sudden that thing smoke show back up to the top side. So I don't think you have technical value on Bitcoin right now. I do believe you have technical value on Ethereum because of the $1,500 price point. So I do have interest on Ethereum, less so on Bitcoin, and obviously I'm always interested in gold.
Bitcoin did a double bottom here from the low in February, so we'll see.
Yeah, good luck. Bitcoin hasn't had a bid up until today in 10 days.
Yeah. This will be interesting if we can get down here.
Yeah, it's my opinion isn't on everything in the crypto space. Again, like I said, I personally like Ethereum. Well, if you get Bitcoin down around 30K, that's deep technical value, and I'll have interest, Breezy. Yeah, 100%. I just don't have interest at 60. And so Ethereum has that deep technical value. I don't have to see it go down. By the way, 1,000 on Ethereum is literally the low point. Like, the zero is 1,000 on Ethereum. So those two big zones are really important. Bitcoin can continue to come down. So yeah, I'm with you. I don't have interest to fight the battle on Bitcoin at 60. Anywhere between 1,000 and 1,500, I think is an interested conversation on Ethereum. If you can get a price on any position where you're willing to, hold 2, 3, 4, 5, 6 months type thing, yeah, anything between 1,000 and 1,500, I think you're getting a pretty decent number.
Yeah,
I'm not in yet, by the way. Not in yet. I don't catch falling knives. I let them hit the ground in reverse first, but I am looking at Ethereum a little bit more actively than Bitcoin.
this buying wick on gold was wild.
Yeah, it was a volatility event.
Yeah, we're back inside that energy area.
I can't imagine how much Tom Lee's down. He's down so much, he's not pumping it every day. It's like he's given up. Every central bank is. Every central bank around the world is hoarding gold. Every single one. Bag holder? Yeah, I agree with that.
Yeah, I'm so curious what happens tomorrow. This was like the bulls tried today and they got kind of stuffed. Like this is a big wick on the top of today's candle.
It's a rejection.
Right around that 50% range, like we talked about.
I made a statement on Friday. I'll maintain it. If we doji on Monday, I'm gonna see it as a positive. And even though we have a rejection wick up there, I still see holding support as an alleviation against the volatility on Friday.
Mm-hmm. Yeah. Yeah,
The second flush might be bigger than the first one if we start flushing. Yeah.
Yeah, if overnight does a little bit of push up and we're at the same resistance again tomorrow to that 50% area, then it starts to sell. I mean, I'm super curious if we'll dink around here for a couple of days and then get one more move. But if that holds, then it could flush out. What I am seeing is like 1, 2, 3, 4, 5 days sat on this level here. And so, I mean, that is there's a lot of weakness. There could be a lot of buy stops down here. And so for me, that's like a liquidity area that could be hunted, it doesn't even have to be like the biggest flush ever, but we could take out that area of liquidity before the next move up. It's very interesting that it's like multiple bounces. Also, I mean, multiple bounces, so the bears hold there, but the contrarian to me, I'm like, just take them out. Take them out. We'll see.
And both the ES and the NASDAQ have literally been holding hands with the 5-minute 9 EMA for the last 25 minutes.
Yeah, they're napping. They called it.
Yeah, they're done.
Mm-hmm.
They're done.
The hourly is red the last 1, 2, 3, 4, 5 hours. All right. It was a nice little breakdown right at the start of power hour, but fizzling out. Look at all the wicks on the 5. Okay. Yeah, the moves. Yeah, 7 minutes left. 7 minutes left. Which is funny. We're like right back inside. This purple range was the 5-minute range. Like Justin and I were talking about like holy liquidity in the morning, how large the candles were. Well, literally the last over half of the day has been within a 5-minute range. Like that's crazy, honestly. Like that's really ridiculous for like an indecision day because the opening 5-minute range of the New York session, and we have spent easily more than 50% of today trading inside that 5-minute range. That's tight. Question for you, Matt, on UPS.
What's the question though? Or just what do I think about it? I think they're a great transportation company that delivers packages every day. Is there a specific question on UPS though? Like swing trade, investment, fundamental. If you can give me a little more of a specific question, I'd love to help. But short term, yeah, transportations are starting to heat up a little bit, to be honest with you. Industrial sector starting to heat up a little bit. I think secondary patterns here would look very good in general. I'm certainly looking for a couple industrial plays myself as well. And transportation is starting to become a leading indicator or a leader in the transportation industrial space. And so UPS is obviously one of those juggernauts when you're talking about the transportation companies. And the weekly chart is looking pretty good on a potential reversal. Late last year, it had a really good trend on a reversal, kind of got caught up a little bit in the gasoline, inflation, Straits of Hormuz conversation from 3 months ago, but it's done nothing but pretty consistent ever since. I think if it breaks 110, you're talking about it going to 120. You break 120, you're going to walk up the stairs to 135. So I think transportations are getting a little bit of a bid. Industrial is I'd certainly like an upgrade in the industrial space. And as AI and the AI trade has taken a back seat right now, because it was the leadership in the upward movement price and it's the leadership in the downward movement price. While that kind of works itself out, I do think we've seen a little bit of rotation into the industrials, into finance, into healthcare. You've even seen money flow into REITs. Last week was a big AI sell-off. Market obviously took it on the chin, but if you actually look at the heat map, it was a very mixed market. 75% of the market last week was up, guys. It just so happened to be the biggest companies in the history of mankind that were down, and that's why we see that big down. So, yeah, the word of the week last week was not volatility, in my opinion. It was rotation. Rotation from the AI trade into the QE cyclical areas of the market. UPS fits that bill. So yeah, it's a company I like. It's not a company I'm personally targeting. I don't like trading UPS and FedEx, honestly, but that's more personal history than anything. But I like the company. I think fundamentally it's a good company. Technically, you got 110, which is a major level of resistance that you'd have to navigate. So I don't know if that was the specific question, Becky, but I thought I would cover the range on that one.
I liked it. It was great.
I didn't know what time frame to actually look at there.
It's good. Anyone getting this gold short? It was good.
No. Broke even on the ES short.
Yeah, this was good. This from the break of this level down to this support area from the morning. That's a good setup.
I might buy VWAP on the Australian Open.
This is a key area right here that I'm very curious if it will hold.
Yeah,
moving forward to tonight, because again, like the bears did make a move, but just down into support. Like it wasn't anything super fancy. So it could all of the trading today was above the VWAP. So in the upper areas of where price has been trading, so it's kind of bullish in that way. So if this holds here, that could be good for a next move up. Now that we've achieved context here and kind of pulled back to that morning support.
If it's regarding a long-term investment, parking it in an IRA, you're not going to get a no out of me. Coming from the low point, good reversal. Fundamentally, it's a good stock. You got low valuation. The biggest problem is the gasoline impact on transportation, but the market is seemingly looking past that a little bit. That's what you want to see on UPS. Reversal with the low PE. And that's what you got.
Real quick before we process the way the day closes, there's a schedule change at BluSky this week. Tomorrow I am off all day for an event at my kids' school, and so there'll be a replay of a previous psychology lab at the traditional psychology time of 2 p.m. Eastern before Power Hour tomorrow, Tuesday. But I will be live with this week's psychology hour on Wednesday at that time. So just a little shift. I am still going to do a fresh live conversation this week, but Wednesday at 2 p.m. will be the live one. Tomorrow there will be content on. It will just be a replay, just because I gotta balancing all the things. And so I definitely still want to do that with you guys this week, but it'll be Wednesday this week for my psychology.
All right. Wednesday, same time as on Tuesday. We get to work on our mindset, team.
That's right.
All right, Becky, give us some final thoughts as we're getting the ding ding here in just a few seconds.
Yeah, I'm gonna do that with the daily chart, because I'm super curious, you guys. Like, stay safe. I mean, this was a nice day where we had some retracement, but bears are still trying to throw down. So I echo the stay flexible and manage your risk kind of setups, because we're in some volatility this week. So trade safe, reset overnight, try and look at something other than the charts.
Hit that like and share on the way out the door if you love BluSky TV. And we got Coach Breezy tonight for the Asian session. Keep an eye on gold, keep an eye on the ES, and I think it's going to be an interesting overnight session, quite frankly. So I'll be checking in to Coach Breezy as well. I hope everybody has a wonderful, wonderful rest of your day, and we'll be back more with BluSky TV tomorrow.
That's right. Take care, everyone. Stay profitable.
Stay profitable, team.